And we made that point as well, Eamon, and you have as well, that it does come down to that. Obviously, we know because we had 4 years of President Trump in terms of the approach to antitrust can be very personal.
I'll tell you one thing. It's going to be so darn exciting you won't believe it, right? Because if it's one off, I remember when Amazon, it was in April, I was on vacation, he said, the post office, blah, 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 and it was actually wrong. But the next thing you know, it was the greatest buying opportunity I've ever seen for Amazon. It was the last one, the last get on board. We were going to have buying opportunities galore because of statements made by the President of the United States.
Kind of puts into context some of the reported moves by executives to get in and start establishing rapport with the president-elect.
Yes, we know people who told newspapers don't take an opinion.
Right.
We have a lot of people who would not come on our shows because they were afraid. And maybe in retrospect, because it's not business, it's personal, their stance, welcome to the shareholders.
Eamon, thanks. We'll talk later in the morning. Of course, the street is gearing up for big gains, huge gains at the open as we look for stocks to open at all-time highs. We'll get to the dollar. Euro's on pace for the worst session since Brexit. Oil and gold down on a strong dollar. We'll get to Bitcoin, some implications for corporate credit if we do get a sweep. More Squawk on the Street continues in a moment.
Here.
Good morning.
All right, so Don, I mean, there's a lot to choose from here. Like, what jumps out to you off the charts right now?
Well, across the board, we have these very sharp up moves this morning in equities, looking at the futures, looking at treasury yields, looking at the dollar index. And in my work, we have a lot of signs of exhaustion associated with the up move, both intraday and short term. So we're doubters of its sustainability. It's not to say that the uptrend's not intact anymore, but there are enough signs of exhaustion for the S&P 500 to suggest that this is something that might give way to consolidation, and that consolidation could be prolonged based on our longer term indicators. So we don't think it'll be sustained, but it is perhaps an opportunity for folks that were looking to reduce some exposure. They have a great move today to take advantage of to that end and perhaps put on some partial hedges just to manage risk, at least into year end, just given these signs of exhaustion.
The charts that are breaking out, if they're short term, Katie, how will you monitor when they might be cooling off? What are those short term measurements you use when there's such a strong short term catalyst like this?
Yeah, so with breakouts, I mean, for us, breakouts need to be above significant resistance levels, which arguably we don't have a breakout in the S&P 500, really more of an extension higher. But for individual stocks that folks are watching as they clear resistance levels, I would just make sure that these breakouts hold for at least a few days, meaning that the stock remains above the resistance level in question, because that will effectively confirm the breakout, make it more decisive, make it more than a false breakout, right? Kind of a shakeout to the upside. Which
Good morning.
Today, because of emotions running high, because of the explosive nature of the rally. So we would just say, make sure any breakout price action that was far more meaningful than what.
All right. Good morning, everyone.
So it frames it a little bit differently. We don't have a great sample size.
If you are living under a rock, Donald Trump won the election. I would really, really, really appreciate it if we keep the rhetoric down in the room, trading room. Anything you have to say about the election, please do it in the social channel. Let's focus on trading because so many stocks are up today that we don't want to get sidetracked with arguments about anything political. Okay, so please do us all a favor. Do the comments in the social channel or on X, whatever you have to go to expel your excitement or depression. Don't do it in the trading room today. Too many stocks are up big. Okay.
In that area of the market. So we're not chasing the rally today. We do feel like, it'd be great to see it confirm a breakout because that does act as a long-term catalyst. But we feel that even after today's move, we would expect some consolidation so that investors that are eager to add exposure to small caps can be somewhat patient. We don't think that this is necessarily the start of long-term outperformance there, but we do have indications that we should see sort of a stable relative performance ratio between the Russell 2000 and the S&P 500, meaning that there's more balanced relative performance between small caps and large caps.
Okay. The balance right now shifting in favor of those small caps, but the sustainability of that type of spread.
Yeah, small caps are a big.
Pretty tough one to maintain, 4 percentage point spread. Are there anything, any favorite tools, indicators in like a daily chart or intraday that you prefer for momentum to know if they're fading, Katie?
Yeah, we have a sort of a collection of indicators that we track. It's the overbought, oversold indicators that generally help us understand if there's trend exhaustion. For one, we use the DeMark indicators, Tom DeMark's suite of tools that gauge trend exhaustion. So that's been helping us sort of guide our clients through this move. We also use the stochastic oscillator as well.
All right. So Tesla did take some off this morning. My son and I both sold. We didn't get the best levels, but we got very close to it.
You'll see for the S&P 500, it has actually rolled over to some degree. And usually that is something that marks sort of the early stages of a corrective phase as opposed to the end of it.
Okay. Let's talk about some of the other risk assets on the move. Crypto, Bitcoin, 7%.
Well, Bitcoin is looking lovely. Bitcoin.
We've dabbled with here and there a couple of years going now. Do you think we can leave that behind us, Katie? Is this the same approach in terms of gauging the potential breakout of stocks, or is this different for sort of a more pure speculative asset?
Okay, Trump media.
It's a different setup than equities in that we'd seen a downtrend channel take hold of Bitcoin back in
Okay,
March.
Nvidia looking good.
Been sort of locked in this downtrend channel up into the last 3 weeks or so. Once it advanced through the channel, it still hadn't really confirmed the breakout. So that would occur this weekend in our work, meaning that we have 2 weekly closes above resistance, which was roughly 68,000. Of course, well above that level today. And we just need to see it hold on to those gains in the coming days in order to effectively confirm the breakout, which we would see for Bitcoin as a positive intermediate to long-term catalyst. The long-term momentum isn't great associated with that downtrend channel, but intermediate-term momentum has certainly improved with the relief rally off of the most recent low. So we're encouraged by the action.
Make sure you're checking out Gamma. All right.
Catalyst, i.e. more of a breakout.
Positive Gamma strikes from 5,900 up to 5,950. 0-day calls. Sellers will be active in that zone most likely. Mild Gamma all the way down through 5,800.
Generally pretty strong, kind of extension in trend. Because Bitcoin's trying to break this long-term down channel that was in since the spring, so it makes it a little bit different there. I like that assessment. Commodity-wise, gold's getting slammed.
All right, so markets are just pricing in Powell as a minor move
Do you see that as it seems hard to
tomorrow,
policy argument on that? Maybe just
unless he comes out hawkish and says no rate cut because the markets are up, or he says something else, whatever. 6,000 to 6,050 call wall and the JP Morgan collar are easily in play. There's very little positioning over the 6,055 strike, especially on the put side, so be aware of that. Nvidia going? Okay, so looking good.
So we want to favor that, even in over equities to some degree, because it lacks the same sort of signs of exhaustion that equities have collectively, at least on the large cap front. So we're looking for more consolidation, but we see it as a pause to refresh.
All right. Gold certainly has been a very reliable trade, so kind of a rare dip, arguably, to be bought. Bonds, Katie, how do you view the last month and a half of the selling in bonds, the spike, the rally in treasury?
Microsoft off a little bit.
Extending.
Super micro. Not a great earnings.
Really strong
Not a great earnings.
yields right after
Okay, watching
cyclical
Super
down.
Micro. Oh,
But
seconds to go.
looking
Seconds to go.
for
Let me
retracement, maybe not
get
a
over
full
here. All right,
retracement,
sorry.
just relief rally in yields, but certainly a retracement that could be meaningful, taking yields even back below 4%.
I'll be taking some profits off first thing.
And with that, we are buyers.
Let's get ready. Let's get ready to go.
Proxies like TLT into this weakness there because we think that we'll get a good sort of.
Okay, the security stocks are up.
Move to what we've seen of late, which is
Many of the
very
security
sharp
stocks are up.
when you see such sharp moves like we've had in yields and also in the dollar, they're less likely sort of the beginning of turnarounds, right? They're more likely counter trend sort of knee jerk moves. So we're not really trusting in this rally in yields at.
Yeah, whatever. Whatever.
Every countries around the world will be dealing with the continued advance of AI and what that means, and it will.
Okay, here we go.
Obviously, as we've discussed,
Here we go.
4 years, we can only guess as to what it really is going to mean for either dislocations in the workforce and/or just general societal questions. Let's leave it at that.
Right, but I do think that this administration
Mobileye up.
to saying, okay, well, we have to make up some of these workers that we're going to deport. But again, there's other stocks that shouldn't be up. Like, why is Union Pacific up?
Mobileye on the move. Gonna see that one follow through.
It's up 10 because it's in the S&P. We can really help people by saying in the
SPY up bigly.
not every stock benefits equally from this new mission.
You're kind of panning here and filtering some of the names that should not.
Okay.
Yeah. Well, because remember they have Aetna, and it does seem to be that the health.
Bitcoin up bigly.
We've got a new person who's running Aetna, who's from United Health. We have a new CEO at Aetna, who I think is delivering, David Joyner, and I think the stock may be done going down for another reason.
3M up.
Okay.
Okay.
Talking CVS right now, which reported
Mobileye looking good.
Did not give guidance on fourth quarter. Did give
And
us some sense as to the medical
nuclear.
loss ratio it's expecting.
Palantir.
Other important data points on the conference call.
Nvidia looking good.
But you know what?
Joyner's just been in the job for a week. 2 weeks.
You could say that a lot of these things are left over from Lynch, who I thought was doing a good job, but the fellow who's going to be running Aetna is new. But I will say, Carl, that there's a belief.
Nvidia. I'm gonna sell some into strength. Nvidia. Gonna hold on to some. See if we can't follow through until earnings on Nvidia. Did take some off just now. Trump media. Trump media. Let's see how that's doing. All right, it's hanging in there.
Those are state and city, so that would be interesting to see if that really happens. I'm not sure I'd call it interesting. If you send the National Guard from one state to another
You've
to
got
start
the ability
doing that.
to resell these goods on.
AMD on the move. AMD. Looking good. AMD. Stocks are very choppy. A lot of profit taking. Hitting stocks. All right.
Somebody to get you ice cream, which obviously you don't do what you're better off for if you have high cholesterol, especially.
Nvidia looking for the follow through. Ooh, yeah, nice move on Nvidia. Home Depot looking good. Okay. SPY looking good. All right, so take some profits off into strength. See if we can't get a bounce.
And they say trends persist at the worst level they've seen.
S&P's up 110. Everything is up. Nasdaq up there at 325. Dow's up 1170. Ooh, looks good. Let's see. IWM had a nice pop. Small caps. Okay. Okay, for those of you who took the 235 calls yesterday, Jason mentioned, I would take some profits off there. Okay, Google, nice move on Google.
So that's where the focus is when it comes to CVS. Obviously, a strong quarter, not giving us fourth quarter guidance. I will remind people there is an activist in the stock in Glenview. Right. And my understanding is they continue to want board refreshment.
Tesla, nice move there off the dip. Pre-market, Tesla. Okay, Tesla.
You feel badly. Karen Lynch, the previous CEO, did close every money-losing CVS.
Okay, pulling back a little. Tesla pulled back pre-market from the highs and now is popping. Tesla.
People probably don't know our best, but it's a very big trucker. Carl, the truckers.
Okay, so I don't want to get caught in this crossfire. We took some profits off, my son and I, into strength. Tesla, nice move above resistance. All right, so this base now forms support. 273, 275, somewhere around there. Oh, lovely. Lovely. There goes NVIDIA, trying to push a bit higher. 145, I would say NVIDIA. Could see it. Could see that level really quick. NVIDIA. Hope everyone had a good evening. Stayed up way too late monitoring the chat, what you guys were saying. Do stay away from politics this morning in the trading room. I appreciate it very much.
That will stimulate the economy, but we're going to lose mortgage rates, and mortgage rates are really important.
I did take some profits, Lee Star, in some of those calls that you've been mentioning.
Absolutely. Yeah, absolutely.
We're going to get back to
Okay.
treasury auctions again at some point, one would anticipate.
Yeah, like tomorrow.
That said, this market is incredibly strong right now.
Not Home Depot,
Not Home Depot.
which I think is
Some of the media-related names, as I'd mentioned earlier, our own parent company up 4%, Charter up 4.5%.
interesting.
Trump media halted. Okay.
Consolidation, but Tesla is the big winner, up some 15%. Obviously, it's ballooning Elon Musk's net worth. He already is the richest man in the world and will be far exceed his previous net worth of a day ago with that stock now having almost a 16% gain. Once again, not quite at $1 trillion, but well over a $900 billion market value. And I'd like to remind people he's still in line to receive another 300 million or so shares under that compensation agreement that was agreed to by his shareholders back in, what was it, in June, but is yet to be awarded because you still need the chancellor in Delaware to bless it, so to speak.
Do billionaires get jealous of other billionaires?
Yes.
They do, don't
Yeah,
they?
they do.
Bigger yachts? What do you have?
There's a lot of competition in
500?
billionaire land. There is.
Yeah.
How many jets? How many wine cellars? How many homes?
Do you think Boeing has enough jets for the billionaires that are going to create them?
I don't know.
All right, let's keep it to trading today. Okay.
Let me give one that is a definitive loser today.
Okay. NVIDIA is still going, looking good. AMD looking for a follow through.
First, I want to advise them. You don't declare yourself innocent. See, because they did it.
Okay, NVIDIA looking good. Apple, nice little bounce. Okay. Home Depot. Don't forget, Home Depot has earnings next week. Okay, so Booking.com, again, Booking.com, the top of the list. Tesla, looks like it wants to go, huh? Tesla. Okay, Tesla, should it buy? Way out of the money. Tesla.
Limited visibility on the new auditor, and as you, to your point, Jim, business fundamentals.
Yeah, they're not good.
Okay, I'm going to wait to see what we can get for Tesla, but should do fine for.
We did a deep dive, and we're all clear.
They're not answering the questions investors would like them to answer.
Let's see, what a 40 Delta's going for. 40 Delta's $18 in January.
Maybe I should buy it through Dell
Or HP.
or HP.
Yeah.
I don't want to go with guys where I basically are concerned that they may be delisted, booted out of the S&P 500. This could be the quickest S&P 500.
Okay.
S&P 500 we've ever
Can't
seen.
do it. Can't do it. I took profits off in the strength. I still got a little bit left. It looks really good. Looks tempting. You're still in it. Tesla looking good. NVIDIA on the move. Okay, shorts hoping that you sell. NVIDIA still moving. Okay, Tesla looking really good. NVIDIA Okay, so when I'm talking about a stock like Nvidia, think about all the proxies like On Semiconductor, Marvell, AMD, looking for them to do the same thing. Well, not to the same degree, but moving higher with other chips. If they're not, like AMD is just kind of sitting here at 144, so that's a little suspect right now. Home Depot looks good. All right, the top of the list, just I'll go through these real quick. Top of the list, booking.com is on the most actives again today for a fifth day. Okay, this has been active since last week. Okay, on Thursday it gapped up. Orly Automotive, this one's also been very active. Big gap up in Orly Automotive, if you have it. What's AutoZone look like? AZO, AZO. All right, all of these are up. What about Carvana? Carvana. Okay, Ford. Okay, you know, with President Trump in, that he's gonna require these companies to do a lot of their manufacturing here stateside, like he did in his first term. So some of these will be pretty decent entries once we get a little dip.
Well, we have to see where these auctions lead us. Again, I feel very strongly that tomorrow is a day where people say
General Motors. What about Neo?
Warnings, though, about
Not so much. What about XPEV, Xpeng?
and the day will come, and yet it never really does.
No.
but it's like 2024.
Is it Toyota? Toyota Motors. All right, that's trying to turn the corner. All right, so that's them. All right, let's see what else is working. Let's see what else is working. Goldman Sachs. All the banks should do well, by the way. Big gap ups on all of these. So if you did enter some JP Morgan or Goldman Sachs, you can give your hallelujah. I'd be taking some profits off and just let these drift a bit lower.
Back to the original conversation we had about potential consolidation, are a lot of the alternative asset managers. Although I would say private equity is a small part of so many of their businesses now. There will be more exits, perhaps, and more deals for sure. But
okay, so that's that. Intel gapping up. Intel.
That's not necessarily the best thing. But Apollo shares are up 10%. KKR is up 8%. Blackstone up a little less than 4%.
Intel gap and go looks good. All right, starting to clear these levels. Intel. Maybe somebody. I think the deal is Trump would be more open to mergers or acquisitions. All right, so Intel.
It's going to be with us forever. It's going to continue to grow.
Merger, M&A. Okay.
Yeah, but a higher rate environment in some ways though is beneficial because of course they then can generate higher returns. So let me clarify what I was just trying to say in terms of higher rates. There is a benefit for private credit there as well.
Okay, look for Intel to head towards 30.
Rates should actually remain fair where they are. He does not see, given what they were seeing in the economy, the need for continued decline. So
I can't drive
back a bit.
55.
In fact, private credit
Good song.
being able to offer double-digit returns is obviously potentially quite beneficial to those in that market.
Does Blue
Lee Store
like Blackstone?
Yeah, I mean,
or
up sharply, again. So higher rates helpful on that front. And
nothing else matters.
More deal making helpful as well.
There's a lot of songs appropriate for today. Microsoft. Yeah, I like the idea. Okay, Bitcoin turning back up. All right, so okay, let's look at Bitcoin. BTC USD, Bitcoin in this area. Sorry, this is Intel. You should be taking some profits off, folks. You don't have to listen to me, but I like to take profits on big moves like this. If it fades at all, you're going to have a better entry, re-entry. Okay, Intel looks good. Keep an eye on the ABCD pattern. Intel is on the move. Intel on the move.
Here's what we have to say. No, we're making our own whiskey, right? We know it's corn and stuff.
I've been trying to get you to weigh in on vaccines and Moderna down 5 today on RFK Jr. You didn't seem to think it was that big of an issue prior days.
I don't know. I mean, I think there is a public health issue that
Pfizer is also down, by the way, 2.5%.
because
Banks are up big.
used to be I don't know, on the run.
I mean, again, back to appointments that will occur in the incoming administration. Will our
NVIDIA,
health policy for the United States,
Tesla,
Jr., that
Google.
that would include the FDA, the CDC, the IHS?
Well, these are agencies that have staff. And I think that when you get into them, you'd like to think, you know what, I'm going to upend the staff. But the staff's in charge. They're everywhere. They're big. They're powerful. And they don't, and they're just hidden. So you can come in and run that agency and then realize, geez, I'm not getting anything that's my way. Nothing. And that's what will happen.
Okay, let's look at CONL. Okay.
Wow. Bannon and Navarro.
Yeah, they're going to be important, I would assume, important voices.
But I'll come back.
Navarro could be what?
I'll come back to you.
What's Navarro's job going to be, Jim?
I think he's going to be Secretary of State.
Okay.
Up from trade rep last time.
Yeah, I mean, he's doing
Lighthizer,
well.
though, also will have a role. He was obviously the head.
Well, I will say that China is the biggest loser. We haven't talked about that.
Alibaba shares are down 3.5%.
No, I like David Tepper, but this is not the solution that he might have wanted. David Tepper.
Okay, let me take a look.
Buy everything because
Bitcoin related names like Coinbase. That's up big. Okay, Coinbase looking good.
I used to interview him in 2008, 2009. He was the first person to say,
Okay, Mobileye, MBLY. This one's starting. This is starting phase 2. So I'm looking for 22 on Mobileye.
Take a look, guys. I mean, you got everything up over 10. Goldman Sachs is up 12.5%. Wells Fargo's up 14%.
Well, I mean, I just sold some Wells Fargo for the trust. Let me tell you why. People are saying that there's this asset cap which was put on in the first week of February in 2018. That's going to come off. I love Charlie Sharp, but it's the biggest position in my trust, and I love Charlie only so much.
Well, you're looking good today, man.
Well, David.
Yeah, right. You see the banks? 100%.
Well, take a look at some of the small. Take a look at the KBE. That's going to take you back to 2022 highs.
Buy Cintas. Cintas is CTAS.
Uniform company?
Well, they 1 million small and medium-sized businesses. David, small business is the backbone of this country.
Okay.
Buy Cintas unless it's up 25. Cintas is up 25. Don't buy it.
It's only up 2.5%.
That's a steal, Rooney McFadden.
Why is Coca-Cola down? Why is Colgate down?
Nice job there, Mondo. Nice job.
Easy things to retaliate, David. Okay. It's easy to say, you know what, we're not going to take it.
So any multinational that has a high percentage of revenue from outside.
Yeah,
there's a concern.
This is a tariff war. Companies that have just found themselves, they can use their amount of money in other countries. Just don't make
On the prospect of retaliatory tariffs?
Yes. I think that's what's going
Home
on.
Depot.
Tariffs. They keep talking tariffs. Tariffs are just a negotiating tool. Come on.
Chinese, but also with interest rates, that's really.
Biddo.
Now I would buy home. My trust doesn't do. Waiting for it to come down. But interest rates are daunting because you need. Remember, that's a play on refi. So is refi going to be short rate or long rate? We don't know. That's a play on refi more than it is a play on mortgage.
And your point about the builders, it's a double whammy. It's not just rates, but labor. We talked about deportation and then lumber and raw materials.
And people just buy everything. Think about it. Now, do I want to buy Goldman Sachs up this much? No, because someone will come in tomorrow. There's a lot of Goldman Sachs. When you take it up this fast, the sellers don't even have a chance.
Those are incredible moves.
Yeah, the sellers. Here's in the. Oh my God!
Okay.
I got a chance. But it doesn't.
What's Palantir? Palantir is trading 54. Okay, cool. Palantir. Great. What's IWM? So I do have an iron condor on IWM. So I'm going to have to adjust this one. So this is a good exercise. And what happens if a position works against you? Okay, you could either take this off. You can either take it off or readjust it. So with this gap up, I'm looking for a fade. So once it fades a little bit more, I'll readjust this. or I could just take it off. All right, so I have 230, 240, so that's down there. Okay. 230, 240, so that's up there. Up there, okay. All right, so I'll have to readjust this one. Expires next week, so I'm expecting some consolidation. I'm not looking for IWM to just haul ass and just never look back. Let's take a look at the IWM weekly. IWM weekly. Okay. So weekly is up against this double top. Okay. Do we get resistance? I think we're going to see some sellers, people that were long over here. Okay. Will most likely take some profits. Bag holders have been sitting in this for 3 years. Okay. Since the bear market, there'll be people that still hanging on, likely to break even. Not sure about the current circumstances in politics. Maybe they'll take profits off. Yeah, does look good though. IWM, if you're in it. All right, so I'll have to adjust that iron condor. What is okay? AMD just dropped a bit there. Okay, so we still got some sellers in here selling into strength. AMD. AMD, where are you, AMD? Okay. Okay, so AMD. AMD. Okay, so we had a mild three candle reversal. Today we have a fade. So there's still sellers here. Okay, selling is fading, and we did have some buying yesterday. So we're looking for a turn pretty soon in AMD. Are they trying to create some liquidity? It looks like it. NVIDIA probably taking some profits off into strength. Good idea. Futures, watching that for a bounce. We know where our support level is, the ticker at the bottom of the screen telling you where support is. Okay, so resistance 59.50, support 5,900, 58.50 below that. Okay, so let's look at the S&P. Okay, right now I'm just let's get our bearings. Okay, where are we going to bounce? Are we going to bounce? Are they going to keep selling into strength? Okay, so we got a big gap up above previous all-time highs. We've got a shooting star right now. Okay, looking for a bounce. We got Jay Powell on Thursday tomorrow, so we'll get a 25 basis point cut, 98% probability. If we don't, if he comes out really hawkish for some reason, we could see the markets pull back a bit more.
Days, of course, was DJT, Trump Media and Tech, adding, of course, to what was already coming into the quarter, so to speak, hot, up another 12% today, almost back to 40. Dow's up 1,200 points, and we're just shy of 5,900. Stop trading with Jim's up next.
All right. Okay, what else is going on here? Palantir, watching that one. Palantir hanging out. Okay, so S&P fading back into this gap. We've got a breakout level at 58.78. Okay, we got support at 58.50. Palantir looks like it's a little profit taking at the moment. Okay, the credit card companies looks like Synchrony and Discover Card and Capital One and Wells Fargo. Those are the top four. Okay, so wow. Okay. Capital One Finance, TFS, Synchrony. Credit card companies are 1, 2, 3. Let's take a look at these. Discover Financial. Okay, gapping up. Discover, Synchrony. At one point, I'm not sure if he still has it, but at one point, Berkshire Hathaway, Warren Buffett was in this. Okay, let's look at Berkshire. Berkshire dipped. Okay, Berkshire, BRKB. There's your move. There's your move, Scott. Berkshire Hathaway, back above the 50-day moving average. You'll probably hear Josh Brown talking about this one today. Okay. And more than likely, he'll be talking about JP Morgan, which is up big with the big banks. Okay, bookings is fading. People taking profits. Okay. So far, so good.
Annually over the next 3 years. So is so high. The margins obviously are through the roof because they are more kind of royalty licensing based in nature as well. We're just not comfortable at this point in time with kind of where the valuation is. If we can get a little bit more of a pullback, we'll get more constructive. But sitting here right now, yeah,
Looking for a follow through.
minus 8% move in the share. It's about $14 either way. So implied volatility levels are really elevated in the near-term option. So I looked at a really short-term.
Okay, we're drifting a bit lower now.
In Qualcomm, if you think this thing's gonna, maybe rally that one standard deviation, this type of strategy takes advantage of it. So I would look at just a 1 week wide simple call diagonal here, where I'm going to go out to the November 15th monthly cycle, 9 days to expiration. I'm going to buy the at the money call, the 170 strike call, and then against it in the near term November 8th weekly options, I'm going to sell the 182.5 strike call. So $12.5 wide bullish call diagonal here. I'm paying roughly about a $5.5 debit for that. It's probably trading closer to $5 at this point. But that debit you pay is going to be your risk on the trade. It's $12.5 wide call diagonal, and you're only paying $5. Why is that? Well, on aggregate, you're buying about a 73% implied volatility in those November 15th 170 strike calls.
Okay, NVIDIA just sitting here.
And 34% in the near-term November 8th weekly options on the 182.5 strike call on aggregate net option series. So that dispersion between the implied volatilities lowers the price of this call diagonal. You can see here from the risk profile, you want it to go up towards 182.5, but anything maybe
Home Depot, a little profit taking.
Profitability on this type of position, taking advantage of those implied volatility levels to lower the price of this bullish strategy.
Apple.
Opportunity to roll that short option one time.
All right, so pre-market Home Depot was looking pretty good if you sold into that.
You want this thing to grind higher from these levels. You've got about 9 days in the position.
Okay. All right.
That did gap down. Does have earnings next week, so. All right, so we'll look for Home Depot to bounce. Apple trying to bounce.
Something that doesn't require further valuation. Like you're going to go against it or what?
No.
Okay, had a flat VWAP all day yesterday, so there's no hurry on Apple, still consolidating.
$150 over 12 months, right? You got to remember that when they give those price targets, it's over a specific duration. So I looked at something really short term.
Okay, IWM.
If you think the stock's going to trade within a range,
Still fading. IWM profit taking.
I'm selling a short iron condor in the November 8th weekly cycle that expires in just 2 days. Really short term positioning. Where I'm going to sell it out of the money, put vertical to the downside. I'm going to sell the 132 put, buy the 127.5 strike put. short $5 wide put vertical. And then on the call side, I'm going to sell the 155 strike call, buy the 160 strike call. So a short $5 wide neutral iron condor. I'm collecting roughly about a 210 credit on that. That takes my break even all the way down to just under $130 on the downside and at 157.10 on the upside. So you can see here, I profit in a nice
ARM Holdings.
but I don't want that the stock to move that 1 or 2 standard deviations outside of those short verticals on either side.
Okay, Tesla. That's why I didn't want to buy it on that pop.
So
Waiting for it'll consolidate.
You're going to profit
Tesla.
on this one because implied volatility levels are going to come in. That'll contract the price of this iron condor, and then also you're getting closer to expiration, so time decay is working in your favor also.
All right, there you go. I like that approach too. So you can basically bet on it, stay within a range with a little bit of potential for it to slip.
Yeah.
And you'll welcome it.
Yeah. Option market pricing about a plus or minus $13 move, 9% move in the
Okay.
shares there.
Yeah, 9-10% move. Okay. All right, thanks, Tom. Appreciate that. Coming up, we're going to talk some banks, home builders, taking a look at a few other sectors here that are on the move today.
So ARM Holdings has earnings tonight.
As well, trading the ride.
Probably do an iron condor on that one.
That's now going to be
Apple trying to push. Apple looks like it's going to push a little bit. AMD is starting to bounce at 142. Okay. Once again, Goldman Sachs, JP Morgan, the banks, credit card companies, those all looking pretty good. Caterpillar with a gap up for those of you trading Caterpillar, like Steven. Intel, nice follow through, gap up, trying to hold above 24. American Express, shooting star so far. Visa, these are all gapping up. 3M, nice gap above 130. 3M.
Our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Okay, CRM also looks good. What about the security stocks? Okay, those gapped up. Zscaler, Palo Alto Networks. I know some of the new members were looking at CrowdStrike. CrowdStrike above the 200-day. So you had a good entry. Did you buy yesterday? Did you buy yesterday? That was Candy. Candy, did you buy yesterday? We do have earnings, so that's an issue. All right, so watching IWM fade a bit, holding in this area near 235. Bitcoin, watching that. Don't want to get another fade like we had the last time we got up in this area. We want to see a follow through. Should follow through. Bitcoin. Okay, Zscaler. Big gap up, Zscaler. Zscaler looking for a pounce. Okay, stocks are still fading. Futures did bounce. Okay, right in this area is where we were looking for a bounce. Okay, S&P. Okay, the gap, 58.50. Support at 58.50. Let me just put that on here. 58.50.
Around 74, hasn't really gone anywhere for about 5 hours from overnight. So a lot of things hanging around, sticking where they landed, but no real further gains or extensions. And also still some votes to be counted. But obviously Donald Trump has exceeded the 270 electoral college votes needed for the presidency. What that
Okay,
number
Amazon
is,
pushing a bit higher.
we'll talk
Amazon.
about in due time. But popular vote also in former President, future President Trump's favor by a pretty good percentage as well. Volatility drops out of the market.
Okay, Apple's trying to push. Apple.
So finding a tiny little bid from the open, not much. We're going to continue to talk about the potential implications policy-wise. Mike Townsend, Schwab policy expert, joins us this morning. And of course, we've still got earnings and stuff to look at on a company-specific news flow basis, like Lyft. We'll trade.
Amazon pushing a bit more. Amazon.
Prepare for the earnings. We're also going to look at the charts.
Okay, Amazon looking pretty good, above 200.
Look at the 10-year Bitcoin and the Russell. I got Alex Coffey with me in
Okay,
studio.
Bezos did unload some shares. I think he might be done, right?
Yeah, a couple things. I think one of the big messages from the market, I think, is a takeaway, and it's not unique to the election or anything. The election,
Amazon.
I think, derives more emotion in people, so it's a good use for this particular lesson, which is the market and those who manage large sums of money have a stoic nature to them that is required. And well before media networks and
Into
anything else,
it.
we're going to make the calls. The market starts moving and starts pricing things in and increasing probabilities. The market doesn't wait for certainty. It doesn't wait for you to feel better or get over your celebration. It just keeps going, and it's on to the Fed now. It's price things in and it moves on. And I think that's the big
Good point.
lesson in something like this is it brings emotions out in everyone. Everyone's got an opinion one way or another. But the market doesn't wait for you. And it's the same for a Fed meeting. It was very evident last week as well. We'd get hit with Microsoft and Meta earnings, and then it was Apple earnings and Amazon earnings. And it just keeps coming. More events, more things to move the market. As far as the reaction here, I'll leave the exact sort of nuanced policy things to your discussion with Mike Townsend. But from a high-level standpoint, one of the things that I believe Trump as a candidate,
Palantir.
as a president-elect, is seen as more pro-American business. And so you do see the Russell 2000 outperforming. And that makes a little bit of sense.
Tax cut possibility.
Perhaps, and also tariffs as something
Palantir.
that boost growth,
Sitting here at
boost,
53 and
inflation
change.
a little bit as well, and you can see that dramatic move in the bond market. But you see the banks higher. So how is rates higher on that end? But you're still getting cuts elsewhere. How does this all make sense for the banks? Well, I think a couple things. Kind of seen as a pro business, less regulation candidate, but also we know they lend on the long end and they borrow on the short end. So if you're still going to get a cut from the Fed, but then you have higher long end rates, that should in theory be good for banks.
Yeah.
And you
Absolutely.
also you look at sort of these dynamics.
Intuit.
Exactly.
Tesla.
Hey, maybe costs remain
Tesla, a little
elevated,
dip
but
there.
actually
Looks
grow
like
our way
profit
out of
taking
some of this too.
at
That's seen as,
276.
a positive thing. Now, as far as
Okay, I'm just waiting for the markets to settle down before I do anything. I want to see a trend. Also want to see this grid of New York FANG index components all doing the same thing. They're not. They're all mixed. So that's telling me right there to just chill.
Big fund managers have rules they got to follow. And
Okay.
when volatility comes to the market, particularly in things like the bond market, some of those rules are triggered and de-risking can happen. And so you maybe see that a little bit underway today. But all things considered, this looks to be, and we talked about this a little bit yesterday on the panel, one of those situations where it wasn't a certainty by any stretch, but it was becoming an increasing probability that there was going to be a decisive victory one way or another. Looks like we got that. Market can move on. Dragging this out was the risk. And that
Hims and hers.
Bingo. So that's number one.
Hims.
Specific
Nice move.
Trump policy-wise will be something that.
Okay, following through.
I like the way your generalization, I think.
What's Lily doing? Lily.
To regulatory potential, tax cut potential, things that could be positive.
Lily down more.
Particularly on the bank side, I think is important because you've got the overlap of deregulation potential as well as also the
DoorDash was trending yesterday. DoorDash
on to what's already been happening. If you look
continues.
At the chart for yields, this week's candle still.
What about Uber? How's Uber doing? Uber sitting on the 200-day. Okay.
What I feel like the other thing you mentioned that I want to explore a little bit more here.
All right, the airlines have been doing good lately. Let's take a look at United. All right, gapping up. United, Delta, gapping up. Spirit. gapping up.
and the willingness that they are going to bring to the table to talk about the Fed's policies out in the open, and that we've also heard his team when Vivek was on, who's been promised a role in the administration, an advisor, Vivek Ramaswamy. He told us that the Fed has been part of the problem as they see it for inflation. So, I mean, look, I personally couldn't disagree more with some of those assessments of like what the Fed's role has been in this economy. But regardless of whether or not you think that stock market's generally been favorable to Powell, what's on the table here?
Well, I'm going to leave.
Okay. All right. Microsoft. Couple of mentions of Microsoft buying the dip.
I mean, Lutnick has reportedly been moving pretty aggressively behind the scenes to come up with lists of names of people who would be seen as, simpatico with the Trump project, loyal to Trump personally. And so we'll see how advanced those efforts are. And then the big question with Lutnick is, does he pull a Dick Cheney? Remember, Dick Cheney was vetting vice presidential candidates for George W. Bush and ended up kind of selecting himself. Does Lutnick select himself for a big job in this administration? That's TBD as well. Generally, in a normal transition, by December, you start to see a lot of the big names come, and towards Christmas maybe is when you see a lot of the biggest items like Treasury Secretary being announced. This one, though, is very different. This is very personal for Donald Trump. He's been president before, so he probably has a pretty good idea of who he wants. And
Okay, starting to see some stocks bouncing. There goes Amazon. Okay.
One of the concerns and one of the that people had in voting for him, especially even Republicans, is that he wouldn't attract.
Okay, many of you are anticipating that we're going to see some follow through. I would agree with that assessment. We do have the Fed tomorrow. Fed's going to cut rates 25 basis points, 98% probability. Last time I looked, that was what the case was. Okay, so 98% probability of a 25 basis point cut. So unless he comes out very hawkish for some reason, I don't know. I doubt it. We'll head towards 6,000.
Doing or try to put up guardrails around him. He's going to have people in the White House who want to let Trump be Trump.
Eamon, thank you. Eamon Javers, obviously going to get a lot more from him. Let's get back to this market, though, man. Stocks are flying. In particular, the financials. Bob Bassani's here at Post 9. I mean, just moving the financials.
Okay, I'm looking for Bitcoin to continue higher, break above 75,000. Okay. Doesn't mean today, it just means that's what I'm looking for. Does it happen? I need to see confirmation. Tesla's starting to turn. This dip probably gets bought. Maybe I'll buy some shares down here. Let's see what these are going for. Tesla.
David was referencing financials. Just take a look at the card companies, for example. Capital One moving rather nicely. Synchrony, regional banks like KeyCorp. David's right. Look at those double-digit moves. Some of this is obviously some hopes on deregulation, perhaps. Interestingly, moving on into other areas, infrastructure, materials, steel stocks are moving.
Tesla, looking for the bounce.
Like you look at Nucor, there may be some tariff.
Okay, nice little dip and a bounce.
But nice moves up here in infrastructure.
Okay.
Elsewhere, Kathy Wood's a big winner today. It's been a rough year for her, but her biggest holding is Tesla. You see the move up there in Tesla. I'm
happy for Kathy Woods. Everybody's been giving her a hard time for good reason, but I'm happy for her.
She was also Palantir's her third or fourth biggest holding, as I recall. That, of course, had great earnings last week. This is a new high.
She's holding Palantir too.
So Kathy Wood's having a great week so far. If you look at ETF gainers, these are little nice subsectors of the markets to look.
Okay, the credit card companies: Synchrony Financial, SYF, Discover, DFS, Capital One Finance, COF, Visa, MasterCard. All the credit card companies look good. So do the big banks. Let's take a look at the big banks. See what hasn't followed through. Generally, Citigroup drags its feet. Let's see. Citi popped up too. Wells Fargo. Okay, these look okay. Wells Fargo fading. I mean, these are big moves. JP Morgan. So people taking profits. Bank regulations going to be more in favor of the banks
Consumer stocks are lagging a little bit. So Coke
during a Trump administration like it was the last time. I'm not talking politics, okay? Just mentioning what happened before. Okay, NVIDIA.
This makes a little bit
Well,
of
also
sense.
the trade, don't you think?
That's
Bob?
China.
I mean, if you're importing, yeah, that's an important component of it. They can become pawns in a so-called trade war to some extent.
Absolutely.
And then pharma, we're seeing down in part because there's concern about vaccines. For example, if RFK Jr. were to take a senior role in
that would be
running
something.
health care, so to speak,
Yep.
in the U.S.
Fluoride out of the water supply. Interesting. The utilities, just want to note here, utilities notably weaker here about, of course, on higher rate concerns, and some of the REITs not affected that much. I think that's important. Finally, just note solar power down. All the pot stocks are down. Amplified marijuana here.
Amazon still going. Amazon. Okay. Apple looks like it wants to go. NVIDIA, nice bounce. Tesla looks like it's getting bought down here after some profit taking. Google pushing higher. Google, I'd like to see 180 on Google. Let's take a look at Money Magic levels.
A lot of the desks make the point, Bob, that no matter who was going to win, we're in this.
Thank you, Money, for your updates, as always.
Given the result.
Right. So there is a natural relief rally here that would occur regardless of who won the election. What's interesting to me, what I can't quite resolve right now, is whether we're going to get gridlock or not. To the extent that gridlock is considered equity positive, that may be an additional factor. We haven't resolved that with the House right now. So that may be an issue. And in a couple of days from now, if it gets resolved that the House goes Republican, there may be a slight rethinking of this rally going on right now. So we still haven't resolved exactly what's happening.
Exactly. We're still counting some numbers. Bob will talk a little bit about Basani. As Bob mentioned, bank stocks a huge winner in today's trade. Leslie Picker's looking at what's driving the gains. I think it's the best day for JPM in 4 years, LP.
Yeah, already sitting around a record high for that one as well. And banks rallying in what has been the quintessential Trump trade leading up to the election. So they're rallying off of a pretty high base, as you mentioned, Carl. Investors looking for a repeat in share performance after what happened in 2016, where the KBE surged about 5%.
That's another way to play it, KBE.
Double that proportion. Now, the theme
KBE on the move.
Around the prospect of deregulation, a potentially steeper yield curve, and clarity that may ignite capital markets under the new administration. On the deregulatory front, banks could benefit from new heads at agencies spanning from the OCC to the FDIC.
All right, so KBE, I like that idea. If you don't want to buy individual banks, wait for it to dip first or the base up here. I don't want to chase this because it could pull back and give you a better entry and you'll be kicking yourself. If you miss it, so what? There's going to be a point where it's going to pull back to support, and we can get into it. Last time around, 2016, these continue to move higher. Let's go back and look at 2016.
The prospect of higher deficit levels has been driving up yields at the longer end of the curve. Although, to be sure, higher interest rates could also put pressure on unrealized losses on balance sheets and pose a risk to credit quality as well. Lastly, having avoided a drawn-out election process creates a level of certainty for bank clients, allowing them to restart big decisions like commercial borrowing, as well as M&A transactions. Sarah.
Yeah, I guess all in the mix today with the big rally. I mean, what I hear, Leslie, is that the CFPB.
Yeah, these rows over here on the left, 2016,
those consumer finance companies
made a highs to 43, so it gained about 25%. KBE.
Significant fees from the CFPB. They've been very strong in the Biden administration and very forceful and unprecedented. We've seen the banking industry really push back in unprecedented ways, suing their regulators during this administration. It's something we haven't really seen before. Part of that has to do with where they kind of sit in economic history. They're very far removed from the financial crisis. They have significant capital levels. They felt that they have the power to kind of push back on what they see as regulatory overreach. So we'll see if the next administration kind of solves some of those issues that they had with the current administration. There.
Finally, Leslie, Reuters up with the piece just now saying that Jamie Dimon will remain at the bank. No plans to join the Trump White House.
Yeah, I mean, that wouldn't be too surprising. I don't think that's something that he'd necessarily been, jockeying for in the last few months here. But I know it's something that every election cycle people like to kind of
play that parlor game of which bank CEO could be fit for that role. And
Okay, so Tesla looking for a charge back up to the highs. Google still going here. Okay.
But I think maybe more questions.
Okay, let's take a look at
Yes.
IWM. Okay, holding up here at 230, 236-ish, 235. Okay.
Here's our roadmap for the rest of the hour. Tesla shares on a tear right now. What the return of a Trump White House could mean for the company and broadly speaking for big tech.
NVIDIA still going.
Trump media are up, although well off.
Nice bounce on NVIDIA.
Highs, and as we pointed out earlier, not near recent highs. Still, what does President-elect Trump's victory mean for overall all of his assets and his net worth?
And Bitcoin all-time highs following the election results. What crypto regulation may look like from here as a big issue. Show Squawk on the Street continues after the break.
In that range right there, and I'm just not brand
Apple breaking out.
some announcements this morning that's not really pushing the needle anywhere here, but outside of
Apple new high of the day.
here, I just don't see how the stock
Okay, watch Apple.
All right.
Currently don't have a position in Apple.
How do you approach it, Scott?
Well, it's a put spread, so if I'm wrong,
Apple's
okay, if I'm
going.
wrong, I'm paying 65 cents for this thing. That's the most that I can lose here. But I'm looking for really disappointing guidance. I'm not so sure what the results are going to be. I'm looking for disappointing guidance, and if we don't get it, okay. Again, I know what my risk is, 65 cents. But I really think that if there is not a hint of optimism here, we could see $10 pretty quickly on this stock.
Wow. All right, so positioning for downside, hedging yourself. You've obviously got a bearish view on it. Not too expensive of a trade, so you do need a good move though. I mean, you needed to drop a couple bucks at least.
A couple bucks would be a decent move here. Yes, obviously this thing can go to a max.
Google looking good.
If the stock were to go to $10.
Like to see 180 on Google.
We need to see the stock.
Google, let me check Money Magic levels here.
Some money on this. I give myself till next week. And again,
Where are you? Oh, there you are. 170, 175. So we're above the call walls for Google.
Makes sense, given the underperformance of Lyft. Appreciate it. Thank you, Scott Bauer. Good stuff.
You got it.
Trade.
Sorry for the audio. It's just so loud here. Right
Good.
now.
It's a busy day. Folks selling vol, it sounds like. You got a lot of sellers behind you there bailing out of VIX, Scott?
Oh, there's a lot of everything. There's S&P option volume is already off the charts for 9:30 in the morning here. VIX is rocking, so yeah, it's about
Okay, Amazon. Nice move on Amazon. Amazon's gone. Release the hounds. Don't buy it right here. Wait for a dip now.
Active. Appreciate it. Thanks, Scott. CEO of Prosper Trading Academy. Let's come back and let's talk some policy. Now that we have a winner, Mike Townsend comes back to us to look forward.
There goes Apple. Okay, Apple. Let me take a look at Apple here real quick. Okay, looks like it could get back there, right? Apple. All right, it's already up quite a bit. Apple, I don't want to chase it. Looking for follow through though. Apple's looking very good. Apple. Apple, I'm looking at TTM. Okay, on the daily chart on the right, you can see that it's been negative. We're trying to turn the corner, get back above the 50-day moving average. Apple.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop.
Okay, Amazon definitely on the move. Amazon following through. Apple looks good. Okay, the nuclears, some of the nuclears are bouncing. Oklo, let's see what SMR looks like. SMR. Okay, those are bouncing. Okay, nanonuclear. Okay. Okay, Apple still on the move. Apple going. Apple looking good. Okay, futures. That was a quick dip and buyers stepped up. That's a good sign. Support bouncing before we got down to support on the futures.
Let's talk some policy. Joining me, Mike Townsend, Managing Director of Legislative and Regulatory Affairs at Charles.
Bitcoin, I'm looking for that to stay above 75,000. Soon, get above and stay above 75,000.
Operating on just a couple hours of sleep, so who knows what I'll say.
All right, likewise. I'm trying to watch myself all morning to make sure I don't slip. Okay, so give us the rundown.
Super micro, watching for shorts to start covering.
Officially in the electoral count, right? But we don't have everything.
Yeah, obviously a decisive win for President Trump, and Republicans are going to take the Senate, have at least 52 seats. There are a number of races still aren't called, so you could be talking 54, maybe even 55, but a decent majority there. And then the House is going to remain uncalled, I think, for probably a few days. There are a number of key races in California. California, of course, notoriously slow at counting. Those could be decisive. So I think we'll be a little while before we know, whether it's a trifecta for the Republicans in terms of the White House, the Senate.
Amazon, look for a dip. This is not going to go straight up forever. Okay, Microsoft, nice dip buy.
We should have a good sense. California can push into a week or two before you know, but hopefully we'll get a resolution in the next couple of days.
Okay.
Paticus, nice trade there, Paticus.
Full sweep. How does that change the outcome versus what's known right now?
Yeah, I think what's known right now is that tariffs are going to be probably one of the front burner discussions for the markets over the next 2.5 months until Inauguration Day, because obviously President Trump has made some very broad.
Nice call on Microsoft there, Paticus. I'm looking for Tesla to do the same thing. Netflix. All right, so profit taking.
Negotiating tools to get some countries at the table.
All right.
That the idea of across the board tariffs on absolutely everything is probably a sort of a starting point for negotiation. So I do think uncertainty about where tariffs are going over the next couple months will be a little bit of a drag on some companies that are going to be concerned about that. But I expect
Bitcoin looks like it's starting to gear up again.
Dramatic in the tariff area, but that is something that he can do pretty much without Congress. So I think that's one of the first things that everyone's going to be watching.
Okay. Market response, does it vibe with policy in your mind? Is it sort of
NVIDIA looks good. Apple.
Or contest? How are you reading the policy connection in the markets now?
Trump media down a bit. Okay. Apple looking for a follow through. Apple, a little liquidity grab there on Apple. Is that on the 5-minute chart? Okay, got a little liquidity grab there. Okay, right there. Okay, looking for a follow through. Got several fair value gaps on Apple on the way up. Amazon. Amazon, fair value gaps on the way up. Still going.
If you have a Republican sweep, I think that could be done in the first half of the year. And, that would extend lower individual income tax rates. It would extend the estate tax, possibly, look at raising the cap on the deduction for the state and local
Okay.
tax.
Zscaler.
I certainly think that is part of it.
Okay. Twilio, TWLO. Twilio, big gap up on Twilio.
Key areas, capital markets, banking, cryptocurrency. I think that's likely to happen. So, I think there's a lot there for the market to think is going to be
Twilio looks good.
positive for companies going forward.
The small cap move, the Russell, do we know details about what type of deregulatory efforts or taxes would be most relevant for those businesses? The market's making a real pronounced statement there.
Yeah, I think the deregulatory atmosphere is kind of a general atmosphere right now. I don't know that anyone knows kind of exactly the specifics of how that's going to play out. There's a Supreme Court decision over the summer that basically will give the courts a larger role in the regulatory environment. I don't think anyone really knows how that's going to play out, but I think it's the general sense that there'll just be a lighter touch in regulation.
Twilio.
Taxes,
Let's see what Twilio looks like. Twilio gapped up. Okay, fading a bit. Looking forward to get back up to the highs.
Like ending the tax on Social Security benefits and overtime pay and tip income and those sorts of things. So, I think small businesses are looking at those potential benefits and potential benefits for their workers that could really be a positive. So, I think there's definitely enough here that the different sectors are probably looking at what benefits them and thinking this is a pretty good atmosphere, and I think the markets are reacting that way.
All right, a few specifics here as far as
Meta, nice bounce on Meta. Okay, so that one was down this morning. People taking profits, gapping down. Meta reversing. Okay, let me see. What do with Meta?
A little bit ago, who told us
Meta.
he wants to cut millions of government jobs. So I guess let's start with one they've highlighted. Can they take Gensler out early on?
Sure. I mean, obviously, there's new administration comes in. You have changes in all those agency heads and cabinet positions. I laugh about what's being done on day one because.
Okay, Meta. I have an iron condor on this one, so I want to take this off for about $100. Meta.
On that day one list. So, I think typically.
Okay, Meta. I want to take this off.
From the holdovers at agencies.
I could always wait, right?
The SEC, but I also think it'll probably be
Bring my
multiple months before they get to the SEC chair confirmation. So it could be a while. There's lots of
yeah. If I get $1 for this, that means I'll have $100 credit per contract. Five of these iron condors. All right, I'll hold out for $1 even.
Across the board, sort of, career employees and how that's handled. That could be a seismic shock, at least here in Washington, that is going to be very, very interesting to watch.
All right. Mike, I know that, as you pointed out to us so many times before, that the Fed and Jerome Powell has a term separate from the cabinet cycle. But what's possible here? I mean, and to your point about folks resigning if they see the writing on the wall, this one to me seems like a pretty big one for markets. One that maybe there's been difference in terms of the market's opinion. The market seems to have generally loved Jerome Powell. Stocks up, obviously, inflation's come off, but then part of the whole campaign message was that the economy is a disaster right now. So a lot of times the Trump team talked negatively about Powell, but who knows if that was just campaign talk as far as trying to paint the economy poorly. I mean, what are the range of possibilities here for Powell?
Yeah, I think this is going to be one of the most interesting things to watch because, on the campaign trail,
okay, so this looks good. Meta's on the move. I do have some Facebook shares. FBL. So does my son. I know he's looking at this one. Let me send him the link. Actually, I don't want to distract him right now. He's got a school project.
There's a lot of legal questions, and that would create a big legal headache that I'm not sure that distraction is.
Solars.
President-elect Trump wants to go down the path on. And as you said, there's no Fed governor whose term ends before.
All right, looking for the solars to fade.
So, unless there's a resignation, which certainly happens.
They were up. Solars were up on a potential Harris administration. ENPH. These are all down. Okay. NXT. Okay. NXT is not too bad.
And now, obviously, we have the weird situation of having a Fed meeting starting today and
tomorrow, I don't expect the election outcome to change the direction of where we expect things to head tomorrow. But, does it increase the chances of a pause in December? I would say that those chances have gone up. So another thing to watch.
Okay. All right.
Okay, Apple looking for a follow through. Amazon is still going. Looking for Tesla after some profit taking to get back above or close to the highs of the day. Meta still going. Meta looking good.
Well, I would say, watching the House of Representatives still is really, really important because we're having a different conversation. If
Yeah, let me send him the link. What the hell?
In the House, and that's still on the table as a possibility. If that happens, then we're having a very different discussion next year about taxes and that sort of thing. That the House potentially acting as a little bit of a brake on things. So I think until we know the House of Representatives majority, we need to tamp expectations down a bit for what might happen. And I think the Republicans understand that. They're waiting for those results too. So that's going to be, to me, the piece that's going to be really important here over the next several days.
Okay. Mike, great stuff. Thanks for being here this morning. I know you're busy right now. Appreciate it.
Thank you.
And thanks for the prep as well. Mike Townsend, Managing Director, Legislative and Regulatory Affairs at Charles Schwab. Coming up, let's get some charts. Looking at the Russell, the 10-year, and Bitcoin. Some of the biggest movers this morning.
All right, let's see. Intel, what are you doing, Intel? Intel? Okay, hanging out at near 20, just below 25, Intel. The new administration supposedly more open to M&A. So if somebody wants to buy Intel, like Qualcomm, more likely now.
Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Okay. Looking good. Google flagging at the highs.
Take a left here, please.
But there's a
Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
That kind of attack.
What about engage with a Trump White House? I mean, we learned a lot.
Disney's at 98.50, slow as molasses. Netflix up 0.5%. Netflix bouncing. A lot of these New York FANG index stocks are bouncing. Supermicro headed down towards the lows again.
Communications huddles right now about the
AMD fading. AMD fading at the moment.
Given everything we've learned.
I haven't had any conversations with anybody given the fact this all just went down in the early hours of the morning. My suspicion is everybody's trying to find their footing. And to your point just now, I think there will be overtures and then everybody will try and figure out what the dance looks like. Right now, it's not really knowable. Certainly given what we saw in the previous administration, going back to 16.
Finally, just a question about artists.
Yep.
And how involved they got in this cycle. Whether that was Beyonce, Taylor, Kid Rock, Ricky Martin, right?
Yep.
I wonder, do you see them recalculated?
No, I think we've seen this happen in the past. I think it's wonderful to see people come out and support candidates. I don't think at the end of the day,
Microsoft.
endorsements really make a big deal of difference coming out of the music industry. Hollywood.
Okay, let me look at Microsoft. I have an iron condor on that too.
Really does not what the
Microsoft.
There's a distinct possibility that it's a turnoff. Exactly right. That it feels elitist at some level and that people just don't want to hear that when they're that.
Microsoft back to the 50-day, which is what we were looking for yesterday. So we're in the middle of this iron condor. So profit looks really good. Do I want to take it now or do I want to wait? I better take it now because because I have December for the Iron Condor on Microsoft. I'm going to take some profits, see if we can push a bit higher and lock in about $80 per contract. Okay, it sounds like it just went through. It did. Okay, cool. Microsoft just fading as it hit the 50-day. Okay.
A big confluence right here.
Amazon still hanging out at the high, so is Apple.
Blue solid line, which is our
Google
weighted
just
average
below the
futures.
high,
You
Meta
can
just
see
below the
also
high.
31-day EMA, all around 22, like 40 or so.
Okay. Pretty nice breakout. Gap has reemerged here, but it's still, I guess connected to this over here.
Booking.
So, support, I guess you would probably think.
Booking with the bounce, Orly Automotive. These have been most actives all week.
Back the gains and it slips back into kind of the uptrend.
Tesla's number 4 on the NASDAQ 100.
You'd have to be really bold and have a lot of conviction that something's gonna reverse to like.
And about number 10 on the S&P 500. So Tesla's still seeing lots of interest.
But like the chart's got so much support, it seems like, and in the past,
The
spikes and momentum
credit card
starts to
companies,
have a little
Discover,
fall for
Synchrony,
several days.
Capital One, all of those smaller and large, Microsoft, MasterCard and Visa, all of those, American Express. American Express did fade from the open, big gap up.
To try and fade the move. It just like it's buying downside on a chart that's got so much different types of upward momentum. All right, let's talk bonds. What's trending?
Yeah, Vanna Crush should be a tailwind now.
It looks a lot less pronounced. It looks like more trend continuation.
Yeah, but a very large candle forming today here. So a big move to the upside. Where are we at now? 3.7% or so to the upside.
Okay.
And we probably bought
Apple.
some interesting areas as well. I mean, for
Apple at the high.
Here. Downward trend line beginning with these highs, blue trend line connecting the subsequent highs. That's about what we kind of hit a stumbling block over the past couple of days, but it's looking like
Okay, let's look at Zscaler.
Now you can see as well.
Okay, looking for that to move back up into this doji. Zscaler, Palo Alto, and CrowdStrike. Security names.
White trend line would make more sense to keep an eye on going forward here, but you could keep both of them on your chart just to kind of.
Palantir having a good day. After yesterday's gap up, Palantir is hugging the highs of the day.
And our volume profile point of control, our thick red line here, we've got some very notable volume nodes here, some obvious areas that actually happen to line up pretty decently with notable high points as well. Take a look at our red line, 4.476, a couple of highs here, and about where we're topping out today so far. That could change, but for now, it's seeming like we have held the line at that area. Beyond that, the next set of highs is our pink line, 4.632 to the downside. And, we are still very geared toward the upside here. Note as well that even though our green trend line on the RSI was broken, we are in the overbought area, kind of been bouncing back and forth around that area many times recently here. But anyway, if we were to break to the downside, green line, old support, volume profile point of control, then our light green line, which was often a stopping point for price, notable highs and lows coming in around that area near 4.18.
Like that this candle really challenges and kind of breaks us through the longer term downtrend. I mean, it really puts a lot on the table for bonds. Pretty juicy stuff.
Maybe if you draw it along the high right here, maybe we're kind of like right.
All right, looks like Palantir wants to go some more.
On the person doing it, but I would say probably most people would do it more toward both the close and to connect more.
Sure,
you know what I mean. So that's
too. Yeah. No, that's the way I think about it. I think it's just a unique thing to have here, and I'm glad you've got that, because in this sort of section here, it looks like just continuation of trend, but then with a longer perspective, a pretty clear big move here. So good context. All right, last one, the coins, BTC. How are we looking?
Bitcoin here, and big day for Bitcoin. Interesting price action here today. Another huge green candle. I mean, that's kind of the theme for all these things that had this huge catalyst happen last night, or today, rather, I guess you could say. So high point, kind of the two series of highs here were based on, high closing prices and high intraday prices. So between like 72,430 to 74,415, those were our green and red lines respectively. That's kind of
Palantir looks good.
potential resistance. That's about where in the past when we've reached those levels, it's been tough to overcome them. Today, though, we have made a good intraday high beyond our previous highs. We touched the top of our channel. I drew this channel here, trend line going across the lows, duplicate it, put it across the highs. Happened to pretty match up pretty well with where we have topped out so far today, but the move could continue. RSI was interesting, had kind of a ceiling here around the 65 level, 64, 65. We did break above it recently, very brief entry into that overbought area, but now we have recovered. We held the line at our green trend line. We are above the 50 midline. We are breaking above our resistance area here. So once again, if we were to keep moving upward, standard deviation channel here, we've got this first boundary that our high of today that lines up with our upper channel boundary. Plus one channel, 82,081, I should say, to be more clear. And then down here, if we do break back into our old resistance zone, linear regression line, yearly linear regression line, 71,222.
All right. Bitcoin, if we go back to your previous chart real quick, I mean, this is interesting because of all the charts we looked at, it's the only one that's not overbought.
True, yeah, but it is breaking above a resistance area. You can use support and resistance on the RSI. And
Palantir looks good. Apple.
We did have kind of that upside test and subsequent reversal.
A little bit off the high. Okay, so we just things settled down a little bit now.
Though, when you've got a previous high and
Okay, looking for Tesla to push a bit more. Google looks fine, trading at the highs.
You could still call it a bearish divergence intact, which goes back to the other times it was at 70.
Okay, just off the highs.
It's just interesting because it's such a high momentum asset.
All right. Apple. Let's keep an eye on the spiders. Fading. SPY. Hope everyone has a good day. Most stocks up on the day. Really, I'm just all I'm doing right now is watching if there's going to be a continuation or if there's going to be more selling. I got to believe there's going to be more profit taking up here. We'll see what happens after 11 o'clock or so. We're getting close to 11. I'm looking for dips to get bought. If they don't, we continue to fade. We need to establish the lower support levels. We know 5,800, 5,850 are levels. Okay, we want to stay above 5,850.
Plus, get 24/7 live help and access support by phone, email.
Technically, this gap was traded already. You can see the wicks on the previous candles. This wick right here on October 23rd, that wick came down below and into this week's price action. So I guess technically this gap is filled. I'm not a gap specialist like Brother Bill. Would you consider this gap filled, Brother Bill? Anyone who is a gap specialist? I'm looking for the range to be traded. So it looks like, I don't know, it looks like to me like it's been traded. If you go to the weekly time frame, weekly, GE is back on track. Okay. So you can see on the weekly that this has all been filled up. Okay. So not really that concerned about it. Okay, let's look at, you're looking at GE. All right. All right, let's go once again. Let's take a look. Oops. Let's take a look at what's working.
The benchmark investment solar ETF was down nearly, over 10% this morning. Again, a lot of these names, First Solar down, Sunrun down, Sun Nova, just a few that are selling off substantially on the session here. Now, what we
Okay,
also see
so
some of these inverter
yeah, I just pulled that up too. You
substantially lower. Trump's campaign platform does call for the termination of IRA, which he refers to as now the overall.
Yeah, beat me to it, Corey.
So the IRA
All right, looking at what is actually working here. The dark green is what you want to focus on. Dark green are up over 3%. Okay, so you can see industrials look pretty good. Real estate, not so much. Energy, discretionary, Google. Okay. Tesla pushing a bit higher. Tesla. Berkshire. Big move on Berkshire.
Today, you can't argue with the numbers. We're selling off.
Yeah, this latest blow seems clearly a sentiment, a trade. But to your point, this is now a 5-year running bear market, 4-year running basically since the COVID high. In the last administration, despite being very favorable to green energy, clean energy, et cetera, through the Inflation Reduction Act and the attempt to kind of build up supply for green energy technology, wasn't met by the demand. So, now if the demand side is lessened, I mean, I can kind of get the logic for how it could get worse. But
okay, so we got a good idea of what's working. S&P hanging out.
Huge element of the disappointment.
5,850, 5850, sorry. 5850 support. Below. That'd be in the gap.
I mean, obviously not today, but that's been somewhat of the concern, right? That we're heading towards this perhaps more strained economy. It's even worse overseas. So I think to your point, exactly what you just said, we haven't seen this demand. That's the story. I don't think that this is frankly U.S. president related at all when you look at the big picture in Solar.
Yeah, I like that. Appreciate that. And the agnostic approach, the supply and demand one that's been negative for them. Appreciate that. Thank you very much. Wow.
S&P cash.
Been destroyed. Yikes. Holy smokes. In days, down 18%. All right, let's chat about the session.
Let's go see what's going on in Twitterland, X. Let's see what these guys and ladies are talking about. I imagine that the tone is going to be pretty dark over at Joe K.
American exceptionalism, dollar going wild, seemingly says we took a big step forward relative to the rest of the world overnight.
Well, I mean, obviously there's a positive reaction in the markets, and then of course industrial groups are in favor. You're looking financials, obviously are moving higher because they're highly regulated.
Okay, what's TLT doing? TLT got whacked, right? TLT.
Long bonds are selling off still. The dollar
TLT.
rising. The gold trade is fading.
TLT got whacked on that.
Because we do have clarity. There was a lot of confusion.
Okay, not every trade's going to work. Not every trade's going to work. Unfortunately, TLT, if you took profits yesterday near the close or whatever, great. If you didn't, TLT's down. The 10-year yield, that could change by tomorrow. Okay, that could change by tomorrow. TLT down, yields up. Okay, let's look at junk bonds. This is the 10-year yield. Junk bonds, we want to see a big move back towards the 50-day. All right, so if the 50-day flattens out, okay, prices can be above and below and just move sideways in a range. A lot of people are looking for range-bound action.
I don't know if that's going to get in the way of Powell's decision. Market's still looking for a cut, but it certainly has gotten a little bit murkier.
Yeah, it's certainly going to be interesting what Powell has to say, not just in terms of the path of interest rates, but also this tick higher in rates that we've seen or in yields that we've seen. I do think that if you take a look, you were talking about this American exceptionalism in terms of the stock market. There are some other areas that aren't experiencing that exceptionalism outside of the clean energy solar stocks that Jenny mentioned. And linked to rates is home builders. Take a look at some of these home builders. Toll Brothers, the outperformer so far this year, down 5%. D.R. Horton down 5.5%. Lennar down 6%. KB Home down 4%. This tick higher that we're seeing in rates certainly not helping home builders, but also keep in mind, because it doesn't help the housing affordability, but they've also had to offer a lot of incentives to try to offset those higher rates, which is weighed on gross
Okay,
margins.
SPY
So,
and the S&P pulling
certainly
back a
not
bit.
helping in that department either. So we'll see what the Fed has to say about that. These were also largely seen as part of the Harris trade.
I'm just waiting for the markets to give us a trend right now. The S&P is been rocking back and forth. Okay, so we're back down to the lower part of this morning's range. So I'm not going to do anything. If you got short and you're timing these perfectly, good job. Okay, Tesla, looking for it. Tesla looks like it could be headed back up to the highs.
You mentioned the solar stocks. Discretionary overall is higher, but take a look at Nike and Lululemon selling off today. Obviously, close ties.
Yeah, big move.
So that could be weighing depending on
wow. Yeah, no surprise there, right?
Tariffs that Trump has talked about. There's a whole lot that's working. If you take a look at what's leading the S&P 500.
Okay, let's look at advanced decline percent. Advanced decline. Okay, advanced decline percent.
But there are some notable losers to I think focus on here as well.
Yeah, great point. Really good comprehensive analysis. Good eyes on a few of those too, with some connections of the advisors in Trump circle now, and how that'll affect some of these other trades.
Okay, we're not near plus 30%. Okay, so near plus 30% is where you want to start thinking about taking profits off the table. Let me say something else about S&P. Okay, so we talked about, 6 weeks up, look for some consolidation. After 6 weeks up, we could see 2 to 3 weeks of downside. Okay, so we had our 2 weeks. Now we could see a trend for anywhere from 2 to 5, maybe 6 weeks again. I don't know, maybe more. Okay, this is week number 1 now.
Steel stocks are higher with the expectations
Okay.
of things like tariffs. Maybe some of the financials are a little
All right,
extended
so
on deregulation, but also
don't really need this anymore.
interest rates
I'll get
low
rid of
and
that. Yeah, I'll
the
keep that
short
on.
curve are going to fall and the long end is rising, so that's benefiting them as well.
All right. Yeah.
More than likely, we'll see the Fed.
Move in some of these is incredible. Synchrony, Discover, Capital One.
More than likely, we'll see the Fed cut rates 25 basis points.
The other side of the equation, a few of the down movers as well in the healthcare space and solar and energy. Nicole Petalides coming to you next from New York for Trading 360. Have a great day. I will see you at 2 p.m. So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming to kick off every day bright and early at 8 a.m. Eastern with our Futures Show, breaking down commodity markets, futures.
Okay, so we're on week 1 now.
I'm in the studio hosting our 2-hour opening.
Okay, so the fact that we're above the 10 EMA, good odds for the bulls. Okay. The least amount of up days we've had without a pause are 2 weeks. So if we see a follow through the rest of this week into next week, what's up, bud? What's wrong?
I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of
You're doing this because of your project?
Right in the center of the action. The energy is palpable. The sights are unmistakable. It's
At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. spend some time with
Apple's still fading back below VWAP. So we're not chasing. We're looking for B and C pivots.
Schwab Bank Investor Checking, the checking account built for investors, named highest.
Okay, we're in positive gamma, so we should be seeing dealers buying dips. Okay.
You get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
NVIDIA. Okay, so we're looking for people to be selling calls overhead.
Number one broker here for the
Pretty extended move.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop.
All right, so Microsoft, there was a buyer of 14,500 February 405 calls for $31.60.
And track market trends with
Adjusting the 390 strike. Okay, that's from Joe K over at Option Hawk.
Schwab Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. Everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the
Okay, tick cumulative. Watch tick cumulative.
more thorough and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim.
Tick cumulative is changing direction, so that's good.
Nearly endless customization and up-to-the-minute news and insights. Trade brilliantly with Schwab.
All right, so S&P fading back into the morning range.
Good morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides.
All right, 59.50 is resistance overhead, so let me mark that on here. 59.50.
Presidential election where President Donald Trump will be our 47th president of the United States of America. That being said, overnight, after yesterday's gains on Wall Street, overnight we watched the Dow jumping.
All right, so we're in the middle of this
Right now we are up 1257.
100-point range.
As far as some sectors,
Support and resistance.
but the big picture here is you are seeing the S&P
5,900. We're below 5,900.
In our 360 spotlight, we'll dive into the president, all of that, and what stock moves have occurred this morning. And today's disruptor is for solar, the solar space. Well, that's been under some pressure now. 360 round, we'll take a look at the earnings from Supermicro. Here's a look at the numbers as we speak. So it's a winning week now, a winning month, a winning 6 months, and a winning 1 year. Worth noting the gains that we have seen and new highs. So the NDX is at a new high right now. The NASDAQ 100, we're seeing that at a new high, gaining 1.7%. Looking at the Dow Jones Industrial Average, also hitting a new high over 43,000 now, gaining almost 3%.
All right, so just taking profits off and watching the markets for any kind of further fade or, not holding this area would be big in the short term. We have first week up. We have a first week up on the S&P 500 after 2 weeks down, and something we're watching very closely. Okay, so 2 weeks down, 10 EMA is holding. Okay, looks good. S&P.
Names like Nucor and Discover, Trimble, Steel Dynamics, Key Corp, and Synchrony Financial. Those are some of the leaders there. And on the NDX, take a look there at the NASDAQ. We're seeing, by the way, financials, energy, and industrials. Tesla, you've had Dan Ives out overnight. He did say $40 to $50 gains for Tesla. That's been a leader right now, 12.5%. Global Foundries, Old Dominion, Intuit, Baker Hughes, and Barker Hughes, and CSX. Gotta double check on that. Anyhow, so it is Baker Hughes, right? But why does it say BK? I gotta look that up, or leave that alone. Okay, Jenny Horn, markets correspondent here on Schwab Network, taking a look at another really important point, and that was, if you were watching overnight, which I was, I did not sleep. I was watching every single move in the markets and the developments, and Bitcoin, new high for Bitcoin, watching crypto. And many of the folks who supported Bitcoin felt that a President Trump administration would be more friendly to crypto. And let's speak with Jenny Horn now for a look there. Good morning, Jenny.
Good morning, Nicole. And what a historic day for Bitcoin. Yes, I was also following very closely. And this was actually, I think, the most I was tuned into the crypto market after hours than I've ever been, because that was one of the trades to watch. I would argue it was like basically crypto and Tesla maybe were the trades that I was expecting to see some volatility after hours. And that would be correct. But thankfully to the upside, as we did see the largest cryptocurrency, that being Bitcoin, did pass 75,000 in early trading. Now hanging out still above that level, or now, right even at 75. And as I'm speaking, we're seeing some volatility, but that did then hit a high and not seen since March. And so I think the surge is definitely linked to some relief here. Crypto-related stocks also did surge on the session. MicroStrategy, Coinbase, Mara, all were names that have added significant gains on the session. Cryptocurrencies other than Bitcoin are also racking up some.
Okay, I got to take the son to school.
Ethereum also did spike, as well as
take the son to school. Okay.
That has been, of course, backed by Elon Musk. But price surges really started as soon as it became clear that Trump would be winning the election. On Wednesday, we did see AP did call Wisconsin for the Republican candidate shortly after around 5:30 a.m. Eastern time. So for that reason, the defeat seemed clear at that point. Both candidates have, I will say, embraced crypto during this election cycle. Harris did call blockchain one of the overall industries of the future and pledged to support Bitcoin and other tokens as part of the economic plan. But most digital asset bulls said that Trump was the favorite. I mean, having once trashed cryptos being based on thin air, he has since completely changed his tone, made a U-turn, and has pledged to set up now this strategic Bitcoin reserve, and as well as replace the SEC chair, who's widely been seen as now one of these crypto maybe conservatives. So I'll be interested to see if he actually does replace the SEC chair, Gary Gensler, but we'll obviously have to see what happens, because now guess is as good as anybody's. But strength today in the space overall, hugely benefiting from the Trump victory for the White House.
Yeah, Coinbase, 21% move there. Folks have been waiting for that one for some time too. Thank you so much, Jenny Horn. A great summation of the crypto space and Bitcoin at all-time highs. A good way to kick it off here in our next conversation. Jenny Horn, thank you. Let's get some insights in the news shaping the markets. For that, we welcome in Peter Tuchman, Senior Equity Floor Broker here at Trade Moss. Good morning to you.
Good morning. Good morning to you.
A lot of trading. I mean, with the moves, you had an update yesterday. You had big moves this morning. How does trading feel today?
You know what? The enthusiasm and the excitement in the morning was palpable. You know, I have not seen that for the longest time. People, look, there's a lot of the floor. is a very Republican place. Okay, so most of the people here were big Trump supporters. So there was that, but also the whole enthusiasm around the market. You know, we have to think back to Trump's first win at 3:30 in the morning that time. Back then, we were down 1,000, and we ended up opening up 1,000. So there was an intra-morning reversal. This was a straight across the board rally that started. Some people say it started a few weeks ago. That the rally up into the election was a Trump rally. I don't know really about that. But the enthusiasm around this morning, it's across the board. It's really.
But it was palpable. It's interesting. You know, you felt the hustle and bustle. You were running to the posts. I mean, give us some color. Was it louder than usual?
It was. Look,
there were a lot of photographers here on the floor. I saw that.
There were. So you had every possible news agency was on the floor. People were running around. We had excitement on all the different posts because stocks were opening, gapping up. We saw Palantir. Stock is up from $30, $40, $50, $60. It's spectacular. Obviously, you saw AMD, you saw Tesla. Tesla is off to the races. So you're seeing stocks that closed yesterday at record highs or 52-week highs once again gapped up even more today.
Let's talk more about Tesla. I mean, we work with Dan Ives. You work with Dan Ives. Look, last night I was watching him, and he was saying, with this, it'll be less regulation for full self-driving and autonomous vehicles, and he felt that Elon Musk could bring some calm and some liaisons with China. He seemed really positive. He was talking about $30 to $40 gains. We're already seeing at least some of that today on Tesla.
We are. So look, there's a number of things that are going to affect the stock.
I'm sorry, $40 to $50.
Correct. So $40 to $50 in Tesla seems reasonable around the fact that the autonomous car story has not gotten the traction that they wanted it across the board. If you remember 6-8 weeks ago, that story came out and the stock really got hurt pretty bad. And it wasn't until the earnings that we saw the stock rebound. But look, the fact that Mr. Trump and Mr. Musk are sort of forging a major relationship is going to be a big deal. He's obviously going to be an advisor, and I think he's probably going to get what he wants around the company, right? That's one thing. But you're seeing it across the board. You're going to see it. Look, I had spoken to Dan a few days ago, and his fear was that the wild card with Mr. Trump around tariffs, around China, and that effect on the tech sector may be questionable. But when you spoke to Dan at 3-4 in the morning last night, he felt that Mr. Trump was going to be flexible when it came to that, because he understood that was a big part of the markets. He's going to surround himself by smart people, and we're going to see that he's going to do what's right. It appears.
Right.
He's going to do what's right for the economy, do what's right for the markets. He's a big market guy. We saw that the last time.
Here's another thing: an M&A activity. Lena Khan. You know, a lot of things that are jumping now. You're seeing the airlines moving, the food stock. There are different retail. There were blocked merger requests mergers and acquisitions that did not happen. Maybe now we'll have more M&A activity. Will that help the market?
I think everything. Look, the bottom line is markets can deal with anything except unknowns, anxiety, and think about it. This election's been festering for more than a year. And the fact that it's over now, irrespective of where Mr. Trump's going to put his energy, the fact that the unknowns are now knowns. Are there some more unknowns around Mr. Trump and his policies? Absolutely. But the bottom line is the election's over. He is our next president for the next 4 years. And I think he's probably going to do what's good for the market. Look, I mean, everybody's got their opinion about him. Are there a couple of wild cards that could be questionable?
All right, folks, I'll be back around noon. Just keep in mind, this is the first week up. The average since October, November last year has been anywhere from 2 to 5 weeks up. When we started the turn back in October, November last year, we had 9 weeks up and above the 10 EMA. We're currently above the 10 EMA. Things looking good. It's only week 1. Again, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Wednesday the 6th, post-election. We should see a follow-through in the weeks to come.
Today, we are now gapped up huge once again, and the market is not pulling back. So look, eventually, we are going to hit up against some technical resistance. It's going to we're going to watch this story unfold. Think about it. There's a little bit of a historic tidbit. 8 out of 8 election cycles that we've had after the election, there's a 2-week period where the markets sell off and pull back until November 21st, and then we've got a 6-week rally into the end of the year. That's happened 8 election cycles out of 8, apparently. I saw that yesterday, and it seemed like a fascinating story. And let's see if that unfolds the same way.
We found Cooperman. Yeah,
Yes.
go ahead.
No, I'm just going to say that we have a Federal Reserve meeting tomorrow. We didn't even discuss that. They are going to cut rates at least once. Are we going to get 2 cuts? Maybe, right? So, and we have we have Thanksgiving.
And
we
is
have
Jay
Black
Powell
Monday,
going to be the head of the Fed for a while?
I don't know about that, but
You know, here's the thing too. You know, when you talk about maybe it's a rational knee-jerk reaction today, Leon Cooperman, billionaire investor who slowed down some of investing, he was concerned about the market and in fact said he thought next year would be a down year.
you know what? Look, Leon is a great investor. He was actually a big supporter of Trump.
Right.
I don't really know. I don't feel
You
that.
didn't
I
seem
can't
so
really.
today, I'll tell you
No,
that.
I can't predict 2025. At the end of the day, I'd like to look at a little
You're always a
microcosm.
bull.
I am always a bull.
Long-term bull.
And look, at the end of the day, it's not even the market tells me about the bullishness. It's not me predicting anything.
Right.
I mean, look, the bear has peeked his head out only 5 times this year.
Right.
In April, in July, in August 5th, the first week of September, and October 5th. That's really been the only significant pullbacks we've seen, and they've all been rebuffed by much stronger rallies. We're trading at record highs even before today, right? We had stocks that were trading across the board, and the market was at 5,900 S&P, 43,000 on the Dow, and now we just feel like it's going higher. We've got Christmas coming, we've got Thanksgiving, retail, right? These are times where the market tends to shine.
Okay. Peter Tuchman, great to see
Thanks,
you.
guys. Happy trading. Good
That
luck.
was good color from Floor about the excitement and just the action that we saw today. It was palpable and some new highs too. Thank you, Peter.
My pleasure.
More to come here on Trading 360. It's the big 3. 3 stocks, 3 charts, 3 trades. Rick Ducat goes to the technicals. Don Coffin takes us to the trades for regional banks, their ETF, Alphabet, Google, and iShares Silver ETF. Taking a look at that here on Schwab Network. We'll be right back. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. Time for the big 3. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts here to take us through the trades. Don Coffin, co-founder, Theo Trade. Good morning to you both. Don, I'm sure you were watching much of the night, watching the action, and as someone who often trades on the bearish side of things, maybe this is a great setup for you as stocks are hitting new highs. Tell me a little bit about your big picture.
Yeah, one of the things is, look, we here at Theo Trade, we were pricing this in for the last 2 weeks. We actually saw the movement inside of the dollar a significant move inside of the dollar to the upside, which was largely pricing in a Trump victory. Obviously, some of the price action of the bonds also pricing in a Trump victory. So there really weren't any huge surprises. I mean, in today's marketplace, looking right now, I think the only thing that's a little bit euphoric is probably some of the financials. But yeah, overall, I think you make a great point. Some of that euphoria may wear off, and that's exactly some of the trades we're going to discuss today.
Yeah, and that's what Peter Tuchman too was saying. He said, look, we're seeing new highs across the board, and in other presidential elections, when you see a surge and then you see a pullback for a couple of weeks. So what are you looking at here first? First, the regional banks ETF.
Yeah, the regional banks ETF. So, I'm waking up and I'm looking at this in the middle of the night. I'm actually looking at KRE kind of reopen in the middle of the night, and thinking to myself, I'm like, wow, this is quite the euphoric move, because the regional banks, we're not too far removed from this particular ETF being in full-blown crisis mode. Like, regional banks were getting annihilated, right? You go 2 years back, they're getting hammered. And a large portion of that had to do with sell-side activity specific in the bond market. So, well, what are we seeing today? We're seeing heavy sell-side activity in the bond market. And I'm going to tell you right now, if that is bond vigilantes, and if they're coming in and continue to sell those bonds, I think you're going to see a wild sell-off inside of KRE. And as such, I'm actually going to put on a bearish position. I'm going to use this huge bid to the upside, put on a bearish position. I'm going to go out to the January 17th expiration. I'm going to be buying the 61 puts, selling the 56 puts. So doing a nice $5 wide put spread here for about $1.15 debit, although the KRE has exploded to the upside. Look, I'd rather be in this thing and be early than miss the move. Again, sell side activity in the bonds, though, really generates the opportunity in my mind for a short inside of the regional bank ETF.
Right, understood. Okay, look, financials are doing well today. Yields are higher. But let's see what Rick Ducat has to say about the charts, please, Rick.
Yeah, a very big breakout in this regional banking ETF here. As we look at the chart, we can see that it was enjoying a decent uptrend for much of the year here. Not really any fireworks or anything necessarily, but we had some trouble once we got to this area between these two green lines here, between about 59.60 to 60.60, about a $1 range. We topped out there a few times, and then today, ultimately, we had our big breakout here. The point that we have stopped so far today is pretty interesting. 2 standard deviation channels. Anyone who watches my segment knows that that's what I try to use when a stock is making new highs, that we don't have any prior price action to go off of here. So we're 2 standard deviations above our blue linear regression line, our line of best fit. If we were to start looking for a place for a potential resistance in the near term, 65.72, that's where this study comes in. That's about where we've topped out so far. We've had a very large rally, 11% so far. So, perhaps it's a bit of a fadeable opportunity if you have the risk tolerance for that here. RSI pushing into the overbought area, a sign of strength here. If we were to keep going upward, red line, +3 channel, 70.18 to the downside, our green area, our area of support, marking our old highs, 59.60 to 60.60. And just for perspective to Don's trades, I believe 61 is right about here, 56 is right about here. So looking for a break below the +1 channel, going all the way back down to our white trend line there for that particular trade.
Yeah, understood. All right, Don, final thoughts there?
Yeah, although the marketplace is actually through, which has just been, the big elephant in the room, again, as I said, we're seeing a little bit of euphoria. Some of the exact same problems are going to face us right now. And I think that the bond market, overall is what trade needs to focus on, less about the S&Ps. If those bonds continue to see sell-side activity, it's over for the S&Ps here in the near term.
Okay, up next, Alphabet, which is up 3.2%. There's, a lot of folks talking about a big tech boost under a Trump administration. What say you, and what are you watching with this trade, which is off its highs, but 1 year up 35%?
It's kind of ironic because, as you mentioned, boost, and there's going to be less regulation except Google. Google's already in the crosshairs, obviously, of the Department of Justice and an antitrust suit. And I think there's actually going to be more of that. But, moreover, when I actually look at this, I think it's a good fade on the 175 level. That is just this bounce. That 175 level looks a little bit prohibitive. And, again, we're going to be looking at that here momentarily inside some of the price action of it. But I am also going to take a bearish position in here that Google is not going to be the object of affection, of course, of the incoming administration, as we all know. As such, I'm going to go out to the December 20th expiration. I'm going to make this short, make it sweet. Buy the 175 puts, sell the 170 puts. Again, I'm actually trading in Google L. Again, it's Google L, 175, 170 put spread done for $1.90 debit. It's just what we term an in-out spread. One strike in the money, one strike out of the money, looking for a quick pullback off that 175 level.
Yeah, Wisdom Tree actually was saying that a Republican one was likely to lift the Magnificent Seven stocks. I know that you talked about how he feels about Google, but that it would lift the Magnificent Seven stocks if it were Republican victory. A Democratic sweep would be better for bonds, according to Wisdom Tree. So we did get the Republican win, and we are seeing some of these stocks doing higher. Let's see what Rick Ducat has to say.
Okay, so when we look at this one, we had this big spike up recently on earnings here, but it didn't really last. We kind of retreated back to 175 or so, which is this red line. That's the line Don was talking about as well, the price area in question. That's about where we are right now. We are above that area for the time being here, but, the day is young. We had a nice gap up today. We're up about 3.1%. So we can also see that our big red candle from the other day topped out at the gap that we formed back there. So we did manage to fill the gap before the move kind of evaporated, but now we gapped up again here. So once again, to just give you some idea of Don's strikes here, 175, basically right about where we are right now, almost exactly, yeah. And then 170 basically would be right there. So looking pretty much just to close the gap from today for that trade here. And there's a significant source of potential support just below our green line where we topped out multiple times here and near about 168.50, RSI breaking above the red longer term downward sloping trend line. However, kind of a problem here, a little bit of bearish divergence. We're not making a better high close on the RSI, even though price is making a higher close. You see our red candle and then our green candle there. Very modest higher close, but still that would be what we would want to see. So if we were to move to the upside here, 181, that would be our next potential stopping point right there. Kind of lines up with our trend line as well. From there, the highs would be the next stop potentially to the downside, 168.50, our green line. Then we've got a confluence just below it, yellow 21-day EMA, orange 63-day EMA, and our old downward sloping blue trend line, all around like 166 or so.
Okay. Last but not least, we take a look here at silver. I mean, gold is down $75. What is it about SLV that jumps out at you, Don?
Yeah, so once again, this is similar to the other trades where the other trades I was actually kind of fading some of the upward momentum. Here, well, I'm taking the exact opposite. This is a significant down move in the metals. But, the problems of the world are not, abating literally overnight. We still are going to have inflationary pressures. In fact, if you take a look, the bond market is probably distinguishing just that. Again, inflation's not over. Some of the debt fears are not over. I also see $28 being support specifically inside of SLV. And I think it's actually a decent buy at this particular point in time. So in SLV, which of course is the silver ETF, I'm going out to the January 17th expiration. I'm going to be buying the 30 call, selling the 34 call. This is done for about a 65-cent debit. So it's a bullish position using today's pullback. The other aspect that really plays heavily into this particular trade is look at the strength in the US dollar. Even though there could be some continuation to the upside in the US dollar, it is magnificent versus the euro today and other currencies around the world. Strength in the dollar, though, kind of exports inflation. You still got inflationary fears, and you should have them. You still have debt fears, and that's why I'm going to be long silver here into the new year.
All right, we'll give Rick Ducat the look at the technicals, Rick.
This is one of those charts where the gaps and horizontal lines are really important here because you can see we had our red line that marks the top of our price action, topped out in a similar place further down the road. That was the opening after our gap up. That's about where we were hitting the lows then. And now we can see that we are below our 63-day EMA. We're kind of in the thick of this volume node right here near about 27. So we've got a bit of a range to watch. We've also got this green line, high points repeatedly, then low points. So between like 27.25 to 29.50, those are the areas to watch with nodes near 28 and 29. So 30, Don's strike would be right about there. 34 is off the chart. The highs would be 31.80. Those would be the obvious points to watch.
Okay, Don Kaufman of TheoTrade, Rick Ducat there on the charts for the big three today. Thank you both so very much. And the Dow right now, folks, 1,318 points to the upside as the Dow, the NASDAQ, the S&P, the Russell, all hitting new highs after we have now gotten through the election. So we'll continue to spotlight the U.S. election, and we'll dive in what to expect for the markets going forward as Trump returns to the White House. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Welcome back to Trade 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight the U.S. election. Joining me now, Eli Oakley, U.S. politics analyst and morning consult. Good morning to you. Many of us were up all night long watching the tick by tick, the play by play on what comes out of each state, what happens in the House and the Senate, and what happens here on the U.S. markets. What were you watching, and what do you think is of interest at this point now for investors?
Well, first of all, we made it, so congratulations, my fellow Americans. We made it through another election cycle. We were watching to see which of these very, very two possible outcomes is going to happen. I mean, all of the polling data we were seeing every single day was showing a margin of error contest that could flip either way. And in this case, it flipped toward Trump. I think a lot of what we saw in the underlying data is Trump was highly competitive when it comes to voters' number one concern every year, which was the economy. And that cost of living issue reigned pretty heavily. I think looking forward, I think one of the biggest things he focused on his campaign was this issue of protectionism, trying to help American companies with tariffs on other countries. Those were very, very popular in a number of these swing states. That's going to be something that we're going to be able to watch going forward, regardless of what happens on Capitol Hill, by the way. We're still waiting for an outcome in the House. A lot of the president's trade authority doesn't need congressional action. And so, as Donald Trump looks to take back the White House in a couple of months, I think that's one of the biggest issues we're paying attention to.
And he also says that everybody's going to feel that it's all about a surge in U.S. consumer confidence. And he's trying to build the confidence of Americans. And that's a big part of it as well.
Yeah, I don't think that Donald Trump necessarily has anything to do with that, except for the fact that he got elected. After Donald Trump lost the White House last time around, Republican consumer confidence went down dramatically. And we saw Democratic consumer confidence skyrocket. I think we would expect the consumer confidence numbers to look better as Donald Trump takes back the White House, just given that partisan split. And the numbers move pretty closely together, so you can see how Democrats and Republicans are reacting to the events of the economy. But Republicans are not as hard on their own as, or Democrats are not as hard on their own as Republicans are. And so I think that's going to move that consumer confidence number quite a bit.
Yeah. And then when it comes to the tariffs and the global businesses, you noted that folks were hoping to have protection for U.S. companies, and some actually like the tariffs, while others are worried it could boost inflation.
Yeah, I mean, the whole campaign Donald Trump fought was on voters' concerns about the cost of living and the cost of goods and services. At the same time, he's pushing a tariff plan that is almost very likely to spark retaliation from other countries. And it's not just tariffs, by the way. I mean, there's actions that he's going to be looking at on taxes, for example, that could respond to what's happening in Europe. That's going to be a big debate that's probably going to happen early next year, just given the fact that Congress has to renew those next year. And so I think you could see those two big issues, taxes and tariffs, take up a lot of time in the first part of Trump's presidency.
And also, so the markets are at new highs, and folks always like to make money on 401ks and IRAs. Do you see more of that?
I think that the American people and investors like certainty. And we saw these numbers in the market start to improve a bit as it became more clear that Republicans may take victories. I think the post-election day stock rally probably just reflects the fact that folks are happy it's over. They know it. They can start planning for what happens next year as Washington faces some of these big debates.
And last but not least, as we talk about the makeup of the Senate and the House, the Senate has been counted and it's Republican, the House still counting. And we talk about some of these policies. Some people like a lame duck session where you have 1 and 1, or some folks would hope that they both go Republican so you can move forward with some of the policies. Thoughts there?
Yeah, I mean, I think the American people like Washington to do things, and they like to see Washington doing things, and that happens with unified control of Washington. The problem with unified control of Washington is the American people get mad by the midterm elections and you lose something. The United States Senate is going Republican now. It might be Republican for a while, just given how the map is shaking out. And so, voters, as they cast their ballots this year, those generally align with the top of the ticket. I think next year, the American people are going to realize that the House is the big check on this Republican dominance of the Senate and the White House.
All right. It's great to see you, Eli Yoakley, Morning Consult. Thank you. Coming up next, the disruptors will focus on the solar space, which is falling this morning. A look here after a presidential win for President Trump. What does it mean for solar, renewable energy? We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network. Gamma on, traders. Subscribe to Schwab Network's YouTube channel for brand new limited series taking options trading to the next level. Gamma on, coming soon.
Welcome back to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. The Dow is up over 1,300 points. The Dow, NASDAQ, S&P, and Russell have all hit new highs today as stock surges on the heels of the presidential election. President Trump to be our next president, and stocks are higher today. Let's continue our look at developing stories this morning. We bring in Caroline Woods, senior market correspondent here on Schwab Network, taking a look at those Tesla shares. We heard Dan Ives overnight talking about $40 to $50 gains. He's in big time. Tell us more.
Yes, he called it, and we're seeing that play out. Tesla, the best performer of the Mag 7, leading the NASDAQ higher today, shares surging double digits. Dan Ives at Wedbush had said Musk's big bet on Trump is a home run for Tesla, and we're seeing that play out. As you said, he thinks Trump could add another $40 to $50 per share to Tesla stock in order for it to exceed $1 trillion in market cap. It's adding about $33 today alone. That said, Ives says that the Trump presidency overall will be a negative for the EV industry, says EV tax rebates and tax incentives will likely get pulled. So that's a headwind for all EV makers, including Tesla. But it could mean less competition from new EV companies that require those tax credits. He thinks Tesla basically has the scale to be profitable without them. Also, likely higher China tariffs could push Chinese EV companies further away from the U.S. So certainly a positive for Tesla. But if you take a look, Rivian shares down 10% today. U.S. listed Chinese EV stocks sinking as well. He says Tesla has a clear competitive advantage in a non-EV subsidy environment, and that Trump could actually also accelerate some of the FSD and autonomous initiatives for Tesla and Waymo as well. So fast track FSD, which of course would be a huge positive for Tesla. Trump, in his victory speech, called Elon Musk a super genius, and he says a star is born. He previously said he would create this government efficiency commission, which was actually first proposed by Musk, but said that Musk could potentially lead that. So don't think that this is the end of the relationship that we've seen bloom with Elon Musk really campaigning quite hard for Trump. Seems like he was Trump's biggest fan. And we're seeing that really give a boost to Tesla shares today, up about 13% right now, and now up 14% year to date. So back in positive territory and firmly over that unchanged line.
Yeah, and Musk saying we're a nation of builders. Feel free. You're going to be freer to build. And as you noted, full self-driving, autonomous vehicles, maybe some less hurdles and regulation to get that through a little bit. So we will see.
And we've seen Trump change his tone on EVs because he said they cost too much. They're all going to be made in China. Right. He had initially been negative on EVs, but he's very positive on Elon Musk. So this could change his tone overall.
No doubt. Describing the rocket being caught in the arms. That was some description and something that obviously Elon Musk, pretty great. Thank you so much, Caroline Woods. Time for our disruptors. George Sillis here, markets correspondent, taking a look at First Solar. And there is some concern about renewable energy. There is some concern in the solar stocks to the tune of over 11% to the downside for First Solar today. Tell us more.
Well, obviously there's concerns about, the federal government's application of a lot of funds for solar markets, including residential and commercial utility grade markets. But one of the things that's been going on, we've talked about it too, Nicole, over the past year or so, or actually past couple of years, is we're seeing this divergence of utility grade and solar farm stocks like First Solar from the residential market. And the residential market for solar has really been decimated because existing home sales have been relatively flat, if not down, on multi-decade lows. But First Solar is obviously getting pulled into that pack as well, being more of a utility solar farm and a solar technology company. The company actually has quite a bit of backlog going into 2030, and we've talked about this stock quite a bit. But in the past few months, it's down significantly, and it's probably based upon the expectation that there's going to be some change to the Inflation Reduction Act, which was essentially a federal policy embedded in there, multitude of subsidies for solar industry, particularly utility-grade solar companies like First Solar. So obviously the market is not happy with the outcome of the election for First Solar and the other solar stocks. Based upon the Republican sweep and some expectations that some of this money is going to get pulled back. But nonetheless, First Solar is holding up a lot better than a lot of the residential names. Companies like Sunrun and even Enphase, which is an S&P 500 component, is down, I believe, about 18% or so. So not a good day for solar. It's certainly a good day for a lot of the oil and gas drilling stocks and some of the cyclical areas and tariff-exposed companies like steel. And of course, if you look at Caterpillar in the heavy machinery space, that stock is higher by about 8% today as well.
Yeah, I saw Plug Power. So many of those names down big time today. How about an example trade?
Yeah.
Because some were saying that today's move to the upside was, exaggerated, over enthusiasm. Maybe the move to the downside may be exaggerated. I don't know. You tell me, and what would you do with an example trade here?
Yeah, it's a good question because, like I said, I brought up the other solar companies like Sunrun and SolarEdge and so forth. Many of them have gone bankrupt in the past few years. And First Solar seems to be holding up quite well, respectively, because they do have utility contracts, and utility markets will pay a premium, and there's no refinance risk or essentially consumer household risk of adopting solar or applying solar, especially when budgets are being cut back at the household level. So with that said, the price action today is bearish and the trend is still bearish. So what I'm going to do here is I'm not going to be aggressively bearish, considering the earnings estimates for next year are still higher than last for First Solar. But I do think that the stock is going to be challenged for some time, at least going into December. So what I'm going to do in this case is sell a call vertical. And this is a bearish trade. But it also gives us flexibility for the stock to continue to move higher, just in case it's an exaggerated move to the downside that we're seeing today. So I'm going to sell the December 210 call, and then I'm going to buy the 220 call above that to essentially offset the risk of the total trade. So you could sell that position, the two-legged position, for about $2.50 a share or $250 a contract. So in essence, what we need to do is have the stock stay below 210 between now and expiration in the third week of December. And so we get flexibility because essentially the stock could get back most of the gains today and we'd still be in a good position. But ideally, that's your max profit at 250. You have to consider the risk, which is 750, and that'll only occur if the stock hits 220 or higher by expiration. So it's a defined risk, but also a defined reward-based trend.
All right. George Still, it's great to see you. Thank you so much, George. Coming up next, it's time for our 360 round. We'll talk Super Micro, which once again is under pressure. It's down 24% and down about 75% over 6 months. And the concerns about the accounting issues continue. Let's have a conversation.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. We want to focus on Super Micro, of course, first quarter earnings on Tuesday. And we've seen this obviously coming under pressure, as I noted, after that Hindenburg report. I think that was in late August. It was a short report. There were concerns about accounting, and that has continued onward. Let's talk to Matthew Bryson, Senior Vice President, Equity Research at Wedbush Securities, and Ed Butowski, Managing Partner at Chapwood Investments. So, Matthew, what do you make of Supermicro? What are you watching for a name that's down about 75% now?
Nicole, I'm looking for them to resolve the issues around their financials. So I think until we get clarity on exactly what the issue is, when they can file, that it's going to be difficult for the stock to move up. We have a template of what happened before when Supermicro was delisted. They had relatively similar earnings power. The stock bottomed out at a mid to high single digit type price. And so that's potentially your downside if they can't resolve these issues.
Look, the company lowered its financial outlook. There are still a lot of investors concerned about the accounting issues. JP Morgan downgrading the stock to a neutral from neutral to underweight, and the price target on the stock from 50 down to 23. It is at $20 or so now. Ed Butowski, would you buy this stock here? Is it some great buy to you, or you wouldn't touch it?
I would buy it with your money, not with my client's money. I'll tell you, Nicole, this is
not with my money.
It is a hot potato, and you have no idea, why the auditors quit. I mean, that's a huge red flag when an auditor quits and says they're not going to do your business. That means there's something really grossly wrong with your accounting. Now, from a business standpoint, they also are not getting the NVIDIA chips like they used to. And I think a lot of companies are starting to kind of stay away from them at this point. So I think that that's going to also interfere with their ability to do business, the accounting irregularities. So I think that there's multiple levels of different disruptions that are going to happen because of the accounting irregularities.
Here's my question, Matthew. The stock is at $20.94 today. The accounting is still very much an issue. Words like fraud, misconduct, mismanagement are being tossed around in an investigation into this matter. And the question for shareholders is, do they take the loss, get out here? Could it go further to the downside? Ed Butowski made the point of Ernst & Young, the auditor that they had that stepped away, which is highly unusual. Do you recommend folks step out here and sort of take what they can get and salvage, or wait it out?
Yeah, so the reason I'm neutral on the name is simply because I think in terms of what's going on the accounting side, it's something of a black box. So you just don't know when they're going to resolve their issues. Again, having said that, we have a template, so we have some idea of what the downside is, And regardless of what's going on in business fundamentals, remember last time this happened, the business didn't fall off a cliff. It basically sat stagnant for 3 years. But again, the stock with somewhat similar earnings power traded down to the high single digits. And so I think that's your risk. And until we see them come out, well, either get delisted, so let's call that a worst case scenario, or until they come out and say, you know, our issues are resolved, we're filing our 10K, then I think you have room for further downside.
A special committee has now recommended some remedial measures for the company to strengthen the internal governance and oversight functions. That should bring at least a little bit of confidence for folks. And Ed, you made it pretty clear, you're not really interested in this name at this point because there are still so many concerns. I would like to hear about your big picture on the market, Ed, as we're hitting new highs across the board, where you think this market and economy could be headed with a Trump administration. And potentially, I saw the Wall Street Journal say something like it looks like the House and the Senate go to the Republicans. Some thoughts?
Yeah, I truly believe, you know, and I've said this before on your show, that we're going to see lower interest rates as we get towards the end of the year. And then into next year, we're going to see lower interest rates, which are going to stimulate any type of dividend paying companies. So normally you would say that growth companies would do well during that time. But I also believe dividend paying companies like utilities are going to continue to outperform. But you also have to remember that the PE ratio on the S&P, if you take out the Magnificent Seven, you're still talking about a 20% overvaluation based on expected growth. So we're going to have to get the growth part fixed pretty quickly. But I do look for very positive things happening in the stock market.
Yeah. And when we think about the servers and other competitors, Matthew, do you have names in the group that you believe in at this point that you recommend?
I mean, certainly, if you look at the server side of things, to some extent, I would expect Dell, Gigabyte in Taiwan, to maybe HPE to be beneficiaries of Supermicro stumbles, just because they are the alternatives, and I believe that some customers are at least thinking about what to do if they're large Supermicro customers.
Yeah, understand. Dell today up 1.9% and HPE up 5.3%. Matthew Bryson, Wedbush Securities, Ed Batowski, Chatwood Investments. Thank you both. I'm Nicole Petalides. The Dow right now up 1,347 points, record highs across the board. The elections have been finished. Trump to be president.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours of live programming. We kick off every day bright and early at 8 a.m. Eastern. A futures show breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day and invites top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host a watch list, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the market. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, and trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Good afternoon, traders, and welcome to Fast Money here on the Schwab Network. I'm Tom White. We've got a great show for you today on this rally session. Risk on day. We'll have some option strategies also in Tesla, which is popping on the back of the Trump win, and ARM Holdings, which has rallied over 85% into their quarterly report after the close. And like Folio is going to break down sentiment data on Alphabet. The Google parent stock is rallying on speculation, maybe that a potential breakup of the company may be pushed aside. Now let's take a look at the major indices, which are near session highs. The S&P 500 up over 2%. Dow Jones Industrial Average up 1,350 points, or just over 3%. NASDAQ 100 up 2.2%. And the small caps leading to the upside. Is this the breakout to all-time highs coming for the Russell 2000 and small caps? We'll wait and see. It's up nearly 5% on the session. To help me break down the market action, let's bring in my co-host. That's Kevin Hinks. Kevin, give me your take here on the market rally and, maybe the expectations, because the optimism continues to surge here after the Trump win, Republicans taking the Senate and potentially even the House.
Yeah, I think what's really surprised me so far, Tom, is we're a couple hours into the trading day and there's been virtually no back off in futures. And a lot of the names that are up and staying up. I look, we're going to talk about Tesla. It's up $35 as we get to the 11 o'clock hour in Chicago. And a lot of it, Tom, the sentiment has changed, right? Like you mentioned, Google, Alphabet. Think of the group of stocks under regulatory pressure right now. And think about that easing. Look at financials and bank consolidation that could happen with overall a more pro-business government and less regulation. I mean, when you unleash the U.S. economy, it's a pretty spectacular thing to watch happen. And if we'll see when the sentiment numbers start coming in. And like I said, I'll say again, like I said this morning with you, Tom, the polling got it wrong. The financial and betting sites got it right. And, now we see the next level and the next level, and the stories keep evolving, as you know. But all that said, Tom, we've got a 10-year yield sitting at 4.46, and we've got a Fed meeting tomorrow where they're expected to lower rates. How do you balance those two?
Yeah, that's, I think, a big concern right now because, should the Fed cut it all? I mean, still basically nearly 100% chance, according to the CME FedWatch tool, that they're going to cut rates by another 25 basis points, but the 10-year yield now up over 80 basis points from those lows that we had right before the Fed meeting in September, where they cut 50 basis points, but it's not pressuring stocks. We'll continue to watch that story, but let's expand this conversation. Bring in our next guest. That's going to be Alex Coffey, senior equity contributor here on the network. Alex, I've heard Kevin's take. Give me your take here on the overall risk on sentiment that we're seeing today.
Well, first off, I think that this was not likely outcome, but it was probable outcome. This was one of the more probable outcomes.
Why was it probable? What was it? Because a lot of the polls had it, a 50-50
but here's
race.
the thing, the ones that were more accurate in 2020 had this, basically Atlas Intel is a polling firm out of Brazil. They were the most accurate in 2020. Looks like they're going to be one of the most accurate again. They kind of had this, nailed across the board. It was always going to be close, but things were shifting. But it was more of, you compare like polls to like polls, and there was a consistent 4 or 5 point shift from those who were Biden voters to those who potentially were going to vote Trump this time, and it looked like that came to fruition, all things considered. But beyond that, I think just more looking at how the market was performing, you didn't see volatility really upticking into the event. And so when I say likely probable outcomes, these states tend to fall in the same way. The demographic differences between a Wisconsin and a Michigan and a Pennsylvania aren't that different. That's why those states have voted the same the last, I don't know how many elections. And so if you win one of them, you kind of win all of them. And so it looks like a much bigger win than maybe the actual amount of votes separates the two candidates as you add them all up. That said, with it being kind of a decisive win relative to how it was in 2020, the fact that the Senate is in control of the Republicans, and it looks like based off decision desk projections, about 80% likelihood that the House will stay with Republicans. They might gain a couple seats somewhere around maybe a 5 point or 5 seat edge. It gives that party the basically the power to do some of these things they talk about. So what are some of the broad things? Look, I'm not a policy expert, but broadly, I think the Trump policy is less foreign intervention. So geopolitics risk perhaps coming down. You see that maybe reflected in gold, but more protectionist strategy when it comes to trade, which is more tariff heavy. We saw that in 2018, 2019. That's going to spike the dollar. You're seeing that today. It also might spike prices, but it might spur growth. And that's why you see yields moving really, really rapidly. The big thing that I think Kevin hit on this, and I think it was really astute, and I agree, is with the big move in yields, I'm surprised we haven't seen a little bit of a VAR shock, that there hasn't been really any let up in the buying, which again, this makes me think that I think a lot of people with money at stake who are required to be stoic, doesn't matter what they think one way or another, in this business are turning the page, and we're somewhat prepared for this.
Yep, dollar higher, yields higher, not having a negative impact on equity markets. But Kev, I've got the heat map ready to go here, because it kind of tells you the story about what's working today and what maybe is lagging today. You're seeing tech up, you see financials up pretty solidly, communication services besides Meta platforms. Donald Trump, I'm not sure if he's a fan of Meta platforms. That's not doing well. But then you look at consumer staples lagging, healthcare is lagging a little bit. Real estate's lagging because of those interest rates are going up. Your thoughts here, Kev?
Yeah, you look at this, the visual, the visualized tab. I love to look at it. It gives you such a great picture and a breakdown by sector, and you see consumer staples a little weak, healthcare a little weak. Yeah, the Magnificent Seven all higher except Meta. It seems like Boeing having a rough day. Of course, breaking my heart. Boeing's having a rough day today, but utilities and real estate, not real shocking there. But I'm watching. It's 8 sectors of the S&P 500 higher and 3 lower. What's lower? Consumer staples, utilities, real estate, Tom, and the information technology having a big day, up 2%. Communication services up 1.5%. Those are the leaders in this market. Take Meta out of there, but the rest of those are all melting higher. So listen, I think we're in a world where you can expect maybe a little less regulation, a little less, a little more business friendly, a little more look on what the fundamental drivers of the economy are. The one thing that does surprise me, I'm surprised crude oil is not lower than it is. That's the one that doesn't line up with Trump's views on energy versus, crude oil being almost $72 and basically unchanged on the day after being down. There's always a head scratcher, Tom, and today it's crude oil.
Yep, and crude was, Kevin, we were on the Future Show earlier today. Crude was below $70 a barrel earlier. Now just below $72 a barrel. The energy sector within the S&P 500 actually up 3.2% in today's session. So a lot of those big Exxon, Chevrons, Occidental are doing well today. But you made a good point. The sectors that are getting hurt in the S&P 500 are all interest rate sensitive. That's real estate, that's utilities and consumer staples. Here, Alex.
Also risk off in a couple of those too, in the case of staples and utilities, I'd argue.
Yep, exactly. And with yields going up, maybe our utilities aren't as attractive. Same with real estate also. But that fall in gold, nearly 2.7% here today, Alex. That's been one of the standouts. It's still up nearly 30% so far this year. Gold's had a good run. Do you expect maybe some people buying the dip in there, because it doesn't seem like the gold bugs are getting pushed to the side, but just maybe this outcome has them worried a little bit?
Gold serves a role in portfolios. It's almost an insurance policy in some ways. And,
All right, we're back.
Statements, but I always kind of imagine gold as like, the break glass, if necessary.
Amazon continuation.
It's when everything else.
Tesla looking good on the follow through.
It's always been there, kind of an asset. And so it can have its own, kind of mind at times. But two things really influence it. And it's kind of the general strength of the currency it's priced in, which today the dollar has strength. That's going to work against it. And the other is the fear around kind of really existential things. And usually that's geopolitics. And so the fact that you can make the argument that in this kind of changing of the guard, there's going to be, perhaps, less foreign intervention, less geopolitics risk. I don't know if that's the case or not, but that might be the perception today. You might see some of that geopolitical risk being priced out alongside the dollar strength. So will there be a dip? I mean, there's still tailwinds to gold, I think, which is, inflation starting to tick back up. But at the same time, if you do have a tremendous amount of dollar strength, that can work it against it too.
Yep. And one of the other areas, Kevin, within the market, it's actually leading to the upside of 5% now is Russell 2000. You take a look at the small caps getting led. Remember, financials are a big component within the Russell 2000. 40% of their companies in that index don't make money, or they're not profitable at this point. But you've seen that resurgence. We're not to all-time highs. The other
all right, Tesla doing well
all-time highs today.
on the dip.
Here, Kevin, is
Tesla continuation.
Of maybe some more support here for the small caps, or is this maybe getting a little too far, too fast here?
Yeah, this conversation is a little tricky. If you look at the Russell, and
all right, let's look at Twilio.
Real estate is really quite strong. In the
Twilio pushing higher, making new highs. Twilio, looked at that yesterday.
You can make the case, Tom, that obviously the financials in the S&P are strong. You can make the case that with less regulation, that there could be a lot of consolidation in some of the regional banks, and some of those might be in play like that. So the whole pie might be getting a little more pricier. But yeah, it's hard to say. I don't consider myself an expert on the Russell 2000. I know it's a large sample size with a lot of companies that are very small and are not profitable. But these regional banks, that's a little different story. And I think consolidation might have something to do with some of the strength there. But that said, take out real estate, every sector in the Russell is pretty strong.
Yeah.
Yeah, if I could build on that too. I mean, first off, to Kevin's point, smaller than, let's say, NVIDIA, but these are still billion-dollar companies in many cases. So they're still tremendously large relative to a small business. But with the kind of understanding, even if it's a broad brush being painted, Trump, relative to the Harris campaign, was seen as a more protectionist, America first kind of a campaign and policy stance. And so companies that are more domestically focused, like the Russell 2000, are poised to perhaps benefit in that environment. That's going to be the read-through. You saw it in 2016, and you're seeing it now. Now, I don't know if it lasts all the rest of the year, if it's just a one.
All right, so on the way to school, I was talking to my son about TTM. I don't know if he's listening right now. His class started at 12:05. But we were talking about TTM and how well he's done since he understood TTM. You know, we all know that markets trend and consolidate. While they're trending, a lot of times volatility is expanding. That's reflected in TTM. When they start to contract again, looking for the next consolidation, that's when TTM starts to turn dark blue. If the continuation starts to stall, we'll go from dark blue to red, back to yellow, and then eventually get back to a move back towards cyan again. Right now, you're looking at Twilio. This is a good example of TTM. The daily looks really strong. Let's take a look at the weekly. Let's go back here. All right, so the first thing I want to do as an investor or a swing trader in particular, I want to look at the longer time frames. What's the big time frame? Okay. So we can see that on the weekly, we've been trending for about 12 weeks. We're right up against some supply overhead. Okay, if you zoom out on the Twilio weekly, you can see that once we get through 100, this has tremendous upside. Now, will it be up every single week? No, I would look at it the same way we do with the S&P. All right, S&P, last time we rallied for 6 weeks. Okay, so we rallied for 6 weeks. Okay, so we want to time this with gamma. What are institutions doing? Are they rolling the call wall up? They are. It's 6,000. Okay, we know the call wall is 6,000, so we know the current ceiling. We also know that the JP Morgan collar, the short call side of their collar, is overhead above 5,600. Above 6,000, sorry, above 6,000. So starting week 1 with a new president, a lot of expectations. Institutions will be looking at different sectors like technology to perform very well, banks, financials, industrials. We saw that all of these stocks are up this morning. What's lower is consumer staples, utilities, healthcare. Those are defensive sectors. So let's go take a look at sector. I'll come back to this. Let's go take a look at the indicator that we were telling you over the last few weeks was bullish. All right, this is bullish. See that turned up. All right, that's telling you how institutions were positioned into the election. All right, and you can see the momentum in the lower panel is starting to turn up. So this is starting to increase as we start week 1. Now, can we get 2 weeks? Can we get 3, 4, 5 weeks? Last time, again, 3 weeks ago, we terminated the current uptrend with 6 weeks up. Okay, so 6 weeks up, 2 weeks down. Now we're starting week 1. All right, so that's good. Now we want to look at something like, where was that? Oh, Twilio. We want to continue with Twilio. All right, so can we get a maximum 6 weeks up? We don't know. Can we get 1 or 2 weeks up? Probably. So this looks pretty good. You just want to buy dips. This is Twilio. All right, so this is the weekly. Now we're stepping down to the daily. Daily's starting to push higher. Okay, so Twilio looks good. Do you want to buy it up here? No, that's not a good idea. What I would do is wait for the next dip down to the 9 or 21 day. All right, let's look at a different chart style. Okay, so here's the daily on Twilio. So the fact that this hasn't pulled back below its upper Bollinger Band is telling you institutions are the ones that are buying. So they're buying, institutions are buying coming out of this big base, okay? Institutions are buying. So watching TTM, here's the weekly. Look at the TTM on the weekly. All right, it's been pretty massive for the last 6, 8 weeks. So running into the supply, we're looking for maybe a little flag or whatever on the daily for the next entry, or maybe you want to sell some covered calls up here. There's a number of ways to trade this. So once again, teaching my son how to trade using TTM. Okay, is it red? Is it yellow? Where are you buying? And why? Do you have a strategy? Okay, Twilio weekly, Twilio daily. Look at the daily TTM. Okay, that's telling you that Bollinger Bands are expanding. See how the Bollinger Bands are just like wicked strong? Okay, that's Twilio right there. See how the Bollinger Bands and TTM are matching up? So we want to buy when it's consolidating. You see how it's consolidating last week? And then boom, we had earnings and took off to the races. Let's look at Palantir, another one. Palantir is gone. Palantir is looking very strong. Look at TTM. Okay, let's go take a look at the weekly on TTM. TTM, no mystery. TTM is just a measure of volatility. You take Bollinger Bands, you take the Keltner channel, and I can show you a chart actually. A chart style that shows you TTM. It's when Bollinger Bands enter the Keltner channel and then open up again. Okay, this is not it. Let's see. Do I have it marked as TTM? Probably. TTM.
Trump to actually pull those rebates and tax incentives that are attached to EVs once he gets in office. That's a headwind for all EV makers, including Tesla, but it might mean less competition from some of the newer EV companies that really require those.
Hope everyone's having a good day. So watching TTM is what we want to do, especially if you're trading options.
Clear competitive advantage in a non-EV subsidy environment. Also, we know that Trump has talked about more and higher tariffs on China. That could further push those Chinese EV makers away from any access to the United States. So if you take a look at shares of some of the U.S. listed Chinese EV makers, those are lower today. And then also take a look at
okay, this is the
selling off
Keltner.
Down 10%, 8% respectively.
Keltner and
Van Ives points out that Trump could accelerate some of the FSD and autonomous initiatives for Tesla. So really,
no, I don't have Keltner on here, do I?
which
No.
would be a positive for Tesla. He looks at it as a tailwind for the Cybercab as well because Trump.
All right, let me just put Keltner on here.
Could kind of ease up the regulatory environment as Tesla launches that. They will need regulatory approval, so that could be bullish for Tesla as well. And then, of course, if Trump's tax plans are implemented, with them having the Republicans having the Senate.
Keltner channel is the gold color, so let's use.
Corporate tax rates could be cut.
Let's use
which would likely give
area.
Manufacturers a boost as well. And then, of course, there's SpaceX to think about in the government contracts there. So,
okay.
Musk was tweeting earlier today, America is a nation of builders. Soon you will.
No, let's not do that. Let's do Keltner channel. Solid, thick. And let's go to 6. Okay, so Keltner channel. I don't know if you can make this. You know what? Let me change the color. Let me change it to green. That way you can see it very clearly. Green. Okay, so there's the green. All right, so when the Bollinger Bands exit the Keltner channel, you can see the green. When Bollinger Bands exit, that's the TTM squeeze firing off. Okay, so you can see that was the beginning of the week. On Twilio. Okay, and also delineated with the histogram below. So we know that Bollinger Bands are expanding and looking for a fast price action. All right, so he got it immediately. He just looked at this and went, oh, okay. When it changes from red to yellow, that's when I want to be paying attention, start to buy. And that's what he did with Tesla. Okay, he did that with Tesla, okay, a couple of weeks ago. Inside the Bollinger Bands, we saw the Keltner changing from red to yellow. We started getting ready for a long, bounced off the 21-day, and now Tesla, obviously, nice follow through. I thought it was pretty funny that Tesla Elon interview with, I guess it was, what's his name, from Fox News. I don't know why my mind just went blank. But asked what do you think if Harris wins? And he said, well, I'll probably be out of business or something along those lines. Okay, so the markets, NVIDIA looking really good. So let's take a look at NVIDIA through this lens. Okay, NVIDIA, look at the TTM. Okay, so this is a weekly time frame. Weekly is very strong. So we want to buy on dips when the weekly is very strong and when the daily, you can see the daily's turned up. Okay, so the daily turned to cyan after this consolidation. Bollinger Band's tightening up again. That's what we want to see. So with NVIDIA going into earnings, we got the upper Bollinger Band. Prices moving away. And Bollinger Band's expanding. We should see a fast move. Maybe we see 150 by the time earnings get here in 2 weeks? All right, so today is the 6th. Yeah, so 2 weeks from today, not next week, but the following Wednesday, NVIDIA reports earnings. Okay, so we could see a nice move coordinated with the S&P 500 on a second or third week strong. Okay, so we want to keep an eye on the trend in the markets. This makes so much sense once you get it. Okay, we just started week 1. So you're trading NVIDIA. Okay, you're on week 1 on NVIDIA as well. You got earnings in 2 weeks, so you want to sell into that strength. Okay, so you got 1 week up. Okay, histogram is green. Bollinger Bands are opening up on the weekly. That's telling you look for a fast move. So for the next 2 weeks, NVIDIA should be good. Now, that's in a vacuum. Now, we also want to pay attention to the call walls. Okay, the call walls are 140 and 150. So the next level of resistance, if you use Money Magic's levels, which I highly recommend, you know that 150 is most likely going to see some resistance. So what do we want to do? Over the next couple of weeks, we're going to be selling into that strength in NVIDIA. Look for a little dip. If it doesn't happen, maybe we go higher before earnings. Always focused on TTM. All right, so that's enough. I don't want to beat that to death. I hope that helps. I hope that helps you as a trader. Always have a strategy. As I was telling my son, you have to understand why certain trades work and while others don't. Like, for example, we know why TLT was being bought because there were some safety concerns in the markets. Okay, we're at the 200-day, so that's major resistance support. Okay, Bollinger Band's opening up, so TLT is probably going to continue to drive lower as the 10-year moves higher. You can also trade the strength in the U.S. dollar, which is bullish at the moment. Okay, big move. You don't need to buy it right here, but I believe when Trump, his last time around, 2016, I believe we had a nice run up in the U.S. dollar. The markets did okay. 16, 17. You see how the dollar went up and he started talking about it. Was at 103.80. Pulled back during the second year of his term, or first full year of his term. Okay, S&P at the same time. S&P at the same time rose. Okay, the first 2 years of his presidency. You see that? Sorry. Okay, here's the dollar. Okay, the dollar during Trump's presidency, first time around. This is important. It's not a political statement. It's just telling you what to anticipate with tariffs and everything else. If the dollar peaks and then starts to turn down in the beginning of the year, watch for the S&P, which at the same time was trending higher for 2 years. Okay, with a little dip there, 2018. Okay, at the end of his term, we're at the highs, and that was right before the COVID hit. Looking really good. I got to tell you, pretty happy with the way markets are anticipating, pricing in the future. Tech is doing good. All right, so Apple, looking for Apple to consolidate up here, right below the 50-day. All right, what's IWM doing? IWM small caps, holding very well.
And as Alex mentioned, you only need a 13-point move to the upside here. I think the key
to IWM, I'm going to have to adjust an iron condor I have on IWM. Where are you? There you are.
This spread by selling the 300 strike call against your long 295. That's over $6 in option premium on just the 300 call with 9 days left. So taking a bullish stance while reducing maybe your risk and exposure on this bullish play might be the way to do it.
Yeah, it's a 3-to-1 winner if you're right. And Tesla does move towards 300, which, like Alex mentioned, this stock can move. It already has moved, and once it moves, it goes for a while. You know, it can run for days. So it can go
Okay,
down for days as
IWM.
well. Make sure we understand that and balance the risk. But a bullish play where if you're right, and remember the 292 is about $5 out of the money, so you need another $7 rally in this name. But if it starts moving towards $300, you've got a multiple percentage winner here, Tom.
Yep, and you have that flexibility of, because you're buying that vertical, that hey, if it rallies up to 300 over the next couple of days in the end of the week or early next week ahead of expiration, starts expanding in price, it gives you that opportunity to get out of it if the market's open ahead of time too. So a little bit of flexibility as far as trade management goes, because we know things can chop around. So you have
Chop around. Mama said
also.
chop
All right.
around.
Good discussion there on Tesla. Thanks to Alex Coffey, senior equity contributor here on the network, helping us break down markets and the EV maker. But coming up after the break, we're going to be joined by Megan Brantley from Lyfolio for discussion on sentiment data in Alphabet. Giant stock is up about 3% today on optimism of a potential breakup that may be off the table with the new administration. Stick around, Fast Markets coming right back.
Okay, I'm just looking at, I have an iron condor. If you took this trade, I'm looking to adjust this. I really don't think we're just going to keep going forever. So IWM. Okay, so I'm inside of my short strike. So what I want to do is move this up probably to 240, 245, give myself some time. 240. Let me see. What if I go out another week? Let me look here. IWM 29th.
And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Okay, so I'm trying to send this out to the end of November, and I'm going to move my strikes up 240, 250. Okay, from 230, 240, I'm going to move it up 240 to 250 for a debit. Let's see if I can get that fill. If we fade at all during the day. Okay, so we're just sitting here right now. So volatility is contracting. That's going to help me. So I'm trying to get a fill around 280. Debit. Give myself some more time. End of the month, 29th of November. 240, 250. Look at this to roll this up to 240, 250. Obviously, the lower strikes are going to expire worthless the way we're going. So that'll help as well because there's still some premium in there. Okay.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. It's going to be Megan Brantley. She's the VP of Research at Lyfolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Google Alphabet. Now, I kind of wanted to pivot to this name today just because I think it's getting a nice pop here. The previous administration kind of coming down.
Okay, NVIDIA is still moving, so let me get back to NVIDIA. This is looking really strong. Okay, the weekly time frame. Daily looks good. Okay, I guess you guys are pretty happy with NVIDIA. Other stocks, Tesla, still driving higher. Tesla.
a mixed bag whenever we look at Google, both in terms of what's driving its growth and also whenever we dive into those ad dollars, which sectors are performing well, which sectors aren't performing well. And so I think we'll start with the best news for Google, at least in our data, is we see it making continued traction when it comes to its cloud business. Whenever we look at Google versus Amazon versus Microsoft, we have the highest growth rates from Google's cloud when it comes to digital traffic and consumer interest. We have those figures up by about 13% year over year last month. So I think that this is a good sign for Google moving ahead, that it's taking a larger chunk of this overall.
NVIDIA, very strong price action. And the chips.
Now, I think whenever you look at advertising, that's where things get a little
AMD, nice bounce on AMD.
We do see a lot of strength, particularly in its YouTube banner, and we saw that whenever Google or whenever Alphabet reported earnings just last week. But we're starting to see some underperformance when it comes to search and just its traditional, Google Ads platform. And I think that a lot of this is an indicative of a slowdown in growth for us. So we're starting to see growth slow there. We're starting to see ad dollars flow into second-tier platforms, whether you look at names like a Reddit, or you look at names like Snapchat, or even if you look at streaming names and streaming platforms like a Trade Desk, like a Netflix. And so I think that this for us, particularly today, this move could be a little bit of a buy the rumor, sell the news. And there certainly is a lot of investor optimism heading in with the new administration that's set to take office. But for us, when we look at this, I would say our data tilts a bit bullish because of the cloud overperformance that we're noting. But we are a little bit cautious just because we are seeing rising competition in the search for ad dollars.
Yeah, Megan, Google Cloud growing by 35% a year. And, it's easy to take for granted Google Alphabet, right? Because their name, Google, is kind of a verb. It's got its own, we know what it means to Google something. It's so incredibly used that sometimes it almost gets taken for granted. It's the cheapest valuation of the Magnificent Seven, despite being in all the key areas. Is it in cloud? Yes, it is.
Okay, I just rolled to November 29th. I rolled to 245, 240, 250, 240. The 240 call is a 20 delta, a 40 delta. Okay, 40 delta. The 250 is a 17 delta.
Massive balance sheet with $110 billion in cash. So they've got flexibility as well, Megan.
Meta, no follow through yet. Apple looking for a bounce, so it's pretty quiet. Market's pretty quiet except for a few names. Okay, let's take a look at the markets in general. All right, index watch. We're looking at, let's look at the Russell 2000.
Which is the Google, the verb, like you talked about. While its YouTube banner is doing tremendously, while its cloud banner is doing tremendously, we see signs that especially younger consumers are going and maybe they're searching for information on social media.
Russell 2000. We got 1,400 stocks up, 270 are down.
And so I think that this is something that Google or Alphabet
A few unchanged. Small caps.
I would say that of all of the
S&P 500.
in terms of the consumers,
S&P 500. 330 stocks are advancing. 170 stocks are declining. Breadth is very bullish. We've got, who is that? All right, a lot of stocks look good. The S&P 500, the top stocks on the S&P 500, still holding on are Discover Financial, Synchrony Financial. These are credit cards for the smaller retailers. Synchrony does Home Goods and Michaels and a few other names. Capital One, they're always saying Capital One. They're constantly sending out credit offers. The banks look good. They should continue. I just don't want to chase them up here at the highs. I would like to get a little dip in the base. What I'm interested in doing is KBE or KRE. Okay. KBE rose 25% in the first. The early part of Trump's first presidency. This rose 25% back in 2017. Okay. So the bank should do well. Okay, JP Morgan. I just don't want to chase them up here. All right, JP Morgan just killing it. Last week we saw this consolidation again, TTM. All right, look at JP Morgan. Now let's look at the daily and the weekly. Okay, here is JP Morgan. Okay, look at the Bollinger Bands. Boom, exploded up. First cyan colored bar. So it's most likely going to continue to move higher, but I'd like to see a base. Let's look at the weekly. Weekly time frame. Okay, so we got 5 weeks of bullish looking momentum. Bollinger Bands are starting to open up. Okay, if you see the Bollinger Bands here, okay, that lower band's right at the 50-day. You can barely see it. It's like emerging and pushing down. That's telling you to look for momentum to continue. Just don't buy the high. You'll be fine if you don't buy the high. Just buy the dips. Okay. Weekly looks good. JP Morgan looks excellent. NVIDIA.
That are under the scrutiny of regulation that whose life might get a little bit less pressure.
I hope all this chatter on my part helps understand what strategies I like to use and why they work. Most of the time, they don't work 100% of the time. Nothing does. But if you coordinate strategies with, say, Money Magic's levels, Bollinger Bands, or the contracting, expanding, if you're buying inside of a contraction and you see the call wall starting to shift up, those arrows on Money Magic's charts showing the predominant positioning. For example, on an NVIDIA, you got an up arrow, 140, 150, and we're, 5 points below the 150 level. We got earnings in 2 weeks. So everything is lining up. You just don't want to buy the high. That's the problem most investors have. They get excited, they chase it, and they don't give themselves enough time. They buy a 20 delta call thinking it's going to just keep going instead of buying like a 50 delta call on a dip intraday. Like these dips this morning, they keep getting bought. S&P as well.
15th monthly options that expire in 9 days. You sell that same 180 strike call, 2-week wide call calendar to the upside. At or near that 180 strike is where you want the stock to go, but you can see here from the risk profile, you've got breaking.
Say ARM Holdings has earnings tonight, right? Let's take a look at that. Might want to sell an Iron Condor.
Maybe 185 on the upside, all the way down to near 176, 175 to the downside to remain potentially profitable on this trade.
Okay, so the S&P 500, 330 stocks are advancing, 170 are declining. We have bullish momentum. Breadth is improving.
If it's in that range, I can remain profitable. And as Kevin mentioned, as you get closer to expiration over the next
Tesla looking really good. Tesla
reduces the option premium in your short November 15th 180 strike call. You can buy that back, roll it to the next weekly cycle.
Okay, ARM Holdings, we're looking at a 10% move expected, 174% on the implied volatility. This is ARM Holdings.
Manage this trade as you get closer to expiration, or if it just goes up towards 180, time decay is going to work in your favor, and that can expand the price of this calendar.
Okay, I've been doing a lot of Iron Condors for earnings. I did it on Meta, Amazon, Google, Apple, IWM, which I have to adjust to an upper strike. I'm going to do 240, 250.
Let's take a quick break. When we come back, we're going to talk ARM Holdings. The chip designer it reports earnings after the close.
Okay, 129, 157.
That's up nearly 90% so
ARM.
In 2024. We're talking ARM Holdings when we come back.
129 on the downside. I could see it down at 120. 115 is also a possible area of resistance or support. Support 115. Resistance 175. Okay, just looking at ARM Holdings for potential Iron Condor. I think I've done one of these already. I know I did a put credit spread on it. I've since taken profits on those. Let's see. Spreads, condors. Let's look at ARM. Okay, this will show what I did last time. ARM Holdings. Okay, so I had an iron condor last time around. Actually, I was thinking about an iron condor. I only did the put side. Okay, so let's adjust this. We might want to do it again. Okay, so 160, 165 seems like a good level overhead. Okay, that credit the last time was about $185, so we can see if we can get something close to that. 125, no, 120, 115. I would probably lean bullish on this one. Okay, that was for this Friday. I'm out of that position. Let's see. Let me take a look at ARM. Back to this, ARM, upside, 157, 129. Okay, in the following week, 91% implied vol. So you could go out an extra week if you want, if you don't want to trade Friday's calls and puts. But that's a lot of premium. When this collapses, as long as it's between these strikes, you're going to collect that premium. Okay, so 130, let's say 130, 160, 130, 160. Okay, 130. I don't know. I would not go that close. 160 overhead probably gets tested. Beyond that, 158. By the end of the month, they're looking at 160 to 161. Okay, just looking at the expected moves towards the end of the month for ARM Holdings. This is ARM Holdings I'm looking at.
Industrial average up 1,358 points, or 3.25%. Nasdaq up 2.2%, and the small caps continuing to lead to the upside, up 5.1% as a push into small caps continue.
All right, so
Got some weakness in Meta Platforms. The other Mag 7 names all doing pretty well today. You see Eli Lilly and some of the healthcare stocks, that sector within the S&P 500 just actually went negative. But
okay, Wells Fargo still trending, Tesla still trending, Bitcoin sideways, but in the upper half of the Bollinger Bands for today.
Also under pressure. So it's not a broad-based
Apple
rally,
looking good.
but the big names like Nvidia, Tesla, Visa, MasterCard, Google, Alphabet, Apple, and the banks. Oh, you got to mention the banks in there. All pushing.
You could sell premium on the banks too if you wanted to. You could sell put credits on the banks.
George Tellis, senior markets contributor here on the network. George, talking ARM
Okay.
Holdings. The stock's had a great run. The chip designer. Expectations are pretty high for this one going into the earnings, right?
They are. In fact, I mean, obviously the stock is higher. If you look year to date, it's
Okay, they're talking ARM.
We're not starting from the super risk on, so I think there's room to run on that score.
Yeah. Good stuff, Mike. Thank you. I'll see you on closing bell, of course, a couple hours. That's Mike Santoli. Up next, we're trading some big committee movers on this record day on Wall Street. Halftime's back after this.
All right, so 165, 170 is a strike that I'd be interested in for Friday. 170% implied vol. I'd like to capture some of that. Let's see what kind of credit we can get on this one. ARM Holdings. ARM Holdings for Friday expiration. Let's do an iron condor. Sell a condor. Okay, so we're looking at 165, 170 on the call side. Sell the 165. Buy the 170. And on the put side, we're talking 120. Sell the 120. Buy the 115 Probably could get a little closer. Just gonna see what this nets. Okay, 84 cent, $84, $85 per contract. So I do about 5 of those. All right, so one more time, let's take a look at this. Okay, so 10% move. So if I went to 165, looks better. I like about 12 or 13%. Okay. What did we say? 160, 165. Okay, downside. I know stocks have been beating, so 130. And I'm going outside of that, 130, 120, 150, maybe 125. I don't want to get too close. That's for $85 credit. Okay, this one so far for the November 8th. Why did I have the 6th? November 8th. Oh, the earnings. Okay, so the earnings are the 6th. That's right. This is all right. Okay, cool. All right, so I'm looking at a iron condor on ARM Holdings. Okay, so this is a possible trade. For a little bit more premium, I could do 125. Let me see what that looks like. 125. 125 is what? 125 is a 14 delta. All right, let's scoot it up to 125. Buy the 120.
Movers today include Super Micro yet again. Been a big mover almost every day.
$1.10 credit.
52-week low today got downgraded to a sell.
125.
So your hands are kind of tied. I mean, that's the problem,
Listen,
right?
I keep guiding the viewers. It's not in the penalty box. It's suspended for a year. Think about today, okay? The price action that we have today. You have the Russell up 5%. You have the NASDAQ up 2.5%. The market cap on the stock is now $13 billion. It's down 21% on a day like today. So listen, I don't know if the stock is going to get delisted. I'm not going to go down that road. I have no clue, but take this name off of your screen. Do not try and catch the falling knife. I keep repeating myself.
The reason why I say your hands are tied is because you've already done your rebalancing. It's in the T. You can't do anything. You have to just wait.
Yeah, it's a minimum. It's listen,
I know whether it's
a minimal. Listen,
I just want people to understand why you still own it because you have no choice.
There's nothing I can do. It annoys me to see it.
All right.
On the ledger for sure.
I got you. What about First Solar? On pace for the worst day since 2020. White's talking about solar stocks earlier today.
Yeah, this one annoys me as well.
Joe Terranova was very annoyed.
109 to 306. And that got all the momentum funds, that got all the momentum rules excited about this name, and that's why we had the participation in the name. It's falling back clearly. We could get into the fundamental arguments as what's going to happen with solar under President Trump's administration. I don't think it's going to be as ominous as people are forecasting. I still think they're going to see revenue growth, but clearly the momentum is shattered here.
All right. Weiss, TransDigm, they report tomorrow before the bell. You own that stock.
I do.
What do you think?
I do. It's doing okay today. It's down from its highs. And look, TransDigm is important to understand this. It's run like a private equity firm. There's over 40 separate companies. The management lets them run each by themselves. They have tremendous pricing power because some of the companies they bought are the only supplier for those aftermarket parts. They also have defense exposure. So this is a permanent compounder. I think it'll do well under any administration. So I'm staying with it. The quarter's typically been good. Management typically does what they say they'll do or surprise to the upside, but I can't guarantee it's going to happen in any particular quarter.
Let's jump to
All
Let's jump to Arista Networks tomorrow after the bell. Record intraday high today. Jason Snipe, you own the stock, which has been a nice winner for you.
Yeah, it's been a great winner. Stock's up 78% year to date. It's the leader in cloud and AI networking. I think it will be a great quarter if you hear from all the hyperscalers and all the CapEx spend that's going on there. They also introduced a new Etherlink brand this summer that I think will also be very positive.
Fortinet. after the bell tomorrow, Joe. Just take that quick.
Cybersecurity name, they have to come with another good earnings report. The earnings report in August it just recreated the entire fundamental story surrounding the cybersecurity company and placed it in the same category as CrowdStrike and Palo Alto.
All right, we'll step for a couple and we'll.
All right. All right, I'm looking at this for a credit spread or an iron condor before the close. Okay. Hope everyone's having a good day. I certainly am as well. Okay. It is Wednesday the 6th. We got the Fed tomorrow, most likely a 25 basis point cut. If you're to believe the CME Fed Watch tool, it's showing a 98% probability of a 25 basis point cut tomorrow. Okay, S&P, back to the S&P, are grinding up above 5,900. Okay, daily. So far, so good. Okay, I'm going to take a couple minute break. I will be right back. I'll just put Schwab on here, bore you with their commercials that repeat nonstop ad nauseum.
Double your money. If the
Okay, they're talking ARM Holdings. Okay.
You could do almost the similar width, but just on the put side, Tom.
Yep, that's a good point there, Kevin. It depends on your assumption. We're just giving you the strategy and how that may work and the mechanics behind it.
A lot of people leaning to the call side on ARM. I might buy some calls too.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming to kick off every day bright and early.
Okay, so I just posted my thoughts on
Futures and technical trends. At 9 a.m. I'm in the studio
on ARM earnings.
Show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver.
Yeah, he is. He's happy. He's extremely happy.
Here on the New York Stock Exchange floor, broadcasting live each day. I host a watch list, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are
banks.
The action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, the host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the market. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
Okay, so bull put credit spreads are what I'm looking at on the banks.
deep dive into volatility, options dynamics, and trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action. Which
Okay, there goes NVIDIA. Just
prepare for tomorrow's another market moving. Spend some time with the Schwab Network.
Wow, beautiful. That's a beautiful thing. Tesla's still going. We were Tesla. My son and I were talking about Tesla. He sold into strength this morning. I said, great. Now it gives you time to reassess a new entry, but the trend is up in Tesla. Okay, so let's take a look at Tesla. As an example, what I was telling him while we were driving to school. Okay, on the right, you can see the daily. I'm going to zoom into this. Here's the daily on Tesla. Okay, so there's a number of things going on, not just the fact that he's going to be the efficiency czar over the next few years, hopefully, as long as, who doesn't piss him off. That would be good for the economy, good for taxpayers, good for people who don't like the government waste that we currently. This is not a political statement. All right, so let's stray away from politics. All I'm trying to say is that with Elon in, things are going to look good. So I'm telling my son, okay, look at the daily. What does TTM say? TTM says Bollinger Bands are opening up. You can see that top and bottom. You might say, well, yeah, why did you sell this morning? Well, look at the gap from yesterday till today. Tell me why I would not take some profits off the table and instead look for profits into strength, look for a little dip, which did come, by the way. We did get a dip on Tesla to buy. If you wanted to buy on the dip, you got that. But overall, the daily looks good. The weekly looks good. Okay, look at TTM again. Okay, Bollinger Bands are paralleling price. So I'm not looking for a fast move. I can see clearly overhead that we have some sell order blocks overhead because they're delineated light red. Okay, you see that? So these sell order blocks are right overhead on Tesla. But the trend is bullish. Okay, TTM is bullish. So the daily, weekly. So we want to make sure we're buying dips. Looks like we're going to be buying dips now on Tesla, like the one this morning. That would have been a good entry. While the S&P is also doing this. First week up, we know that we're probably going to see at least another week up before a pause. I'm thinking we're going to see 4 or 5 weeks maybe. That's what I'm planning on anyway. 4 or 5 weeks up before the next pause. And we know that NVIDIA, the 150 strike is the upper call wall. So as we ease up, we know where the call wall is. We know where Tesla's call wall is. Tesla's call wall is 255, 260. Okay, so with Tesla moving higher, 255, 260 are below us. So we're going to be very curious to see what Money Magic's update has in store for us, okay, as we trade above those call walls. So what happens above the call wall? The dealers have to buy Tesla shares to cover their short calls. So your long calls, they're short those calls. A move above the call wall tells you what to anticipate the dealers are going to do. They're going to keep buying they're going to keep buying, which is going to perpetuate the trade to the upside. Now we just have to wait for the next call wall update from Money Magic. Okay, so TTM is good. TTM is good. I'm going to just shift here because for some reason I keep closing.
When you're looking to invest, you have to consider perhaps perspectives and options and also future,
Keep closing that lower tab there. All right, Tesla.
The risk of trading the volatility of an election.
Yeah, there's a stoicism that this business requires, and it's not unique to it, but it's
there we go. Okay, so there's your TTM on the 5-minute chart for NVIDIA. Tesla, they're all doing the same thing. They're all doing the same thing. Well, Tesla's showing a little bit of a consolidation there at the high, maybe some profit taking, but the longer term trend is fine, is intact over there on the right. Okay, so the daily looks fine. We're above the call wall. Everything looks good on Tesla. Oh, look at Tesla. Look at NVIDIA.
what I think is going to happen.
One word for NVIDIA.
To be applied very similarly to making some future bets on sports also. It's, you know, it's
Yeah,
not
as a Husker fan, betting with the heart just does not work.
I was going to say, coming off that Bears loss last weekend, I could speak to that all too well. But we'll step away from some of the political conversation. We will be talking the equity names that do have a natural right now tie to a Donald Trump victory. So we'll kick things off here with upvote and downvote. We'll be targeting those upvoted names.
NVIDIA killing it.
From some of the politics with FOMO, we're talking Qualcomm, which does have earnings due.
So for those of you who asked me last week or early in the week, I can't remember which, you were asking me, am I still long Tesla? Think about the question. Think about where you asked me on Tesla. We were going into a presidential election. Markets were pulling back. Think about how it would have been so much better if you had bought a dip prior to this pullback or during this pullback, and how much better off you're buying the dip. Okay, so if you bought 2 weeks ago when Tesla was trading down here near 220, 217, and it gapped up, you were doing great on earnings. Buy the dip, sell the rip. Right now, I'm looking for Tesla to continue to move higher because Cyan, we have Cyan on TTM, and that just keeps going. Okay, NVIDIA is looking great. NVIDIA. Okay, Coin looking good too. Coinbase. Coinbase is gone. CONL looks good. That's a big move in Coinbase.
We talked about the impacts of this a little bit yesterday.
Okay, these small nuclear reactors should keep going. All right, there goes. Here's Oklo, OKLO. Okay, again, if you bought the dip, you're much better off, obviously. Okay, SMR. If you bought the dip, you're much better off. Okay, so you don't want to be buying the highs here because the next dip is going to come eventually. We're probably going to test, SMR is probably going to test 23, 24 tomorrow, the next day. Looking good. Look at Sundog. Look at what happened with gold and silver last time Trump was in office. Let's go take a look at that. All right. So let's look at gold. All right. So we know that in 17, his first full year, right? First full year, 17, S&P moved higher. Okay. Let's see what gold did because the dollar retreated. All right. So let's look at the gold. Okay. Gold rose during his first administration, his first term, his first year. Gold, silver. So I would say, yeah, why not? Why not? Let's look at the daily, silver, but I would wait for it to get back above the 50-day.
So I think that's the best way to put it. This was, Dan, I've called it a gold and Tesla's dream environment. So all things considered, you can see the side of relief today. Tesla shares were up 14.5%.
All right, so gold considered a safety trade. Gold and silver. Okay, gold is above. Gold is above.
The impact long term will be, say people like Dan Ives who are in the numbers, might have a little bit more know-how with some of that. But
excuse me. Gold looks pretty good. I like gold.
Jump in the shares today, and so with that, there's momentum and there's reaction, and again, there's emotion. So in an emotional time, the more you can.
I like gold better.
And just react to what you see.
Okay, Tesla's still going. Tesla.
You haven't seen yet successfully will give you a chance to succeed. But really nice day for Tesla shareholders today, no doubt, as it finally broke through that 270 ceiling, ironically, and it moves towards perhaps the next big line in the sand, which looks like 300, which was a high some point last year. But let's talk Coinbase. This was, my proxy last night in financial markets. Saw big moves in the yield.
All right.
Big moves in stocks.
Wow. Big day.
Bitcoin seemed so binary to these results, and Bitcoin started moving.
Who let the dogs out?
A lot earlier than some of those races started getting called. This is my point. The market's not waiting for you. You saw Bitcoin cross 75,000 and some change in the active month futures. Doesn't surprise me then Coinbase, whose whole business revolves around these products, is having a nice day too.
I know, and I know Coinbase has tried to say that they're not in step with Bitcoin and that they're generating revenue from their own components. That's sure, but this was, I mean, seen as, again, another proxy, I think, especially given the fact that Donald Trump has said he...
Yeah, Susie, I would only buy dips. You run the risk of implied volatility contracting on you. So here's NVIDIA. Okay, so if you're thinking about buying NVIDIA, don't buy calls way up here. Don't buy calls way up here. That would be, I think that would be a mistake. Usually, that turns out to be a mistake, usually. All right, so let's look at NVIDIA, Tesla.
We did see that in July at an RNC conference, RNC Trump did say that he was set to set up this Bitcoin
NVIDIA.
reserve and again replace the SEC chair.
Okay, so Bollinger Bands are opening up
into this print anyway, so I do think that when it comes to like volatility in these names, you have to consider we've been all over the place in Coinbase. So there is that. I mean, I think risk when you look at this name on a day-to-day basis, regardless of who's in the White House.
There was, although there was some softening of the language. I think
Bollinger Bands opening up. So you see that last contraction?
Community, and I'll be honest, I'm not a part of the digital asset community.
Me either.
I find it interesting. I think some of the things they talk about and the things that they look forward to and how they kind of tie things together, make sense. It resonates, but I'm not sure I'm all the way there yet in terms of a belief.
Okay, so last time NVIDIA took off was right here. All right, so you see the Bollinger Bands, how they were squeezing right there? Bollinger Bands squeezing right here. Okay, that was your place to buy. Okay, on the dip, as Bollinger Bands started to expand. You can see TTM also taking off. To buy right now would be a mistake. Okay. Watch TTM. Okay, so TTM is expanding. Okay. What you wanted to do was buy, whoops. You'll get another one of these. Okay, you wanted to get this right here. See how Bollinger Bands contracting, TTM turn back up. Okay, if you buy right here, you run the risk of your implied volatility collapsing, and those calls are going to be worse off if you unless you wait. I mean, right now it's just going to keep going probably. But that's what I would do. Okay, with that in mind, I'm going to take a 5-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 6th of November, 1:11 p.m. on the East Coast, the best coast, the coast with the most. I'll be here until 4 p.m. or later. Actually, I'll stay after because we have arm holdings tonight. I'm going to take that Iron Condor. If I can get a little bit higher, maybe $1.50 would be good. All right, I'll be right back.
In 2023, FTC did sue Amazon, and the Justice Department did sue Apple in March of this year for their alleged monopolization. A judge that in August did respond to the DOJ suing Alphabet and, of course, Google, also maintaining a monopoly over its search and general text advertising. The DOJ has also suggested a breakup of Alphabet in particular. So for this reason, there's the thinking that once we see a new, obviously now administration take over, that a lot of these regulators, a lot of these governing bodies will exit their positions and we'll see less regulation on big tech. And that would also benefit a name like Meta, no doubt about it. But there is also the thinking that then TikTok, its future is up for debate. I was actually reading, I mean, this is obviously just one source, so one perspective, but a Wired article that talked to actually a dozen employees at TikTok and its parent company, ByteDance, that said they actually believe, given Donald Trump's lack of interest really in the TikTok debate, they think the future is fine as far as their app is concerned, which is then why I'm not really sure. Maybe that's why Meta's lower, is that there's the thinking that he doesn't really regard himself with TikTok. So TikTok will stay. That's maybe not good news for Meta. That's as far as I can understand into the selling today in Meta.
Pretty big range today, so I don't want to discount this as nothing. But we're talking about a 1.5% decline on a really big company that has recently lost some of its upside momentum on that disappointing earnings. I think the idea that a TikTok might not get banned kind of can resonate with me. But I think the one thing that seems to have bipartisan support, if anything, is that big tech is just kind of in the crosshairs for so many legislatures and constituencies. So I don't know that I'm all in on in terms of deregulating big tech or not in terms of a Trump presidency. But I will be open to any and all ideas as to what the future might bring. One thing though, because I know this is not one that we're going to highlight in the next segment, just wanted to bring my armchair technicals. It does seem to be the 21-day EMA, which is what I use for a 1 month, is around 572 and some change, has been exactly where this stock has ran out of steam the last two sessions. And it looks like today it caught a bid around the 3-month EMA. So it looks like in that envelope of those two different moving averages between about 555 and a little bit over 572 seems to be a near-term technical range to maybe have on your radar.
Yeah, and I think that that's also a good call, and also illustrating some of the weakness we've seen in Meta. It's not just today, and I think today is just a volatile day. Sometimes you don't necessarily even have to read too much into a move to the downside. Our last name today, though, is Moderna, which is somewhat apart from the course, but I do think could be affected by this Trump trade we're seeing today, especially considering Moderna does fall into the camp of these healthcare stocks that does make vaccines. And as we know, RFK, who's on Trump's ticket, has been notoriously outspoken against some of these governing bodies as well as Fauci. And so for that reason, I think we're seeing companies with a natural tie to vaccines today trade to the downside. I also think it's worth noting Moderna does have earnings on the horizon here Thursday. So we'll be watching to see how this company is planning to hit its financial goals, how it can reignite the growth story. Frankly, the story of Moderna was so beneficial by the COVID vaccines that now we need to diversify the pipeline here, because I think that Street is getting tired of losing money. We're expecting another losing quarter and not a lot of growth prospects, especially under this new administration for vaccines.
Well, and let's be completely honest, too, when we're talking Moderna, we're talking about one vaccine, and that's all this company has ever been. Well, it isn't 2020 anymore. It's not 21 or 22 anymore. The kind of appetite and desire for this, the same way that there was 3 or 4 years ago, just isn't there. And so it was already declining. You can't put this just on Trump winning or RFK being, associated with the campaign. And this stock doesn't even look like it really has had much of an uptick since May. So pretty dramatic decline in this stock as it works towards multi-year lows. So something to think about, no doubt. And we're going to watch how the market kind of digests and sorts through these things as time goes on. So one of those ones that it has your attention. We got earnings this afternoon, and it's just as possible the market's front-running disappointing earnings as it is anything else.
It sure is. And obviously, I feel like tomorrow is going to be an entirely new trading session. So, I mean, we could see the nature of volatility change just based on from today to tomorrow. So I don't necessarily see this move to the downside as purely associated with the political nature of this environment. But again, we'll have to see where we open tomorrow. But we'll leave it there. We'll be diving more into our upvoted names. Today, we're talking Tesla as well as Coinbase. Stick around. Next Gen Investing will be right back.
Gamma on, traders. Subscribe to Schwab Network's YouTube channel for brand new limited series taking options trading to the next level. Gamma on, coming soon. Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
Look it up here.
Okay, you're getting your next dip in
Where are you
NVIDIA.
going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Next Gen Investing. It's now time to dive into the charts, and joining me today is our chart master, as always, Rick Ducat. So, Rick, we'll start off with Tesla. I believe this is now where we're three-peating on Tesla 3 days in a row in different segments of our show, because it is, frankly, that important, especially making a monster move, almost up 15% here in real time. So walk us through the chart, because I'm sure this is always an interesting one, because we move, and we move with velocity when it comes to Tesla.
Yeah, so we had a pretty persistent ceiling here. You can see our light green line that we had starting all the way back here, and more recently there, although we did make a close above that level, near about 265 or so. Excuse me. Since then, we backed off, found a little bit of support at our yellow 21-day EMA. Before that, we had the rather unusual situation of an island-type reversal where we have a gap down, sideways consolidation that found some support at our purple 252-day EMA. Then earnings provided us with another gap up. So that's kind of the island reversal. It's kind of an uncommon chart pattern. Heavy volume recently, once again approaching a volume spike today. So we're basically there right now. There's still several hours left in the trading day. So it seems almost certain that that will happen. Volume spikes show conviction on the part of traders. So if you have a big move on low volume, it's kind of less, it's more suspicious, I guess I would say, than a big move on heavy volume here. So that's where we're at right now, still kind of within the general boundaries of this channel that we have set up here. The surpassing easily the old high there near 273.54, near the highs of the day still.
So when we look at momentum, I have to imagine momentum is seeing at least some strength today, maybe an uptick, but obviously we could also be seeing a divergence. I'm curious how momentum is faring on a day when we're making such a monster move to the upside.
To be sure, a large move to the upside on the RSI, and it took out something, kind of important here. We had this, downward sloping, very shallow sloping red trend line here. We are breaking above the red trend line. We have stopped a little bit short of that overbought area. It wouldn't take too much for us to get to that point, though, so be on the lookout. If the bulls can kind of push this thing over the edge as we head into the close, that would be another bullish signal here. But for now, quite high levels, not quite at overbought yet, but kind of just, matching up with the recent price action here. I guess I would say that we just kind of barely squeaked above the previous highs on the RSI. I wasn't really expecting that personally. I thought it would be a bigger move beyond those previous highs, but it is above them nonetheless.
Yeah, and obviously testing now this sort of new range here for Tesla bulls. So now when we watch, obviously this is the importance of looking at standard deviations, because we're at this range that hasn't been seen in quite some time. How do you think about now going forward looking at various price?
Yeah, standard deviation channels are what I typically use when something is making significant new highs or lows. And what this is we take our linear regression line, our blue line there, our line of best fit, standard deviations to the upside, number one, number two. So we are above the 2 standard deviation in orange there. It comes in at 280.85. We did have a big dip below it, but we are holding on above it for now. The next area, if we do pass up our channel here, maybe around 295 or so, based on current price trajectory. The +3 channel comes in near 312. So that's one area to keep in mind here. Not saying it's going to get there or anything like that. Just based on the math, that's where the third standard deviation from that linear regression line comes in here. To the downside, the old highs, green line, 273.54. Then our light green line, our repeated ceiling that we had trouble breaking above for much of the year, 265.
Okay, so lots to look at here, especially given the nice upward momentum we've seen, snapping its 6-day losing streak yesterday and today, pacing for a second, obviously very nice session for Tesla shares. So with this in mind, Alex, walk us through your thinking, trading in this name for example purposes.
Yeah, so I think it's really difficult to trade names that are making massive moves like this very quickly, and it's obviously a volatile name, and it's in response to news that is somewhat adjacent to the company, but not specifically to it. And so for those who saw Fast Market, a little deja vu, it's going to be the exact same example trade that we looked at there, but it's a way to participate if you think this move is sort of that breakout tactical move, and it's going to go
Tesla still pushing higher. Tesla.
70, perhaps to a next test of around 300, where this stock peaked out last year in the early parts of the year. And so it's next week's 292.5, 300 call vertical. It's a debit spread, and it's
Tesla about to make a new high.
The risk is going to be $250, but the max reward potential is twice that at 500. So it has positive asymmetry if you do get this continued move higher. And in the event that it doesn't, it always, of course, has risk, but that risk is half the reward potential. So you need a move. We need to get to 295 at least by the end of the next week, theoretically, to break even. And of course, through 300, it can expand to as much as a $500 profit.
Tesla.
Anything below 292.5 through the end of next week, Jenny, is of course a max loser.
Good dip buy on this one. B and C pivots looking good.
To higher and still be a losing trade. And I think that's important to clarify.
I do also think that's an important distinction here, especially when looking at Tesla and obviously some of the volatility that follows with a name that is very much closely correlated to the political nature of this current market. But now to shift gears and look at Coinbase, another name that is not also far from that path I just described. But Coinbase, I think, now signing some big relief today that we are going to see, hopefully, an administration favorable to crypto. So, Rick, walk us through this chart because this one actually makes Tesla look calm.
Yeah, exactly.
Okay, Uber.
Once again,
I see Jason talking about the dip getting bought. Uber.
Points, but we haven't quite reached a critical threshold that I think quite yet here. So to explain that, you can see that since we hit these
okay, Uber,
highs,
that one dipped today.
That was kind of the high point that we saw back in.
Nice little dip, follow through. I wouldn't buy Uber here. Tesla on the move. Tesla still going.
Ending up so far today. So we've touched on this trend line here. We've topped out around 249.73 or so, so around 250. But we haven't quite made it above that area just yet. Kind of curious action with our trend line here. We had this steeper blue trend line here. We had a resounding breakdown after earnings that took us all the way to our purple 252-day EMA. And then in the following days, we retested this rather shallow sloping white trend line once again. So we managed to cross above our moving averages on the back of this move. We are once again above our blue trend line. This red line right here, 235, kind of a repeated stopping point for price. One area I had my eye on, we are clearing pretty handily. But once again, a repeated ceiling, just like Tesla right here. Repeatedly stopping at about 264. So that's really the final test, I think, for this name.
Okay, so yeah, I hope that we continue to see this momentum. As we know, I feel like we started last year, actually. It was around this time we started to see this pick up into crypto, then we saw the fall. So now I'm hoping for the momentum to continue here as we go into the new year. But what are you seeing as far as RSI in Coinbase?
One thing I forgot to mention, too, volume spikes. Once again, a volume spike today.
Okay, S&P looks like it's going to go.
If you look at momentum here, we can see that momentum, there's no real great clear trend line to draw recently. We did have kind of this downward slope right here that we have broken. The upward slope doesn't fit super cleanly here, but we do have this green line to consider at least.
Note the buy order blocks on Tesla.
We got today, the trend line would be practically vertical, so it wouldn't really make too much of a difference here.
On the dip.
We are making a high above our previous high on the RSI right here. Once again, I would have thought it would have been a little more of a breakout from beyond that previous high here, but still a significant breakout in terms of price, as well as the RSI behaving mostly how you would want it to. So it's hard to find too much wrong with this move so far.
It is hard to find a lot of wrong with this move, especially if you were one that was long time invested in this point-based name, and I think it was been hoping for this upside and finally maybe a cleared hurdle as far as the bulls are concerned. But as far as now price levels that we're watching, what are you keeping on your radar? Again, obviously the importance of standard deviations here.
Yeah, and like I said, I would be really curious to see if we can have a convincing close above this longer-term trend line, starting with those yearly highs. It looks like we're kind of poking our head above that area right now. So maybe this move could continue. I mean, it's already at a pretty breakneck pace here. So maybe not too much gas left in the tank for today, but you never know. I mean, the high points, the runaway, highs can really, get out of control sometimes, much more so than when something is making significant lows. When we're at the lows, people are like, oh, there's some value here. When it's the highs and everything keeps exploding, it's anyone's guess. So beyond that, if we were to keep moving upward, 264, repeated high point, like I mentioned earlier, right here at our pink line. Then we also have our +1 standard deviation channel, our white line there. So between like 264 to 272 could provide us with a resistance zone based on those two ideas there. To the
Arm holdings, looking for that
linear
iron condor to work.
volume profile point of control between like 222 to 226 or so. That would be a supportive area that many traders likely would have their eye. That's also kind of where the move began today. That would be like where we opened up. So that would be a low point to watch. Pretty darn far away for having just happened today.
Yeah, I think a good point there, and a really interesting chart and interesting move in this entire space. Obviously, Bitcoin futures up now 8% here in real time. So we'll leave it there. Appreciate it, Rick Ducat. But now, when we trade this name, similar to Tesla, I think it's difficult to trade names that see this much upside in one single session. So I think there's an importance of knowing your risk, because knowing that we could see a reversal of the trend just as quickly as we shot up, frankly.
Honestly, this chart doesn't look that different than Tesla's.
It doesn't.
And they're so different, of course, but so many of the same kind of forward-thinking ideas, I think, are really, expressed by both these companies. Obviously, both having great days today, and we're looking at a very comparable trade in terms of the strategy selection for this example as we did in Tesla. We're looking at an out-of-the-money call vertical. We're giving ourselves an extra week in this case, so it's the November 22 expiration. And again, I looked at kind of a technical level. That first, and prior line in the sand was around 270. So targeting that level, if it does break through that, trend line that Rick showed us testing. If that happens and you see a test of perhaps 270, 280 in the future, what I looked at here was the 270, 280 call vertical. 272 is the break even in this particular case. With the $2 debit, so you have a chance to go 4x on that risk, a chance to make $800 on the $200 in risk. But much like in the case of Tesla, you need some help by the market. The market needs to continue this momentum, and it needs an upside move over the next few weeks. Because again, 272 is the break even, and in real time, we're at 250. So that right there tells you almost need a 10% move just to break even. I know it seems like a lot. We're also talking about Bitcoin and Coinbase, volatile space.
Very volatile space, because again, I feel like depending on the regulatory environment, that has a huge influence on a lot of the overall price activity of this entire sector. So we'll leave it there for now. Good enough diving into some of these political trades. We'll be focused on now Qualcomm and its earnings.
All right, Tesla continues to ramp higher. We get 300 today. We're about to take out the high of the day.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device.
Let's look at pre-market levels too. Pre-market.
Schwab Network.
Okay, we're up against pre-market levels too. Pre-market highs.
Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals.
Let's look at Intel as well.
Schwab investing themes, 40 customizable themes, up to 25 stocks.
All right, Tesla's still pushing. Tesla, very nice trend. Intel, a little dip, coming back around now. Intel. NVIDIA consolidating at the highs.
skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge.
And shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into FOMO. Today we are talking Qualcomm. We are turning the page, looking forward at companies that still have yet to report some news, and hopefully some news to bring to the cycle here. So joining me now to discuss more is Caroline Woods, Senior Market.
What's Mobileye doing?
Caroline, walk us through the expectations.
Mobileye.
Qualcomm, a name that is rallying on the session.
Intel at the high, Tesla at the highs.
Election and presidential debacle.
Mobileye pulling back a little bit from 16.
Later tonight. That being said, if you take a look at the overall chip space, it's mostly in rally mode. Nvidia up 4.5%. Intel.
Mobileye looking for this to continue trending towards 22.50, 23, something like that. Gets into the Kirby. This one could be good.
Not really sure if it's optimism about earnings or if it's just kind of this election euphoria, if you will. But that being said, its chips are used in smartphones, laptops, watches, autos, so we'll get an overall sense of demand there. It did see a pop in its smartphone or handset sales last quarter when it reported, which kind of boosted hopes that the smartphone slump that we've been seeing for really the past few years was easing. So we'll see if that's actually the case when it actually reports. And its most advanced Snapdragon chips are used in AI smartphones, and including in some of the Samsung models and also in AI laptops. So we'll get an early sense of AI demand tonight as well. In terms of the actual numbers, Wall Street's looking for adjusted EPS of $2.56 on revenue that's expected to rise to $9.9 billion. Breaking it down by segment, the QCT segment, which is really the chip segment, is expected to report revenue of $8.42 billion, which is up about 4%. Handsets, which I mentioned, up about 12% last time they reported, expected to be up about 4% to 6.15 billion. IoT, which is some of the chips used in like the Meta Oculus wearables, up 8% to $1.47 billion. And then autos, which is a small portion of the company, is expected to be down more than 2% at around $791.5 million. And then the QTL segment, which is the licensing division, it basically collects licensing fees from companies that integrate, whether it be 5G or other cell technologies into their products. That division is expected to report a 13% rise in revenue to $1.44 billion. So taking a look right now, Qualcomm shares up about 4% right now.
Most of the New York Bang stocks are doing the same thing, so we want to keep an eye on these.
The broader market and the overall chip space by a little
Okay,
bit.
so with the markets up,
It's good to see this.
markets are up.
Heading into the report, but it just makes you wonder if it's increasing the bar a little bit heading into the numbers.
I don't know. This looks pretty good to me. New York Fang.
I don't see a miss on earnings unless you go back to 2014. So it goes to show that they do tend to meet that expectation at the very least. But that doesn't mean that they're always higher. 7 of the last 10 quarters actually saw a negative reaction. So shows that there can be a distinction between, hey, the numbers were a beat versus expectations and what the market actually does with those numbers. I know you're always plugged into the analyst, though. What's the analyst feeling around Qualcomm?
Well, overall, it's still pretty bullish. More than 60% or about 60% have a buy rating. I have seen a few price target cuts heading into the report. We saw JP Morgan, which is in the overweight camp, cut its price target from 210 to 195 recently. So Qualcomm currently trading around 173. So still some upside here, just scaling back those
expectations a bit, pointing to a lack of recovery actually in the smartphone market and only modest adoption of those AI-powered smartphones that I was talking about, NPCs. So they think that that could slow revenue growth into the next fiscal year. So they're in the next fiscal year. So, they're scaling back expectations. Bernstein also lowered its price target to $200 from $240 heading into the report, but maintains a bullish on the name. But yeah, about 60% are in the buy camp. The median price target for Qualcomm right now is $200 a share, $270 at the high end, and then $160 at the low end. So, on the whole, pretty bullish, but just the price target's coming down a bit.
Yeah, and I think that checks out. I mean, the same has been a pretty, I'd say, disappointing performer in this respective space. So I know we're up today, but gosh, when you look at the chart compared to like the strength of some of these other AI players, it just hasn't seemed quite there yet. Not lower on the year, obviously, just not the same degree of a winner. But we'll leave it there, and great preview and breakdown as always. Caroline Woods, senior markets correspondent for the network. And so now we trade this name, Alex, and I do think that obviously getting it an overall tech lift today, but it's not been, the same AI player as a lot of its peers.
Yeah, it's had a nice 12-month time frame, but not a nice 6-month time frame. It's actually down about 4% over the last 6 months. And so looking to change that medium-term trajectory with positivity if they're able to deliver that. I looked at a bullish strategy as it is FOMO after all, and a little bit of upside here today into the report. I talked about the fact that the stock hasn't missed on an adjusted EPS basis at any point, unless you go all the way back to 2014. And so if you think that they're going to have positive numbers again, and then it's going to break that 7 out of 10 negative streak here, perhaps you are optimistic. I looked at a call diagonal spread, buying the November 15th 180 call, selling this Friday's November 8th 192.5 call. The whole package for a $3 debit means you'd have $300 in risk, and it looks like a calendar spread, but it's tilted on its axis in order to reduce and remove that upside risk. So increases that margin for error, but it also increases the risk associated with the trade. A little bit bigger debit with these ones, but you don't, risk money in one direction. So still would like to see a move towards that 192.5 short strike, bullish strategy, and one that's looking for Qualcomm to pop post earnings. If that doesn't happen, risk defined, limited to 300.
Yeah, and I think the importance of being risk-defined here is also key because we again could see some pullback, obviously, for the rest of this week because there's still a full Fed meetings ahead. So lots of news still to get through. We'll leave it there for FOMO, but coming up next, time to talk an area of weakness today, and that is the solar space, which was seen as perhaps a winning trade if Harris took over in office. So we'll discuss some of the fallout with solar today, coming up next.
Okay. AMD showing some strength. Can it get back above 145? Looking pretty good on NVIDIA, AMD. Wow. Impressive.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics,
no noise from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. I'd now like to welcome in Jeff Pierce, the Senior Manager of Derivatives Trading for Charles Schwab, to talk, unfortunately, the one area of the market that is not doing so hot today, Jeff, and that is solar stocks. I know that was seen as a perhaps winner of the Harris trade. I really, frankly, have a hard time even saying that because look at the last several years. They were not beneficial or benefiting from the Biden administration. I couldn't have imagined that would be the same for, or I could imagine that would be the same for Kamala, but I do think that more of the story is ties to Europe. So walk me through your thinking here, because I have a hard time even saying that this is like the anti-Trump trade, because I don't really frankly think it is.
Yeah, I mean, that's a good point. I mean, we've seen the Inflation Reduction Act and what that was supposed to do for these companies. That doesn't necessarily materialize, at least in the fluctuations within the stock. Now, we see today that, companies are down.
AMD's on the move. AMD starting to cruise.
Solar down around 11%, Enphase down 17, while Solar Edge is down about 20. And a lot of this reaction is coming from the win from Donald Trump, as well as control the Senate and lead the House, potential lead the House, sparking concern that these green energy policies are going to get pulled back, specifically that Inflation Reduction Act. Part of the campaign from Trump's platform was doing
AMD is on the move.
reduction of these energy tax credits.
Starting to move back up.
Tax credits, including initiatives where you get a 30% credit just to install solar. That was really the hope there, was that was going to spur growth in renewables, and subsequently we were going to see revenues, jump for these companies. Now the big concern is that consumers are going to face higher prices for solar, which is bad news after we've come off inflation and a high interest rate environment, which has already put pressure on demand. And you have to remember, this industry is heavily driven by how affordable it is to the consumer, right? Somebody can want to have solar panels, but really it has to be done at the right price. And secondary to that is the question around tariffs and how importing the components that are necessary for these products, how that's going to be hurt by supply chain issues and elevated costs. Even though a lot of these companies manufacture here in the U.S., they still rely on international supplies for production. And right now, the Trump campaign's proposed universal 10% tariffs on all imports, coupled with a 60% tariff on Chinese goods, could certainly have a big impact on this particular area.
Jeff, the other thing on this space too is the cruel reality that not every place is sunny every day. So it's also kind of limited in terms of the places that can actually use this technology to really truly replace traditional forms of electricity generation or whatever kind of energy generation you're looking to replace. One thing that I found really fascinating, and I saw within your notes that you kind of highlight some of the reasons maybe why, is it seems there was a reaction initially of just sell all of these stocks, and then as the market kind of saw that,
Coinbase still going.
Kind of a winning,
Quite a day on Coinbase.
amongst its peers.
That's a bullish candle, I would believe.
A little bit of a hammer candle developing. What is different about First Solar and why it might be able to weather this a little bit better than its peers?
Yeah, that's very important to look at, right? Especially if you're an investor and you're looking across this group, maybe you want to be invested in this style of energy, but you're looking for the right name, is that not all of these companies are going to be hurt equally in this process. First Solar, for example, doesn't import from China, but they do have exposures for panel production in other countries, so there is some potential there for disruption. Also, you do have to look at what they distribute. First Solar, they mainly sell to utilities. They've weathered the storm better in past years, even as inflation and interest rate prices have put pressure on demand. They've done better than some of the other companies out there. And, the other question for investors is what's baked in now to these stocks? Can future expectations around solar contain any further fallout? Or are they even going to maybe drive prices of these stocks up a little bit? And then timeline for tariffs is very important. We don't know how that's going to be rolled out. And finally, and this may be a little pie in the sky, but are there any of these tariffs maybe going to slow the import of solar panels from other companies that compete with some of the locally produced ones? So there are a lot of moving parts. It looks very bad today. These questions aren't going to be answered immediately, but certainly the pressure is there. And I think investors are wondering when we're going to see this technology take off in the way that everyone has been predicting it would over the last few years.
Yeah, and I think that that's really the takeaway. Is there's an impatience right now. It's like we're quick to get onto the nuclear story. We're quick to go back to then more of the combustion story. Now we're quick to say that we're done with solar. I think that all of these alternative energy sources have a place in this economy and environment. I think it's just a matter of paying, obviously, the premium or dealing with supply demand. So
Google on the move. Google pushing higher.
As always, appreciate you for joining us, the Senior Manager of Derivatives Trading for Charles Schwab. Now, coming up next, time to talk some other winners on the session. That is regional banks, which might shock you. Huntington Bank shares up significantly on this session, as well as Co-America. We'll dive more into that story coming up next.
Okay, Coinbase looks really good. Coinbase having a good day, just keeps going.
Your portfolio with the Schwab Network. Schwab Network is
Big move on Coinbase today.
anywhere on any device for free. Schwab Network.
Had to be in it to win it.
Investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Welcome back to Next Round Investing. We have arrived at the last segment of the program today that is under 30, and the subject is regional banks as we assess the fallout post the U.S. presidential election here in the United States. Decisive victory, which I think all of us were happy to see, no dragged out uncertainty. But now we look at what the market's doing. The market is rewarding one sector in particular. That, of course, is regional banks. And joining us now is George Tillis, Senior Markets Correspondent for the Schwab Network, to discuss. George, I didn't even look until just a moment ago on the break just how broadly this bank rally is. I'm looking at a Russell 2000 heat map. I just zoomed in all the way to the regional bank portion of that big heat map. I don't see a single one of these names in this index that's lower.
Yeah, it's hard to find one today. I don't think there are any. I didn't look at the entire group, but obviously, if you look at the financial sector, which includes companies like Morgan Stanley, Goldman, in the wealth management, and of course trading and investment banking areas of the market, commercial banks, which include the majors like Wells and Citi and JP Morgan, all doing very well. Then you go down to the regionals, and in fact, they're performing exceptionally well. With companies like Huntington Bank shares, Key Bank to the upside, U.S. Bank Corp, all moving higher. And it's been a real boom for financials. There's other plays out there, and cyclicals like Caterpillar and the steel stocks are higher. But nonetheless, this has been a great surprise to those who hadn't owned these stocks, but also a great benefit for those who have. And it begs the question of what's really going on with
Coinbase still going.
They're gapping to the upside. Based upon the finalization of our election. It's finally over, and of course we know the outcome, but essentially you mentioned also the Russell 2000 higher by about 5% at one point today. One of the things about the Russell is it's chock full of regional banks. A great portion or a great percentage of the Russell 2000 weight is the regional banks. So that's effectively why we're seeing the Russell 2000.
Google's still pushing. Coinbase looking really good.
Indices with the Dow second, and of course S&P and the Nasdaq following suit. But the thing is the Russell's been moving higher, irrespective of higher interest rates. The 10-year yield is actually higher today. It's pulled back a little bit off the earlier levels, but nonetheless, typically the Russell 2000 doesn't do very well when rates rise. But today it's not the case because regional banks are moving quite a bit to the upside based upon the results of the election. And the whole issue, the whole thesis behind this is regulation and taxation. If you look at the banks themselves, they are really constrained not necessarily by lending money. They're restrained or constrained in capital. Constrained in capital means regulations and laws require them to hold a certain percentage of reserves, things for contingent loan losses, but also the level of risk on the balance sheet. In other words, a ratio of leverage, which is assets to equity. Typically speaking, larger banks have the capacity to offset some of those higher regulation costs because they have more scalable businesses. They don't have to loan at very much higher rates because they make lots of loans. Regional banks, on the other hand, they get a real benefit from higher rates because they don't make as many loans in volume, but they're also extremely constrained by capital requirements, which are typically higher than the larger commercial banks because the loans typically on regional banks' balance sheets are more concentrated. They're more concentrated in areas like commercial loans, perhaps mortgage loans, small business and local loans. So what I'm seeing here is that the expectations of less capital requirements through, of course, congressional and of course decree and legislation may be presumed to be alleviated, those constraints for the financial sector, benefiting, of course, the regionals. The other thing is taxation. The expectations for taxes to come down are certainly going to benefit lenders, primarily lenders that are lending to local economies like regional banks. It's very difficult for lenders.
All right, Tesla consolidating a bit at the highs.
To actually shift their revenues to overseas entities like Apple and perhaps some of the technology companies can. So the beneficiaries of tax cuts aren't necessarily the big mega caps. It's going to be localized companies that are doing business here in the United States.
Yeah, and I think, George, that is a great read, especially as we go into the Fed, I think, which is getting maybe a bit overlooked today with the election, obviously, but I think a good reset as we go into the Fed tomorrow. So great insight, great breakdown as always. George Schillis, senior markets correspondent for the network. So Alex, before we go, I just wanted to check out on the markets, which are still standing firm. We are in green territory, led by the Russell, which is up almost 6%.
We're at all-time highs. I was just looking at that regional bank index. The regional banks are almost at all-time highs. This is incredible.
This is a ridiculous day, but thankfully to the upside. We'll leave it there. Ending the show on a bright spot here. The watch list is coming up next.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming to kick off every day bright and early at 8 a.m. Eastern with our Futures Show, breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the market. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under the radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, and trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing.
All right. Coinbase still going.
Funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
All right, looking good. The New York Bang Index stocks looking really good. Okay, got ARM holdings tonight. I'm going to take an iron condor. Posted that in the spreads channel.
Welcome to the watch list. I'm Nicole Pavlidis, live on the floor of the New York Stock Exchange. It's 2 p.m. Eastern Time. Stocks are hitting record highs. This after President Trump versus Vice President Harris in our presidential election, and it has been decided. President Trump has won that election. Markets were higher yesterday. In fact, they took off overnight. And then we actually saw markets ticking up today and new highs across the board. So we'll examine all of the aspects of what Donald Trump's election victory means for markets, including some key sectors and stocks to keep an eye on. We're also welcoming in the CFO of Xometry to talk about another record-breaking quarter.
All right, let's take a look at Palantir. Palantir doing well today. Still going, Palantir. Bollinger Band's expanding, top and bottom, telling you to look for a fast move. Watch RSI, that tells you which direction. Volume looks good. Stochastics, MACD, both turned up, looking very strong. I'm interested in selling the 55 call short term against shares of Palantir.
The S&P 500 up 2.3% at 59.19, and the Nasdaq up 2.5%. The Russell, the small caps up 5.5%. So looking good across the board. All records today, folks. We didn't lose momentum from overnight into this morning. We gained more momentum. Oil and gold are lower. Gold's down about $75 today. Oil's at $71.73 the barrel. And the U.S. dollar gains 104.87. Yields are higher, by the way, bond yields. And Bitcoin hits a new all-time high, up over 8.5% at 75,980. It's also worth noting that the VIX, the fear index, is down 20% today. So let's take a look here at the big picture. Jim Warden, CIO, the Wealth Consulting Group, is with me. Thank you for being here.
Great to be here in person with you, Nicole.
So some of your thoughts on this market rally that we saw, it started yesterday. There was a lot of green, and then overnight took off and have continued to move higher throughout this day. Some of your thoughts?
So my thoughts are this, we knew that there was going to be an outcome. We didn't know what the outcome was going to be. The markets, as you know, love certainty. And so whenever we can remove some uncertainty, the markets are going to take that as a positive sign.
So the question then becomes, is this too much euphoria? The market's overreacting. I mean, financials are up almost 6% industrials, energy, those are gaining over 3%. Also, consumer staples has been a good group, and even tech. Has been talk that this would be a big boost to tech this administration. What do you do with a market like this kind of day?
Yeah, we have to take it one step at a time, Nicole. And so this is something where we have to look at like how much should it be? What is the fair value? There probably is a little bit more momentum than on an average day, and we might see the markets give back a little bit, but we are in a good season. November and December are typically very strong months for the market.
So do you think everybody was talking about maybe a pullback or some volatility, but then the markets take off towards the end of the year with, Santa Claus, and maybe some more new highs. Do you think that's a possibility or a likelihood?
I think it's a possibility.
Meta pushing, trying to get back up to the highs. ABCD pattern potential on Meta.
Indicates that we could see the market hit 7.
Coinbase still going?
Next year. And so we're sticking with that. Their investors are largely in cash, $6.5 trillion in cash, and we think that there's some opportunity there for people to put some money to work. The Fed is going to meet over the next couple of days, and we'll probably get a rate cut most likely. The question is, do we get a rate cut in December?
So it's looking, according to the Wall Street Journal, Republicans poised to keep control of the House after winning the Senate. What are your thoughts on that as you start to hear that you'll have Trump in the, at the helm, and then he'll have Congress on his side?
Yeah.
What does that mean for investors and the economy?
Yeah, that's a great question. I think that, we're going to take this one day at a time. Often as investors, we like to see gridlock. We like to see a divided, administration in terms of what they're doing in Congress. But we'll see, what we're looking at a lot is like spending. Like, what can we do to reduce spending? Now, the idea that has been floated was if Elon Musk was kind of the secretary of efficiency,
right?
That could mean a lot of good things in terms of bringing spending down, bringing the debt levels down.
Yeah, I was just looking at the graphs you provided, and
Okay, just looking at Meta, Iron Condor, still got this in play. Meta.
Started to come back, and and then we hit 1,000 milestones. It was 17,000, 18,000.
It's at the 50-day.
So on. But in 2017, the market,
Tesla pulling back from the highs. Tesla.
According to this graphic that you sent. So, and that was with it looks like the president and the House and the Senate were all Republican at that time. The policies on energy, foreign policy. Any ideas there?
I'm not a political expert. I look at the markets and the economy, but like to the degree that we can get some improvement with geopolitical situations, then that is obviously a huge positive. I do remember 2017.
Mobileye, looking for this phase 2 trend to continue. Just getting started, moving above the 50-day. To give you an example, what I look for. Let's take a look at Las Vegas Sands. Whenever you get the 50-day turning like that, here's Mobileye. Here's Mobileye. Now, we just broke above the 50-day moving average, so very similar idea. Here's Las Vegas Sands. When it broke above the 50-day, we had this nice move up. That's what I'm looking for eventually in Mobileye. The green line is the 50-day moving average. Volume looks good. Looking for this to get to 22.50 in short order.
So industrials, real estate, consumer staples. I think I may have missed one, but these have been working for you.
Yes.
And so, what is this about Flex? Is this a name that you like here, or a stock story that you're following?
Yeah, that's one of the stocks that we recently added in one of our quant models. So
interesting. Tell us about it.
So we like when we look at these companies, we're looking for companies that are showing good quality earnings.
Yeah.
Reasonable valuation, but we like to see some momentum, some trend coming in there. And so these are companies that, and we've frankly been finding more industrial type companies or technology that if they're using AI, if they're leveraging AI, or if they're participating.
Coinbase still going.
The AI story, then thematically we really like these.
And you like the PE, so the forward multiple, it looks less than 15 times. And,
yes.
So that seems to be a little attractive to you as well. How about like the Mag 7 names, some of the growth stocks? You did say you pulled back on tech a little bit or took some profits on tech.
Sure.
When do you get back in? For example, Dan Ives has been really touting Tesla today.
Yeah.
We're seeing some of these other names all jumping today.
Sure.
Well, the market, the Nasdaq, the S&P, Dow, everything is at records. Tell me anything about tech or some of the Mag 7 names.
We still like the Mag 7 names.
Yeah.
They're like some names we like a little bit better than others, but we think that story is still really, really strong. I was meeting with the portfolio manager yesterday.
Yeah.
That is a technology analyst / portfolio manager that really gets into the weed on some of these AI names. And we think that the story has got like a few more years to go.
So AI is still on its well.
Still like it.
And then what about the Fed? Tomorrow, not usually, not on Thursday, but because of the election, folks, we have the Fed meeting that began, the Federal Market Committee meeting begins today. We'll find out tomorrow. There were a lot of folks who thought we wouldn't find the end of the election to be determined until the weekend. We found out overnight. That was basically decided. So now the Fed has a little more clear head about focusing on this. What do you think the Fed should do, will do in the next two meetings?
So I think the Fed's going to cut 25 basis points now. And I think they'll probably cut 25 basis points in December. I've been saying for a little while now that the Fed might be in a position to cut and then pause. For a while, the markets have been looking at, cut. But we're seeing that, consumers are still resilient. GDP is still good. And so to the extent that we're not having some challenges on the labor market, this is their opportunity to say, let's wait and see, let's cut. And if they need to cut some more, they can do that. But they're certainly not under any pressure to cut, immediately and to do it more aggressively because they're concerned about unemployment spiking and job losses.
Right. All right. Jim Warden, CIO, thank you so much at the Wealth Consulting Group. Good to see you, Jim. Thank you.
Thanks, Nicole.
Thanks. And the Dow right now is up over 1,400 points. Coming up, Options Corner, Tom White will join us and highlight unusual options activity from the day.
Man, what a day. What a day. Just watching
Capital One, Delta Airlines, Microsoft.
existing positions.
With me right here on the watch list on Schwab Network. We'll be right back.
So SMR has earnings tomorrow after the close.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
NVIDIA looking good.
Schwab Network.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for
Netflix
updates for
popping.
analysts and
Netflix.
digital options trades we're seeing throughout the day. We welcome in Tom White, host of Fast Market here on Schwab Network, and we have a lot to talk about. And I want to get to your trade first.
Google looks like a
Well,
ABCD
now,
pattern.
but just a big picture thought. I mean, yesterday when I left from work, someone asked me, "Why do you think the markets were higher yesterday?" And then you saw Trump went overnight, and the markets really began to take off overnight. And now, look, we're basically, here at over, 1450. What do you surmise is happening here?
Well, I think it's, that optimism that growth is going to return. We're going to remove some of the restrictions in the overall market. Regulation's going to get, not wiped out, but it's going to get pushed back on. You're looking at names like Google Alphabet, where, the Department of Justice is trying to come down and break them up, right? Does that go away? That get pushed to the side. New administration means a lot of changes. And I think traders and investors are looking at this as a positive for risk on sentiment at this point. Even with, Nicole, I think one of the big key things is, they're betting on growth, right? But you've got interest rates rising and you've got valuations, forward-looking valuations on the S&P already elevated at this point. How long can it last? I mean, historically, the fourth quarter is a strong quarter to begin with. But I think the changes that you're seeing and maybe the ability to get, new agenda items through Congress, along with the White House, maybe the easy street is what a lot of investors are thinking about right now. And then you're seeing specific segments that are taking advantage of that, especially the banking sector.
Yeah, without a doubt, which is a great segue into Capital One, no doubt. And I think a lot of the folks here are talking about volatility. Peter Tuchman talked about that maybe there's some euphoria here, knee-jerk reactions, then you have a pullback, and then maybe a Santa Claus rally. So, but right now, the VIX folks taking a 20% breather to the downside. So you mentioned financials. Let's get to Capital One, one of the big winners here. Tell us about the bullish trade you found, Tom White, please.
Yeah, stock popping, one of the outperformers here in the financial sector, in the fintech sector, and hit all-time highs today, just below $200 a share, about 198. RSI is getting a little bit frothy here. The relative strength index about 78, 79 level. So that's considered overbought on a technical level, but I don't think that matters much to the market right now. Their last earnings report in mid-October, they beat earnings estimates on EPS. They blew that out of the water. They beat on revenue. They said credit losses came in, the provision for credit losses came in about $500 million or 2/3 of a billion less than what the street anticipated.
Boeing
So that's
and Home Depot both coming off the lows. ABCD pattern.
lower provisions,
Pretty good odds that Home Depot heads back towards the 400 level before earnings.
Favorable earnings, job market's pretty robust, the consumer's still relatively healthy. And then you look at the interest rate market at this point. We've got that steepening there between the 2-10 yield curve, and that's helping a lot of the financials today with the anticipation that they're going to do better under a new.
Okay, this is Home Depot's earnings. Growth is like the Titanic, just continues to trudge along. Revenue growth, but these are all green, looks good. They're looking for $4.54. They reported $4.67 last time around. And the stock managed to move higher from the last earnings.
188.40 over the next week and a half. Stock's already above that break even as the stocks continued to move to the upside. Call volume about 3 times normal daily average volume that was seen over the last 5 trading sessions. So yeah, this trader had a nice trade here. There was already open interest of about 6,000 on this strike. They're either adding to their position or it's another speculator out there coming in on this strike. But you're buying deep in the money calls. That's why you're paying the hefty option premium. But the stock's already moved above that break even.
Yeah, the reports say what you say about the investor optimism that folks are looking to a more favorable regulatory environment. The financials, names like Capital One, but also Discover and Synchrony taking off today. And maybe we'll see also more mergers and acquisitions that had slowed down or had been blocked or had a lot of hurdles to get through. There you have it. Okay, let's move on to Delta, a name you're watching. Not buying into the rally here. That's what that trader says. Let's hear what the idea is.
Yeah, before I get to that Delta trade, Nicole, I kind of wanted to highlight the fact that yesterday on Options Corner, we hit on Synchrony Financial. There was call buyers in there, big, massive call buyers in their stocks leading to the upside, up nearly 20%. So that trader did well on that unusual option activity yesterday that we highlighted. But moving over to Delta, the stock's up of over 50% so far this year, up another 5-6% today. As travel and experiences, that demand is still there. Now, their last earnings report.
Netflix, big move on Netflix.
All the airlines that reported, but they have the best balance sheet out of the airlines. The airlines.
Okay.
Delta's CEO
The Bitcoin is like, forget about it. Netflix.
To pick up. They repaid nearly
Netflix still going. Nice follow through on Netflix.
They did give Q4 revenue guidance that came in a little bit lighter than expectations, but that didn't stop the rally from taking place. And I mentioned RSIs. You're going to have to start focusing on those on a technical basis. Our stock's overbought. Well, this one is. If you listen to the RSI, it's about 73 level at this point. So anything above the 70 level, considered overbought on a technical basis. Can that the strong rally that we've had over the last 2.5-3 months in the airlines continue? Well, the unusual option activity that I saw, maybe betting against that a little bit, maybe hedging a long stock position, or just speculating that we're going to see gains capped out here because traders sold out in the December monthly cycle, so about a month and a half till expiration. They sold about 6,000 of the December 65 strike calls, collected an average credit of about $1.97. So that break even of just under $67 a share for this trader over the next 44 days. That's about 8% above the current share price in Delta, with call volume of about double normal daily average volume that we've seen over the last week of trading. So this might be somebody that owns the stock, wants to create some yield by selling these out of the money calls with the expectations that, hey, the all-time high of 63 probably won't get breached, so why not sell some option premium up there? Or it might be somebody that's just saying, hey, the airlines have run too far too fast, and maybe they need to consolidate or turn lower.
Yeah, look, and as you talk about consolidation, I mean, first I'll just say what an incredible run for Delta and hitting new highs, an exciting, let's say, 1 month, 23%, 3 months, almost 60%. So an incredible run there. Pertaining to just mergers and acquisitions, if you checked on Save today, which I'm sure you have, but folks, I mean, you've seen, when you look at these names, this was a name that was originally in a deal, didn't go through, and you can see this name Spirit now up almost 10% today. So some of these are really doing well. And the idea that GDP will improve because people will be feeling better and all through success of businesses and such. We will see. Yep. Microsoft, last but not least, you had one bullish play you found there.
Yeah, this has been one of the underperformers over the last several months here as far as the Max 7 goes. The stock hit an all-time high of $468 in midsummer. It's only up about 10% this year. And I think a lot of that has to do with maybe slowing growth in their cloud computing business, that Azure pipeline that they have. Now, they still grew at 33% last quarter, so it was a good quarter. But they cut guidance moving forward as far as growth numbers goes. We just had Google Alphabet report also. They had 35% growth in their cloud side of their business. Copilot getting off the ground. They said that it's doing well, but I think the monetization of that moving forward, along with their big, giant investment of nearly $13 billion in OpenAI and ChatGPT, yet to be monetized at this point. But this has been the underperformer here. You see the chart there. Will it take off? Well, I think a trader's betting that it's going to be taking off over the next couple of months here because Saw some unusual option activity in here in the February 405 strike calls. So you got about 107 days till expiration in this position, but a trader bought 40,000 of those calls. Average debit of $30.60. Now these are in the money by over $10. So that's why you're paying that hefty option premium, and you have over 3 months until expiration in this position. But this trader bought 40,000 of them, paid just over $30 for them.
All right, looking good with an hour and a half to go, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Looking very strong. The thing you got to remember, we want to ride the wave in the markets. All right, the wave being, are we on an up week? Did we just come out of a down week? Yes, we just came out of 2 weeks of consolidation. We're above the 10 EMA weekly and breaking out. Now we need to see the call wall shift up. Everything is bullish at this point.
So it's sector by sector, folks, but the big picture is the major averages are higher, and if you're broadly investing, you're probably making some money today, right? The 401k or IRAs. Tom White, thank you so very much. Good to see you. We'll all rest tonight because everybody was up all night, and then we have the Fed tomorrow. So look, we get a little quick. Everybody go to bed early tonight. Coming up, the CFO of Xometry will join us for the watch list. It reported another record quarter. We want to dive in to some of the keys to this company's success, how AI and a power shift in Washington could affect the manufacturing industry. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades.
Netflix looking good at the high of the day. Netflix.
I'm Kevin Hayes. Catch me on Fast Market. Weekdays at
Netflix is going to be $1,000 per share probably by the end of the year.
ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. A record day on Wall Street. New president-elect President Trump ready to head into White House and office in the new year. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a few market movers as well. Now, we're talking about a lot of highs, but there are names that are under pressure, such as Supermicro. Those shares have fallen to new lows, new 52-week lows. The company has acknowledged its filing delay may impact the business, lowered its guidance for the quarter. The latest revenue outlook now $1 billion below the previous estimates. The lowered expectations come after this company has had a time of it. The auditor resigned last week, citing a lack of trust in management. Supermicro shares are now down more than 80% since hitting all-time highs in March. Let's take a look at shares of CVS Health, on pace for the biggest one-day gain in more than 16 years after topping revenue expectations and announcing a management shakeup. The stock also getting a boost from Donald Trump's election victory for the quarter. Company reported a 6% revenue growth. CVS also announcing that former United Health executive Stephen Nelson will take over its insurance business. Even with today's gain, shares of CVS Health are still down about 20% of the year. All right, we're looking at shares of Xometry, rallied to an 8-month high. The company reported record revenues and gross profits in the latest quarter. So let's hear more about this. Talk with right now Chief Financial Officer of Xometry, James Milne. Thank you so much, James. Apologize for that. It's good to see you. I was reading some of these things on the bottom here about the victories and the new highs. And
Qualcomm, I don't know, Corey. Let's take a look at it. Qualcomm.
Forward, you'll have maybe different things to deal with, but congratulations to you and your team for an incredible quarter. What drove everything?
They're looking for a 7% move, 129% IB.
Quarter three was another record quarter for Xometry. Revenues of 142 million, grew 19% year over year. This is really driven by growth in our core marketplace business, which grew 24% year over year and saw record gross margins of 33.6%. We also continue on our progress towards adjusted EBITDA profitability, which we now expect to pass in Q4 coming up.
And that investors must really
Qualcomm.
They always look for profitability, right? That's what it's about.
Okay, let's see.
Do you feel like you were ahead of the game with that? And can you keep these kinds of numbers going? Because these are some good sizable numbers, with revenue increasing 19%, profit increase 21%.
159, 184. Qualcomm. Let's take a look at Qualcomm.
About profitability and what the outlook is.
Absolutely. Yeah, we've seen great consistency. Our teams have been executing really well across our major strategic initiatives. Those include continuing to expand our marketplace menu to have more offerings.
So I'd go about 10%, I guess.
We're growing internationally really well. We grew 55% year over year in the third quarter. And we continue to deepen our relationships with all of our customers, especially our enterprise customers. That's driven marketplace growth of about 20%.
So somewhere around 180, 188 maybe.
Doing the connection of these enterprise.
Let's see what a condor looks like on this one.
What kind of demand do you see for when we think about AI too? I mean, when people say is AI sort of in the seventh inning or is it very early in the stage?
Let's see. Sell. I'd probably sell the 190 on Qualcomm, 190 by the 195.
Xometry is a great case study in the application of AI through.
What's the 192.50? Let's do 2.5 wide right now. Sell the.
With more and more data and a larger and larger supply network.
Sell the 157. No, sell the 155 by the 152.50. That's 80 cents. $80 per contract.
We think there's a lot of growth ahead of us as we continue to grow and expand our marketplace network.
Yeah, and nice to see the margins growing as well.
What if we go out to the end of the month?
I think now businesses have more clarity on who's going to be in the White House, what kind of taxes they may have to pay, what kind of healthcare they may. This is what companies have to sort of put on their balance sheet. They need to know what they're up against. What kind of spending do you expect from these businesses? They got to spend to make all these deals really go and happen.
Let's see. So the 155 is a 15 delta.
And I think for the business environment,
152.50 is 12, so I'd want to go 157 probably. All right, so let me try 157.
And especially U.S. manufacturing, we like to continue
157.
reshoring and automation and innovation. We do that ourselves.
On the put side, 157, 152.50. On the call side,
NDC for the future leaders of
24.
So we're excited about the opportunity to see further investments in industry and manufacturing, which the Xometry marketplace can
187.50.
connect with more manufacturers and drive more innovation and growth.
Is the Trump administration sort of more manufacturing, build it here, do it here in the States? Could that be helpful to you?
It's great that really both parties support manufacturing here in the U.S. And so I think that any of those policies or any decisions there that can help, again, continue to invest in our manufacturing.
Let's see, the 197.50 call, 197.50, 192.50 call. 192.50 call is a 14 delta. So they don't think it's going to get to 192. So maybe the 190 makes more sense. 190.
Tell me more about your partnership with Google Cloud. Has that been growing? Is it a one-time deal?
190.
What do you expect from that? People love to hear about this.
Yeah, so we've had a partnership with Google AI with Vertex, and that's really been
okay. Qualcomm looks okay there, Corey.
Expand our what we call marketplace menu. So having more offerings, more processes that we can provide to buyers on the network. What the partnership with Google has done is it's enabled us to unlock our existing data. And in Q3, we were able to announce tube bending and tube cutting as big new opportunities to auto quote, use our AI pricing, and order directly through the Xometry marketplace.
Yeah. I think of Elon Musk on board the Trump team. He's big on saying, there's a lot of builders and exciting things that can happen here in the States. So pushing for that. We're seeing some price targets here that are running the gamut from some of the analysts. I know you can't specifically speak to the stock price, but you've had a nice run. Week to date, right now you're up, 40% almost. Today up 20%. Those are some nice moves. I mean, what are the shareholders looking for? And you're delivering, and I guess you can keep doing that with these financial results.
Yeah, we think we're still very early in the opportunity.
Okay, let me go mark that up. Qualcomm.
To bring more simplicity to these complex supply chains, particularly around custom manufacturing. And I think that, that's in the numbers. In another record quarter, as we continue to grow our active buyers, as we continue to grow our supplier network, we now have more than 4,200 manufacturers on our platform, which enables us to provide solutions, supply chain solutions to more and more buyers across more and more industries. So we're excited about the growth that we've delivered here, but we're very excited about the opportunity ahead.
Yeah, absolutely. So this is a big picture here and some great growth. Headwinds, hurdles, things that you're sort of working on, whether it's a big picture, just all businesses are facing, or is something in your business in particular?
Well, I would say that it has actually been a relatively soft macro environment for industry, for manufacturing, over the last couple of years. And we've been performing, at this level within that environment because we think we provide a really great innovative solution to our buyers and to suppliers. And so, again, we're encouraged by, as we look ahead, if there are ways to continue to inject innovation and investment into the manufacturing environment, we think that's great for our network as well as great for the overall economy.
Okay. James Milne, thank you so much. Great to see you. Always Chief Financial Officer at Xometry. Incredible move on the stock today. Thank you for being with us. Congratulations to you and your team on a successful quarter. Still ahead, we take a closer look at two sectors one guest thinks could do well under a Trump administration. And the reasons that you can consider some of the plays for ExxonMobil, Lockheed Martin, Amazon, Palantir, all of these are higher today. All right, we'll be right back. Markets at records highs.
Every morning, every trade, always live. Expert earnings analysis.
Amazon is beginning to fade. Amazon.
Changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Netflix. Nice move on Netflix. Trending.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Futures a little drift lower at the moment.
Welcome back to the watch list.
Netflix still going. Netflix looks really good.
This market rally with the Dow up over 1,400 points. You don't see the Dow up 1,400 points every day. It's quite a rare day with the election of Donald Trump as our 47th president of the United States of America. That has been decided.
All right, Netflix looking really good.
Republican on both Senate and House.
What a beauty. What a beauty. Look at those earnings. Yikes.
So what areas should we be watching? What areas could
Netflix is projected to make $23.73 per share next year. Holy shizzle. $19.80 this year, up 65% compared to 2023. I don't know. How can you not like a mover like Netflix? Daily. Daily. Look at those earnings. Holy smokes.
And, I guess the key today, what we hear about Donald Trump is less regulation. You're seeing the financials do well today. You're going to see, in my opinion, some of the oil stocks do really well today. And I continue to think technology stocks will continue. So I'm very optimistic. We're raising our forecasts a little bit here as we go into 2025. And right now, I think it's a good time right in the market. We're in a nice seasonal pattern here beginning in November through May. And I think the market's going to do pretty well as we wrap up this year.
So it's interesting because right now we've had the S&P 500 at new highs. Do you see S&P 6,000 coming soon. We're at 59.21 as we speak.
Yeah, I mean, I think the market's going to broaden out quite a bit here. I think we're going to see some of the small and mid-cap stocks start to really rally here. I think there could be some pretty big business incentives, and couple that, like I said, with less regulation. I think some of these small and mid-cap stocks, we'll see some more money flowing into them right now. Let's not also
Netflix
forget
looks like it
that
wants to
there's a lot of
break
money
out.
that's been sitting on the sidelines, waiting to see what's going to
Okay.
happen here. And, I think we're going to see that as we go through the end of the year.
And so with that, let's get to some names that you think could work in a portfolio. They could be what? Winners, great winners, ExxonMobil.
Yeah, I mean, I looked at, some of the areas, Trump has been talking about, drill, baby, drill. And, ExxonMobil could be a big beneficiary. The stock was up quite a bit in his first presidency, the first year. ExxonMobil was up over 20%. And, I think that Trump may reverse some of the renewable energy subsidies and that were imposed by the Biden administration. So I think that this could be very well for the traditional oil companies out there. And I expect that Exxon should do pretty well towards the end of this year and going into 2025.
Yeah, I mean, you heard in President Trump's speech last night, he actually was talking about oil. He was talking about RFK and how he could go ahead and do a lot of the things that he was looking to do, but stay away from oil. That's going to be liquid gold that we need here at home. So you could see that was a big interest of the president and really his future administration. How about a name like Lockheed Martin? He said that he also noted in his speech that he would like to build up the military and not have to use it. That means more of everything, right? More defense.
Right. I mean, that's, like I said, Lockheed Martin came to mind. Exxon and Lockheed Martin came to mind immediately when I heard that Trump had won. And I think that will be a great stock as well. There's quite a bit of money going to be going into the military. He showed it in his first presidency as well. And Lockheed Martin in his first year was up 30% in 2016. So I think that these are great places to go right now. And I think that a lot of these stocks, even though they have done pretty well, haven't fully participated. And I think there's going to be a lot more upside.
And I'll tell you, those names are not soaring one way or another. Many names are up 5.
Oh boy. Yeah, that looks good. Netflix looking good.
They're up, but they're up modestly. I won't put Boeing in the group because Boeing has its own stories of push and pull there. But you are seeing bigger reactions in different sectors. We were talking, for example, about cannabis a moment ago. That's down 20%. So you are seeing like the ones that are really moving in a big way. Definitely energy would go in there and financial. But good up arrows here for defense stocks. Last but not least, Amazon, a nice growth play there. Oh, you also have Palantir. Amazon and Palantir.
Yes, I mean, I've been touting Amazon all year. I continue to think it's going to do well, especially going into the holiday season. I expect Amazon to put up very good numbers. And Palantir is a stock that I've been obviously watching for a while. And I think that you really have to keep your eye on Palantir. I know they came out with great earnings recently, and they do have a high valuation. But, they work with the government and they work with the commercial customers. And I have a feeling that they're going to do very well under the Trump administration.
Yeah, I mean, Palantir did so incredibly well, took off after its quarterly report. Were you impressed at that time?
Yeah, I mean, the report looks good.
Nvidia, Microsoft, Google.
Again, AI is.
Yeah, everything looking good. All right, so looking for a follow through tomorrow. All right, AMD still driving higher, looking good. AMD, thank you very much. Okay.
Okay. Andrew Aaron's Synergy Advisory Management Group, thank you Great to see you. Thanks for having it. All right, we will bring in
Meta.
our panel to discuss the Fed, the path forward for the Fed, how Donald Trump's election may factor into that. Of course, we have the Fed meeting tomorrow. We'll find out lowering rates again, most likely, right? Another meeting in December. And there are folks who think Jay Powell stays on board and folks who think not necessarily so. We'll be right back.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Twilio.
Approach to
Twilio.
wealth management.
Okay, Doji at the highs. Twilio.
On the way you get market news. It's Market on Close.
Palantir.
Join me, Oliver Rennick, for the biggest earnings coverage.
PLTR.
insights from the smartest
Palantir.
minds on Wall Street.
Palantir looking very solid here up at the highs of the day. Palantir.
Available anytime, anywhere.
All right, Palantir having a good day.
Only on the Schwab Network.
Okay, Palantir. Nice. Okay, futures are bouncing in a positive gamma. We know that the dealers will buy dips intraday. Okay, wow, pretty solid looking.
Unlock support from the Schwab Trade Desk. Our team of passionate
6,000 call walls, not too far away.
and sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to the watch list. I'm Nicole Petalides. This trading day continues high arrows across the board. The Dow's up 50, almost 1,500 points. New highs everywhere. Some pressure, but now we made it through the election. You did it. Now we have to get through the Fed meeting tomorrow, 24 hours away from hearing. Tomorrow we'll have a special show, by the way, at 2 p.m. to hear what the Fed has decided. Will they once again cut rates? And what will happen after Trump becomes president? Let's bring in our panel to discuss all of this. So Jason England is with us, Managing Director and Portfolio Manager at Simplify. Christopher Bartow, Investment Analyst, Fort Pitt Capital Group. Thank you both. Jason, what do you make of it? I mean, there are a lot of folks who think that you get a cut tomorrow because that's certainly what Fed funds futures are showing. Maybe a pause in December. But if Jay Powell is cutting, that Trump will leave it alone.
Yeah, I think obviously it's priced in. It's, when we got the
Okay, looking for Tesla to go again. Looking pretty strong.
there was that moment of market participants thinking this meeting would be
Okay, the markets are closing strong. I like when I see all of the New York FANG index stocks doing the same thing. Apple's the only one dragging its feet. There goes AMD. AMD's on the move.
They want to get it back down to a less restrictive level, somewhere around 4.5% is what we'd be by the end of the year. And then they kind of look and see next year with the data, and obviously now with the new administration, how they're going to proceed forward and try to get it to a more neutral level. And that's the key question.
Nanonuclear SMR earnings tomorrow.
And how far more do they need to cut to get to it? So I think right now it's a kind of on autopilot from here.
Oklo, let's see, Oklo, OKLO. Oklo up, Oklo.
Christopher, what do you think?
Yeah, I mean, I don't want to thank you for having me. I don't want to sit here and kind of sound like a yes.
I love these dips to get bought. When they get bought, good sign. Look for the follow through. Nanonuclear. Okay, got a bounce above the 50-day. 50-day is up and to the right, so I'd like to see price back above the 9 and 21 day. Looks like we'll get that tomorrow. Just looking for those momentum players to stop by again. Bitcoin is just doing its own thing now. Bitcoin, big move on Bitcoin. Holy smokes.
So we think that 4.5 by the end of the year on the federal funds rate does sound relatively the most likely scenario. And then next year, it's really going to be dependent on how these policies start to pan out and the implications of them on inflation.
Yeah, understood. And, and it's not just the tool of cutting rates. There are other tools. They're running off the balance sheet.
Okay, here we go.
I think about the Fed that
Bitcoin.
Right? They run off the balance sheet. You have had the government buying treasuries at one point. There's money printing.
Okay, that looks good.
Jason, where do these things
Bitcoin.
fit in? Because some people talk about the entry supply and, do we
Got a
have
nice
sort of
handle.
money around, and that's part of the problem.
Nice handle there.
Yeah, and I think that's a big point to
And
bring up about the balance sheet.
breakout looking good.
Ellen said it back in her term when they were running off the balance sheet the first time around. They wanted it to be like watching paint dry. It's just going to be in the background. But now you have an issue here where it's coming down, and they did reduce it.
Yeah, it looks good.
As it was, but still, at what point does the money supply get drawn out of the system? And then if you have this new administration,
Look at the measured move on this thing. 15.4. Even if you take half of this, holy smokes, this is gonna.
Tariffs and tax
Yeah,
cuts, so thus,
you can see 100,000 on this one.
Treasury issuance and deficit spending. And
That's
so
what Tom Lee's target is, I believe, 100,000 in year in.
see them maybe stop the balance sheet or at least maybe reduce it again and not roll off as much. I know they want to get to a treasury only balance sheet at some point. So does that mean they quit with the runoff in the treasuries and they just let mortgages run? It's a lot of uncertainty heading into next year now that we've got the new administration. At least that uncertainty is behind us. So it is something that will play into the Fed's thinking, is not just the Fed funds.
Yeah, me too, Frano.
Lower that to a more neutral level, but also the balance sheet and how
Me too.
going forward.
And it's only Wednesday, Tony.
Again, if there is any kind of shocks down the road, how that is implemented when you have a new administration that seems to be on the surface a little bit against the Fed, or at least that's what we've seen with some of the rhetoric around President Trump.
And look, Christopher, we've had central banks doing a coordinated effort of cutting rates. I mean, we've seen that around the globe. A final quick thought, Christopher?
Yeah, no, I completely agree for the most part. And I think one of the more important things we kind of have to look at is, has policy necessarily been restrictive?
All right, Google looks good.
From a top-down approach.
AMD breaking above PMZ.
Supply and money has been hitting highs. And we also have a little bit of correlation between the equity markets hitting highs and multiples expanding on the back of this artificial intelligence theme. So looking at kind of the last 2 years, 3 years, and this rate hike cycle, has it actually kind of tightened policy? And we could point to a few different areas in terms of consumer spending, which has held up greatly, but we also have to kind of take into account that the top kind of 20% of income earners in the United States also spend they're about 40% of the consumption and spending. So you kind of have this balance between restrictive policy and rates being where they are.
Jason England at Simplify, Christopher Bartow, Fort Pitt Capital Group. Thank you both for being with me here discussing the Fed tomorrow, 2 p.m. We'll have a special edition of the watch list for you. We'll have that breaking.
All right, so Bitcoin, yeah, that's looking really good. Netflix still going.
It's available in the Apple App Store. Tune in 24/7. SchwabNetwork.com. Record day on Wall Street. I'm Nicole Petalides. Market on Close with Oliver Rennick next.
So what can you watch at the Schwab
Okay,
Network?
we got just about an hour to go, hour and 3 minutes to go. Great trading day today. Making up for a lot of turmoil lately. People that were down on NVIDIA. Only to see NVIDIA rip it. Bitcoin.
How to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action.
Oh, yeah, looks good.
Are unmistakable. It's back to Chicago now.
Mm-hmm.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn.
Hi, Jenny Horn.
We all know how many new investors are beginning their trading journey and are eager to participate in the market. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Oh boy, I don't know what else to say. This market is just crazy, crazy. I took some off, but I'm probably going to layer some shares back on since prices are not backing off. Okay, well, I can do that tomorrow. No big hurry. Stocks like Tesla, Netflix is fine. I'm probably going to add some shares to NFXL. NFXL. I'm probably going to add some shares to my son's account. If you're listening, Antoine. Let's see. Hourly chart. Okay, so this looks good. In tandem with Netflix, one of its proxies, NFXL. Okay, 2 times. That looks good. Breaking out. Netflix. Netflix on the daily looks really good. Netflix daily. What's not to like on this one, right? Netflix looks beautiful. MACD's turned up. Volume looks good. Okay, stochastics turned up. That's telling us look for closes in the upper half of the daily range. Okay, Google. I need to see 180 would be nice. 180 would be nice. I have the 180 calls on Google. And I have the what expiration?
What is going to happen tomorrow too with the Fed?
I have the November 15th, so need to see that move tomorrow. I'd like to see that move into tomorrow because they're currently off a little bit. Up on the day, but still off about $100 per contract. So this should be fine. All right. Anticipating a follow through tomorrow. Why am I anticipating a follow through tomorrow? Because of this chart right here. Okay. Now, this is not a guarantee, but we average about between 2 to 5 weeks, 2 to 5 weeks. Once we get the bounce, all right, we've had the pause. The next step is the follow through, the bounce. We have a catalyst. new president elected. Institutions will look at things differently. Let's go take a look at the S&P growth and value because we want to see both of these moving higher. Look at value. Look at growth. That looks awesome.
And specific sectors, but the big picture
Growth and value looks good.
It'll be pro-growth.
Daily.
Message very clearly being espoused by the market here with bonds down, dollar up, while risk assets are
First
also
week up.
Dollar getting in the way of the commodity trade, and a pretty clear message about the U.S. gaining a further
And growth and value moving higher.
already. But if you think about the dollar trajectory over the last 6 months, a 6-month chart, big dollar slide we had was when it looked like basically the Fed was going to have to sort of follow the course of the rest of the world in easing policy to aid their economies. Keep in mind, the rest of the world's been a step ahead. But earlier this year in the summer, when it looked like our economy was going to slow down, the Fed was ready to cut. That kind of looked like we were joining the pack a little bit, starting to blend in with the rest of the world. Now the big dollar rise and the rising yields suggest we need to tweak that assessment a bit. And then even though we're
Looking for a minimum
5 bips tomorrow from Jerome Powell, I think it's
follow through of a week or so.
now looking at a wide range of potential outcomes for the Fed longer term. We'll talk about that later on in the show, but I do think the dollar move here is really crucial. It comes back also to the conversation that I had with Brent Johnson on the dollar milkshake theory, which is basically anything that favors the U.S. economically will then have a reflexive effect in the currencies, given the rest of the world lives in dollar-denominated debt that just propels the U.S. further. So if you're going to throw tariffs on top of that as well and really flex the American might, which it seems like the market believes Mr. Trump will do, then it makes sense for the dollar then to keep moving higher. So that's a big move on the day that fits with yields. The catch for bonds is that you don't want to get too carried away with saying everything today is just about today. It's really not. The bond move goes back weeks. The dollar move goes back weeks. This is adding on to a trend of already pretty clear American exceptionalism in terms of the economic surprise rate beating the rest of the world. The fact that we did a 50 basis point cut and all our economic data started beating expectations. And
ARM
services number that we got yesterday from ISM,
190.
that should have been a major bond sell-off on its own. So there is just some continuation, maybe a little makeup too in the bond market with yield spiking to 4.4.
Good chart, man. Good chart.
Yesterday on the ISM services, that's how big the print that was. So those three things, yields going up and the VIX obviously signal relief. The dollar adds on top of that economic potential, the message there. And then
Good chart there, Lee Star. Can I steal it and put it in the spreads channel?
Maybe on what could happen regulatory-wise, tax-wise. But in the meantime, the regional banks are responding very well to higher yields, and that's making a lot of folks scratch their heads. Going, wait a second, I thought these stocks hated higher yields. Well, keep in mind the bond curve looks very different. The bond curve was flattening into the regional bank crisis as we were getting inversion because the Fed was hiking. We had the ramifications of that were screwing up banks' balance sheets. But it was also those that were generally not diversified and that had major.
That's a nice chart. I like it.
Still some of that out there for sure. But when the yield curve is in a different shape, it's a bit of a different story if there's going to be growth attached to it. So right now, financials also, I think, are taking a little bit of speculative energy from the possibility of deregulation too. So
Super micro popping.
See what follows in terms of policy. Expect pretty big moves here. Whether or not this launches all of these trades into the stratosphere, into a new trend.
Okay, super micro is popping there, Mondo. If you're listening.
Obviously, we've got some pretty big things throughout the session here that are fairly novel. Jenny Horn, you're with me. Take us through some more of those trades. Compared to this morning, Jenny, I mean, everything looks basically the same.
Okay, super micro's on the move. Let's go see what's going on there. SMCI. Okay, it's coming off the low. This is a 1 hour chart. Let's look at the 1 minute chart. Okay, 1 minute chart. Survey says nice move on the 1 minute.
We can't just celebrate the win today. I mean, we're having a pretty nice session. We're up almost, I mean, like, we were up more substantially.
There goes Netflix.
We're up, I mean, 5.7% in the Russell here. I mean, we're rallying. We can't just embrace a good day because I feel like we're so quick to find some of these holes. Like, sure, Trump may not be a friend to the EV trade. Trump might, roll back some of the I'd say, credits overall for the EV trade, but also change the energy landscape.
Yes.
Right? It seems like right now we're very quick to find solar to be the loser of like the alternative energy trade.
Sorry about that. Thank you. Thank you, Rob. All right, all the FANG stocks are doing the same thing. So when you're trading these New York FANG stocks, I find it is very beneficial if you're paying attention to the whole group, these whole 10 stocks. So you can do that with the New York FANG index. I don't like the idea of the Magnificent Seven. The connotation just stupid from my perspective. New York FANG, there's no connotation. It's just the stocks. And even though it's based on Kramer naming them the FANG stocks, right? Back in the day when it was Facebook, Amazon, I guess, Apple, NVIDIA, and Google, Netflix. So whenever this is moving, you know that most of these, the majority of these are probably moving too. So you know that buying the dip makes sense. Together with, survey says, I'm going to go back to our chart I've been beating to death. Okay, so with the New York FANG moving higher and buying the dips in these, look to the weekly chart of the S&P 500 because we're only on week one. Okay, we average anywhere from 2 to 5 weeks. Sometimes we get 6 weeks out of it. Back here in October, November, we had 9 weeks up before taking a pause. I'm thinking bullish for 2, 3, maybe 4 or 5 weeks and a pause. Doesn't mean we absolutely will get what I'm looking for, but it's pretty good probabilities. It's done it before. And most companies are beating. Anybody have Charlie Bellela's latest? I think I do in my email actually. Number of stocks that are beating presently. Let me go to my email real quick. Let's see. Survey says Charlie Bellello. He's good. Charlie Bellello's good. Very reputable. Ask anybody, any pro about Charlie Bellello. They'll say the same thing. Very good. He's like Tom Lee. Okay, so let me see here. He's not talking about real GDP. GDP looks okay. Slightly below expectations, but it looks good. All roads, tax revenue. Okay, big earnings from big tech. It was a big earnings week for big tech. Summary of reports. Google's revenues increased 15%. Google 15%. Net income increased 34% year over year. Okay. Microsoft, new record high. So Tony, SMU, I like your idea with Microsoft. I'd be looking for a dip and then a move higher. Microsoft increased 16% over the last year to a new record high of $65.6 billion. Net income grew 11% year over year, record $24.7 billion. Wow, that's a lot of money. Azure and cloud services revenue increased 33% year over year. You think that number is going to back off? I don't. Microsoft looks really good. Meta, revenue growth on Meta increased 19% year over year. Note the similarities here. Increase, revenues, record. All of these words are similar with each one of these. Operating margins increased 43% from 40% a year ago. So operating margins on Meta, I mean, what do they sell? I mean, they don't sell a product, right? I mean, they don't a physical product. I mean, they sell those the headsets. I mean, I tried it out for about a week, got tired of it. Let's see. They are making 40.6 billion. Meta. Amazon, not to be left alone. Amazon increased 11% year over year. New third quarter record, 159 billion. Net income increased, words increased, record. Wow, operating margins to a record 11%. That's pretty decent. Apple, 94.9 billion. A record higher, 94.9 billion for the quarter. Oh, gee, that's a lot. Oh man, highest growth rate since Q3 of 2022. Net income fell 36%. So that's the one with the fell 36% year over year. 14 billion due to a one-time charge. Okay, there you go. That helps with that. Overall, it's been a very strong quarter led by gains in big tech. So I would expect that we're going to see the same thing from, who do you think? NVIDIA? What do you think? I think so. Oh boy, this is a good one. And we just started week 1 and we got NVIDIA in 2 weeks. I don't know, man. This looks really good. Looks really good.
Hitting their highest level following Donald Trump's election win and just ahead of tomorrow's Fed decision. For more on where they might head from here, let's bring in Rick Reeder, BlackRock's Chief Investment Officer of Global Fixed Income.
There's going to be a lot of yeah, but, Vinny. Yeah, but this. Yeah, but that. Yeah, I understand.
Big day, big night. It was a long night.
What's most on your mind today as you see all of these different asset classes rallying so heavily?
So it's pretty incredible. I mean, first of all, the results were incredible. It obviously raged on through the evening. But the equity market. I mean, this is, if you think about the growth dynamics that are going to persist. You know, economy that's been already operating at a good level. The growth data that's going to continue to be good. You know, the propelling of the equity market's pretty incredible. And by the way, I mean, beneath the surface, the drop in volatility that you're seeing.
72% of companies have reported. S&P 500 Q3 earnings are up 14% over the past year. 7th quarter of positive year-over-year growth. Wow, that's pretty impressive.
Has been pretty extraordinary. You know, we've been talking about the show before.
Trailing 12-month S&P 500 operating earnings are on pace to hit another record high in Q3, up 8% over the last year. Yikes-a-bee. That's pretty incredible. There goes Supermicro is still squeezing. Did they stop? Nope, it's still going. They're not halting.
What has actually happened here within the last, I don't know, 12 hours?
Yeah. So, I think the last time we were on the show, I said I don't really like multiples, but it feels like we're long and we like equities, but it feels like speeding down the highway to try and get to where you're going. It doesn't feel great.
It's Supermicro is literally off my screen. Mondo, if you're listening, Supermicro is off my screen. All right, I have to adjust.
You don't really have any sellers. You don't have any IPO market and the
I have shares of SMCX, so I'm not really. I don't care. I mean, they're down a bit. They're down a bit. That's okay.
And you have to count on, to get to the forwards on these multiples, you have to count on significant earnings growth. Well, you just got a kicker of maybe nominal GDP stays considerably higher. And by the way, I agree with the commentary earlier. You got to keep nominal GDP up, and that's how you outrun the debt. But maybe we keep nominal GDP up, and then the earnings, U.S. companies are operating leverage machines on nominal GDP. And so you just got a nice tailwind from that.
Well, I mean, it's good that you agree publicly.
Rick Reeder is talking about the economy. I think that's going to be good. BlackRock's Bond King, Rick Reeder.
By the way, it's just straight math. If you say today, so the average cost of debt in the United States about just under 3.5%.
You notice that Wapner never argues with Rick Reeder.
4 to 5. You can actually, and then you think about, gosh, there are things we should do. We got to do around spending. There's other ways to actually create spend that's got some velocity to it if it's spent on infrastructure, et cetera. If you create that paradigm, it's the only way that you can actually outrun the debt problem in this country. We got to do a couple things. We got to end up reducing the debt, the spend. We got to get the interest costs down, and then ultimately, if you grow fast enough, I mean, it's just straight math that you can actually. But it's the only way. I mean, quite frankly, it's the only way to do it. That's not a pernicious impact on the economy.
All right, we're looking good. We're at 3:30.
And the economy, no tailspin. It just you don't get there.
But what do I do with the prospect of higher growth as we spin it now towards the Fed decision tomorrow and what policy is going to look like in 2020?
He looks like it. He looks like a bodybuilder.
That obviously has the possibility of leading to protracted inflation, if not a pickup. So how should I think about, the idea that, maybe they're not going to cut even nearly as much as we thought because they're not going to be able to.
So here's the question. First of all, I think inflation, the descent of inflation has already happened. Like we didn't think inflation was coming down much further or any further from here, no matter what. We think inflation is going to run in the mid twos for next year. So we think the descent of inflation has come down. So if you're the Federal Reserve today and think about, I mean, to me, it's a no-brainer in terms of, gosh, you got to get that funds rate down to 4. And if you get the funds rate, so you do a 25 in November, you probably do a 25 in December. Once you get the funds rate to 2, you got inflation at 2.5. And then there's a lot of policy evolution. There's a lot of things they're going to learn. And then you make a determination.
Super Micro is still going. Holy smokes. Somebody call Mondo if he's not listening.
Restrictive in many ways. But then it becomes, the question of do you execute the further cuts in the next year? And that becomes questionable. It's part of why I think the front end of the yield curve, which is pricing that today, it's like, wow, there's not a lot of downside in it. If you go further out the yield curve, and then you've got to count on inflation staying down, maybe the Fed cutting more, then it becomes a tougher trade. And you get why.
Super Micro ripping off the low. Thank you for letting me be myself again.
Is there something that's up a lot today that doesn't
Home Depot. What's Home Depot doing there? Home Depot. All right, higher lows on Home Depot. Looking for that to be higher tomorrow, Home Depot. Look at Super Micro. I have to keep adjusting my chart to keep it on the screen.
Particularly against Europe, I think the dollar can keep moving. You think about what the central bank has to do in Europe, or the ECB has to do in terms of you got to get rate down a bit further. You think about, we don't know what's going to happen with regard to tariff and what's going to happen to growth there. So yeah, I do think that's got some more room to run. I think that, by the way, the one that's pretty incredible today is the high yield market is up on the day. You think about what's happening in interest rates. I still believe in this thesis: income in yielding assets. That is impressive. And then Scott, listen, I think every time I go through the data on what we're going to spend on
Super Micro. Here we go again. Another 5 minutes.
Data center energy.
Let's go to the 5-minute chart. Look at that 5-minute chart.
Generation you've seen anything of that sort of business. So I'm not terribly surprised that continues to have in different forms, whether it's cloud, whether it's other parts of it. But I'm not terribly surprised about that. And financials.
Oh, sorry. Go ahead. No, please.
No, I think you've had. I was listening to your discussion on the financials. I like the financials, and I think you got a series of tailwinds in terms of what the shape of the curve is doing, what M&A we talked about much. By the way, I also think consumer financials, credit card, et cetera, is if you believe this idea we're going to have a pernicious downturn, the consumer was going to get hurt significantly. Well, those businesses, credit card businesses, et cetera, generate a lot of earnings, and that ROE I still think is priced reasonably well here.
Lastly and briefly, is there something that you didn't like yesterday that you like today, or something that you would just altogether stay away from?
So listen, I think emerging markets become interesting when they get cheap enough.
Okay, I just want to keep listening to what Rick Reader has to say. This guy is brilliant.
Not really. If you're getting plenty of yield in other parts of the market, do I need to take a lot of risk in emerging markets? So that part of the market, today I still think is there's probably another point in time for investing in it. There are parts that I think are interesting. In equities, by the way, I do think that conversation earlier, I think India is interesting from an equity point of view. But anyway, that part of the market, listen, there's so many ways if you're fixed income to create yield, and they're, quite frankly, I still think the big companies that have data and access to data in the equity market are going to continue to perform.
We'll leave it there. Appreciate you as always. Rick, thanks for being here.
Thanks, Scott.
Such a big day in these markets. That's Rick Reader. BlackRock. Up next, former Fed Vice Chair Rich Clarida is back with us. He'll give us his forecast for tomorrow's decision by the Fed, what it might mean for your money. And as we head out, I should say, we're kind of looking out too. But look at the major averages. We are back on the bell. Look at that. The Dow's up better than 1,500 points. Better than 3.5%.
All right, so I noticed that Trump's numbers went up a little bit. This is not a political statement. I told you I didn't want anybody posting political commentary, so I'm going to post it in the social channel. But looks good.
Like it should serve as support if, say, tomorrow or Friday, with 58.25 starting to creep up and come into play if we were to break and hold below 58.50. But we'd expect that to sort of act as support. Right now, the at-the-money straddle, it's basically positioning us for Friday's expiration at a range of about 58.55 to 59.85, which ironically, in our positioning on options for this Friday, we're sort of, again, seeing 58.50 is where likely you'll catch support on the downside. And then the top side, 59.75 to 5,600. It's not that it's not doable, but it's really going to take a lot. And at that point, you're talking about VIX crushing down even past 15, probably down to a 14 or 13 level, with the positioning going on there and sort of the spread out positioning we're seeing in SPX for this Friday right now.
Right, which is what we're looking at right now.
That's the book. Yeah,
that's
right.
the chart we're looking at right
and,
now.
and correct. And this is for SPX Friday. And notice there's two blue areas in the middle, 5,800 to 58.25. It really seems like that might serve as a range we like to play in and bounce around here for a bit. But as you see, if you break to the upside past 25, there's really nothing there until you get to about 58.60, right? And so the idea would be 25 breaks and holds. This very well could just rip another 25. And then at that point, maybe 6,000 does act as a magnet or continue to draw the market up towards it. You will notice, though, there's quite a bit of put positioning that exists at 6,000 that doesn't really exist anywhere else on the chart other than down below. Right. So to me, seeing a balance there, that might not fully pull us there, that we might catch some resistance at that 59.75 level if that hits. And again, remember right now that straddle for Friday is pricing in about 58.55 to 59.85. So anything outside that range is technically moving outside of the expected movement as of right now.
Right.
S&P is up 145 points.
It seems like right now, if we get stuck between 59 and 59.25, that would be a really great way to consolidate here. That's where it seems like most of the positioning is built up, the bulk of it, but not really most. It's just that's where it's the most crowded, because there's some pretty big open interest and notional value, notional gamma way out there at the 6,000 and 58.50. So we should be pretty wary of potentially big moves. That's kind of the point here, is that you've opened up this type of volatility, and it's that the box is probably not going to close back immediately unless we start to see 59 to 59.25 really start to build up. You need to have some of that exposure on the tail end start to build up in the middle, basically. Otherwise, we could be at risk of really swinging around here.
Right. If the inside's hollow relative to these outside sort of, I don't want to call them outliers, but they're extremes, right?
The inside's not hollow, but it's not quite as, deep and dense as you would like it to be.
Exactly. And so that's where, if the sort of fulfillment of people putting on and taking off positions results in this inside not creating enough sort of pinning effect, if you will, we could definitely see one of these outer ranges, down 75, up 75.
That was a quick trip down to 15.16, right?
Just because
15.50, we're right around 16. 16.60 on the VIX.
Move sideways, right, for for another
Pandora's
2
box
weeks, most likely.
has been opened.
Right, exactly.
Hey, Shane,
exactly.
love it. You got a Qualcomm look for us real quick, though. Give it to me. We only got like 60 seconds. Take me through the levels that matter for Qualcomm.
Yeah, Qualcomm main 3 levels we're focusing on right now. We got a max pain level of 170. Essentially, that's where if you were looking for a vol crush, based on the market's pricing in roughly about a $13.33 move between now and Friday, based on the at the money strap, you're getting a range of about 158 to 185. If you were to stay around 170, that's about dead center of that max pain or that expected range, right? Downside, max put OIs 140, upside max call open interest 180. We are seeing quite a bit of put call ratio open interest and volume skewing to favor the call side. Open interest is only 0.51, volumes 0.5. This is in some instances bullish. It indicates more calls trading, right, than puts. If great earnings and demand for the stock occur, 180 is likely your first stop to the upside, and if there's enough momentum, you could very well break through 180 and smash straight to 190. But expect again some tightness between about 165 to 175. If this isn't going to break out past about a 5% move, 65 to 75 is where we're looking to hold. And if you're going to get the 10% move, 190 is basically sitting right at about a 10% move above where we're currently trading.
So market maker move, the implied move lining up pretty well with the gamma exposure there. So, all right, if it's good, then you look for 190 basically. And if not, it's stuck in the range it's been in. Thanks, Shane.
Yep.
Good luck. All right, appreciate that. Interesting stuff. All right, Qualcomm earnings coming up. But first, we're going to talk some commodities. Gold, copper, crude, though, has come back. Crude's actually almost flat on the day. Pretty interesting there. Gamma on, traders. Subscribe to Schwab Network's YouTube channel for brand new limited series taking options trading to the next level. Gamma on, coming soon.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
All right, let's go through the commodity trade. Just about as interesting as anything else today. Dan Deming joins us, managing partner, KKM Financial. Many tools in his belt. Dan, we appreciate you, sir. Take me through it from the commodity angle today.
Sure.
The first thing I guess I would say stands out, crude's back. And since when does crude buy dip so easy?
Yeah, I know it's down over 3% earlier in the session, but yeah, it's back, and it's back above 70 and actually slightly higher on the day. I think the reaction was basically that, hey, we're going to kind of start to shut the borders down and and limit trade and that kind of sentiment in the market. But I think as cooler heads prevailed, the fact of the matter is that if we continue to increase the production of crude and we continue to export it to other countries, there is going to be some potential for, again, the prices to continue to move higher. Couple that with, I think, Saudi Arabia, didn't they come out? I think they expect global demand to continue to increase here as we move through the rest of this year into early next year. So those are the things I think influencing the market. It's a knee-jerk reaction this morning, Oliver, in the crude space, and now we're seeing some stability coming back and it finding its way back above the break-even point today.
All right. Crude, it's a tricky one. The energy companies had a great day, so the market thinks that they're going to make more money, which right now they already
especially integrators. Yeah.
Yeah,
exactly.
Exactly. And they already operate pretty efficiently. So if the market thinks they're going to make more money, that's a scale, that's a volume game.
Absolutely.
Which kind of surprising.
I agree, Oliver.
Crude bounces back then. Kind of seems like they've got differing messages a little bit. Unless you just, I don't know, I guess kind of assume that all this chop in crude has brought us to a true value. Maybe this is just where it belongs. $70.
Might be. Yeah, I mean, and again, this is a level that I think most market participants in this space feel pretty comfortable with. I'm sure some would like to see it a little higher, probably, but nonetheless, this has been the range. And in this range, it doesn't put too much of a tax on the consumer, yet it still has the margins in it to, be profitable for the various upstream and downstream players in the market, I think. And then, we'll continue to see. We'll see how this unfolds over the next several months as probably some things are going to get renegotiated. So that's going to have
Meta still going, Meta.
But at this $70 to $75 level, I think that's been a sweet spot, and it appears that a market wants to get back there when we get too far away from that this price range right here.
Okay. All right. I like that. I think that's pretty good for.
All right, we're coming into the close.
Stay on it. What about copper?
Coming into the close.
Trump. First, a rollback in EV incentives. That would definitely hurt some of the smaller players in EVs, but Tesla has the size and the scale to withstand that. So essentially, King of the Hill gets a little more share. NHTSA oversight.
Google going. Okay, we're getting some nice buying action here end of the day.
And that means robotaxi development should accelerate. A lot of people are saying, you know what we thought before? Maybe we move that up 6 months, a year, as they try to roll out the next robotaxi. As you take a look at shares of Tesla versus the S&P 500, we're going back to the beginning of the Biden administration. Check that out, Scott. Difference in performance, that may change under the next administration.
I noticed earlier, too, Uber was down earlier because the robotaxi idea, presumably now it's positive now, but certainly an underperformer relative, Phil, to many of the other big names. So we'll watch all that. Thank you as always. That's Phil LeBeau. Still ahead, we're going to run you through the key earnings to watch in overtime. We still have those coming down, including Lyft and Qualcomm. And tomorrow, don't miss my interview with Double Line's Jeffrey Gundlach. He is back immediately after Fed Chair Powell's news conference. It's tomorrow, 3 o'clock Eastern time. You think we have a lot to talk about? I do. We're back after this.
Okay, looking good on Qualcomm. I'll post a chart in the spreads channel. Okay, what time is it? It is, all right. Got 10 minutes to go, 10 minutes to go. It was a great day today. I was glad to share it with you guys. All right, looks good. 1549. Okay, so Qualcomm. All right, so we got Qualcomm and ARM Holdings. If you're interested in some iron condors, maybe look at the spreads channel. Okay, what is IWM doing? IWM. Okay, IWM holding up very well. Okay, IWM, I did roll up to 240 to 250. So I had a 230, 240. I had the 230, 240 call. I rolled up to 240, 250 for a debit. Okay, NVIDIA off the highs of the day, looking for a little profit taking. Got Tesla continues to push higher. Okay, this is Qualcomm, Tesla still pushing the high of the day. Okay, did we pop through this area?
We're now in the closing bell market zone. CNBC senior market.
7 minutes to go.
Here to break down the crucial moments of this trading day. Plus, the setup on some key earnings reports in overtime. Deirdre Bosa on lift. Seema Modi watching Qualcomm and ARM Holdings. Mike, I'll turn to you first. What's most impressive to you today?
Well, first of all, pretty vociferous response. I mean, just the sustained gains over the course of the day, the fact that they built. And, you know, days like this, when you do have just this powerful upside move, they're not one-offs. At minimum, you can say that, yeah, sure, at some point it's going to be a fade. At some point, they're going to be overheated. Right now, even the S&P 500, it's kind of pushing above its sort of trend path. It's running a little hot. It should cool off. That's one thing. The second piece of it is it's not indiscriminate across the board. In fact, it might be one of the weaker market breadth days for being up 2.5% of the S&P that we've ever seen. It's like not even 2 to 1 up to down, and you have 20% of the S&P's down at least 1% today. So the market is figuring out who's relatively better and worse position. Most of that's rate sensitive stuff down, retailers, utilities, housing related, things like that. So that's where we sit right now. And there's also room, all the stuff that's moving very, very aggressively today, whether it's yields, whether it's the dollar, they're still below where we hit as recently as the spring. So it's not as if we're kind of carving out new ground and it's really adding this brand new stressor to the equity market. So all along, it's been the case that if yields are going up for better growth reasons or expectations, that's fine. Obviously, inflation expectations also ticking higher in the market-based measures. You have to keep an eye on all of that. But, you know, it's just tough to fight this time of year when the market had sort of settled back a little bit over the prior few weeks, and actually a lot of stocks were
What a beautiful day.
That was good for 1,500 points. Your point on
What a beautiful day. Hope everyone had a good day today. Got 5 minutes to go until the closing bell.
as the National Retail Federation president was talking about yesterday on this network. So, in other words, without Tesla today, and Amazon today, discretionary space might be negative, if not barely positive.
Well,
it's one of the strongest areas today, lifted by those two stocks principally.
It's actually still going to be up, but yes, you're right in terms of because housing related is all in there too.
Oh, that's
the
true,
home builders are all in there. So yeah, it's definitely kind of picking its spots, and that's not necessarily a negative thing. But it's funny because people are saying, well, look at that. The betting market's figured out the result. We have a clean result right in the next day, and all that's to the good. Well, the stock market clearly had not fully repriced for the implications of a clear Trump win until today.
All right. Deirdre Bosa, talk to us about Lyft. I mentioned to Phil what Uber was doing today, maybe in relation to Tesla and the autonomous driving, but what do you see?
Well, Lyft shares, they went the opposite way. They're higher ahead of that print on a bunch of autonomous vehicle deals, following in Uber's footsteps as the robotaxi complex really hangs over ride sharing. Investors have swung between seeing robotaxis as an existential threat versus a boon that could establish ride sharing as platforms in a new age of driverless cars. That is the longer term. In the near term, though, investors, they want to see healthy bookings, continued progress on profitability, and color on the recently announced DoorDash partnership that could help it better compete with its larger rival. All that said, though, Scott, Lyft is down about 4% year to date versus Uber's up about 20% in that time.
All right, Dee. Thank you, Deirdre Bosa. Seema Modi's watching Qualcomm and ARM. Tell us more.
Two big semiconductors, Scott. Qualcomm will provide a good gauge on smartphone sales, where analysts are expecting the company to generate over $6 billion in quarterly sales, up about 12% year over year. However, the state of its relationship with Apple will be key amid growing concerns that over time, Apple could potentially pull away from Qualcomm to design its 5G chips. Ahead of this report, JP Morgan did cut its price target on the stock to $195 from $210, though maintaining an overweight rating. China will also be topical following Trump's victory, as will any color on a potential takeover of Intel, where we're seeing shares up over 4% ahead of its report. And for ARM Holdings, which is set to report earnings tonight, is the licensor of designs to semiconductors. Investors are expecting 26 cents adjusted on $808 million in revenue. It's locked in a heated dispute with Qualcomm over a licensing fee. Investors will want to know if this dispute could lead to a larger legal battle, Scott, and the potential cost. We're looking at shares up about 30% in the past 3 months.
All right, Seema, appreciate that. Thank you very much. That's Seema Modi. I mean, I wonder, with the Fed decision tomorrow and President Trump's re-election, if we need to further adjust our calculus for both growth and then rate cuts in the year ahead.
Meta going.
Rich clarity.
Yeah. I think we're definitely in the process of readjusting where we think the destination of short-term rates is. And we were doing that already. I mean, I think that's what's fascinating about this process is it's acting as more of an accelerant to some of the trends that we were already watching. Economy surprising to the upside. Pretty good productivity growth, by the way, recently, and everyone's now expecting that to continue. And, a little stickiness on the inflation.
Okay, Meta, end of day looks good. Meta pushing higher.
And now maybe that's more.
Okay, we've got Palantir looking good.
Nominal growth at really strong levels.
Palantir looks good.
The deficit as a percentage of GDP has been going down for a couple of years for that very purpose. It's not like we should just discover this possibility that we can grow faster than the deficit goes up. It's been happening since the peak deficits in the pandemic years, and now that we've had faster growth. But yes, the idea being you can kind of really make up some ground on that front. And we'll see. I mean, look, so much is yet to be known. I mean, we really talking about spending cuts from the government? Are they not going to really hinder the economy? Are we really talking about, the mass deportations, all this other stuff that is sort of maybe the more complicated implications of what happened, as opposed to the right up front, let's have the candy first, and we're going to get tax clarity, and we're going to have perhaps a little bit more of a deregulatory environment.
I mean, if nothing else, I mean, the Larry Fink op-ed may just reset the narrative in a different way about the possibilities of dealing with the.
All right, we got less than a minute to go. We're about to close here. Hope everyone had a good day. I certainly did. Sun had a good day. Most stocks higher on the day. So I have a hard stop right at 4 p.m. So I got to run. Have a great evening, everyone. Take care. We'll see you tomorrow. I'll be watching for Qualcomm and ARM Holdings. Have a good one. Take care. We'll see you tomorrow. Ciao.